Hello my dear CA final friends appearing for November 23 exam. Welcome you all for this mighty 50 discussion. So yes, I heard you. So many students have been asking me, sir, when will you upload mighty 50? So like it got delayed, but usually what I will do is that mighty 50 I will be uploading one day before the exam so that it will be like a revision. But as many students requested me to upload it well in advance so that they can take a printout of the PDF etc. and all. That's why I am just uploading it now, and you can see the PDF related to the question and answers in the description below. If you are already having a solved workbook, so latest edition, then you don't have to take a printout of it, because each and every question is from the updated edition of the solved workbook, and I gave the question number reference and page number reference also. So therefore, if you are having the existing edition of solved workbook, the latest edition of solved workbook, you do not have to take a printout of this. Otherwise, other students, so kindly take a printout of this particular PDF if you are having the older editions etc. and all, so that it will be like a handy for you for the purpose of learning this. So these 50 questions, what I did is that I selected based on overall portion, and even keeping in mind May 23, November 22 exam papers also. So therefore this particular 50 questions are like comprehensive. This will be sufficient. These are like very important. This is must. So without learning these 50 questions, we should not go for the exam. So that much important it will be. Save this video, and even one day before the exam also. So quickly you can revise few questions whichever you have. So in the comment you can give this timestamp as to which question you wanted to learn, so that you can click on the timestamp and you will be able to see that particular question and answer discussion. Okay, so without delaying further, so we are moving on to this mighty 50 discussion. You can see this. So first question, this first question is actually asked in June 2021 for 14 marks, but it's a very good question, and maybe there is a chance that similar type of question might be repeated again. And this question is in solved workbook. So page number 529, question number 6, you can see this is a 14 marks question, a comprehensive question type. Okay, so I am reading the question. MS Limited is a GST registered company. During the month of October, the company has undertaken the following transactions and wants you to work out the GST, output liability, admissible input tax credit, and the amount that will have to be paid by cash. Usually the first question, 14 marks question, will always be computation of net GST payable. In that we have gross liability and we have input tax credit details, and based on that you need to arrive at the net liability. While arriving at the gross liability, we need to keep in mind the exemptions. So what are all the various exemptions that are available? Not because like every transaction is not chargeable to GST. So there are some transactions which are taxable, some transactions which are exempted. So we need to know what are the transactions which are taxable, and those taxable transactions only. So we need to take. Again, we need to also know whether it will be coming under FCM or RCM. So therefore, whenever you get a question of this type, a 14 marks question, you ensure that you are preparing the answer in 4 statements. Statement number 1, gross GST payable under FCM, so that you put as one statement. Then, so gross GST payable under RCM, so RCM related details you put under statement 2. And number 3, statement 3 is statement showing input tax credit. So input tax credit details. Also remember, whenever a transaction is covered under RCM, you have some inward supplies on which you need to pay GST under RCM. So it should come in statement 2 as well as in statement 3. Okay. So in statement 2, because it is your RCM liability, whatever GST you pay under RCM you can avail as ITC. So you put it under statement 3. And now final statement, computation of net GST payable. Now while computing the net GST payable, remember, so first you need to take the gross liability under FCM minus input tax credit, then add RCM liability, because we cannot use input tax credit for payment of RCM liability. So first gross liability under FCM, thereafter minus input tax credit, add RCM liability, that will be the net GST that is payable. And whatever GST that we pay under RCM, the same month we can avail it as ITC. Okay, and while doing the ITC, they will give some inward supply details also. Some of them will be blocked credits and some of them could be ineligible credits. Sometimes we need to do the proportionate reversal with respect to the input tax credit, and even sometimes they will say that it is not matched. So all those points you keep in mind, and then you will get the net GST payable. And moreover, another important aspect while doing this question is that, so you need to analyze also whether the transaction is intrastate or interstate. Why? Because we need to segregate the liability. So we need to put the liability under CGST, SGST and IGST. So always we need to apply the place of supply provisions also here, and even time of supply provisions also sometimes required if they have given the dates related information. So why? Because sometimes a transaction they will be mentioning advance received with respect to the goods, and for the goods advances GST not payable in this month, so only when we raise the invoice at the time only we need to pay GST. So therefore we need to keep in mind about that point also about time of supply. So now all these aspects together, so we have to arrive at the answer. Now let's start with this. So we need to compute the net GST liability, and we need to find out how much is the GST payable in cash, means what net GST payable which is payable through cash ledger. There is no carry forward amount in respect of any of the items to be considered for the purpose of calculation other than what is mentioned specifically below. And rate of IGST to be taken as 18%, CGST 9%, SGST 9% on all goods and services except GTA service. GTA service and restaurant service, for which CGST, SGST rate would be 2.5% each and IGST will be 5%. The amounts indicated for all the items are without including the CGST and SGST or IGST element. Whether a supply attracts IGST or CGST, SGST has to be determined on the basis of details given below. So therefore, we need to determine intrastate or interstate and then segregate it. And all the amounts indicated, the amounts indicated for all the amounts are without including GST, means what? Exclusive of GST. The company has indicated to you that GST liability for October 2020 for their main product alone is 54 lakhs of CGST and SGST each and 72 lakhs of IGST. And the eligible credit on the inputs and input services for October 2020 is 1.45 crores of IGST and 20 lakhs each towards CGST and SGST, which can be straight away taken for calculations. Okay. Now, company has provided you the other details which is not part of the above. So already they gave you some liability. So regular liability, CGST, SGST, IGST, even ITC also, regular ITC without considering these adjustments. So we have some additional information here. During the month of October 2020, the company offered a special discount of 25% on a product, the sale of which it intended to discontinue from 1st December 2020 onwards, and issued credit notes to the dealers. This product was lying in stock with the dealers, and the discount offered to the customers was borne by the company by issuing the credit note. The amount reimbursed to the dealers for the discount given to the customers in the month of October 2020 was 36 lakhs in the course of interstate. So if you see here, it is a special discount. And is this discount agreed before at the time of supply? Not agreed, because the product was lying in stock with the dealers and the discount offered to the customers was borne. So which means that this discount is given after supply. It's a post supply discount and the terms are not agreed before at the time of supply. So is it allowed as a reduction? No. So because as per section 15 subsection 3 of CGST Act, discount is allowed as a reduction while computing the GST payable. However, if it is a post supply discount and the terms are not agreed before at the time of supply, it is not allowed as reduction. Even if the credit note is given, this will not lead to reduction in liability. That credit note is not a credit note in terms of section 34. That credit note could be a regular accounting credit note. So therefore, in this case, even though they are giving a credit note, etc., that this 36 lakhs is not going to reduce the liability. Okay. So therefore, what is the adjustment related to this? So I told you that we need to prepare in 4 statements. What is the first statement? We need to prepare gross GST payable under FCM. That is this first statement. Thereafter, we need to take GST payable under RCM. GST payable under RCM. That is another statement. Then third statement will be input tax credit. Okay, computation of ITC. Now in the gross liability, already we have some liability before making, like before these additional transactions, we have a GST liability of 54 lakhs CGST, SGST and 72 lakhs of IGST. So first we will be taking that. So GST liability for the main product 54 lakhs and 72 lakhs we are taking. Now adjustment related to discount not applicable because you are writing the explanation there itself. So what is that explanation you are writing? Discount is given after effecting supply and the terms are not agreed before at the time of supply. So discount is not allowed as a reduction. Okay. Then next transaction you see. So first transaction we have completed. Then second transaction. The company sold a van used for personal transport by auction. The van has been purchased at 3,20,000. The depreciated value at the time of the sale was 1,40,000. No GST credit was taken. So generally, whenever you take the ITC, it is actually capital goods. Van is a capital goods. And if ITC has been availed, we should have computed the GST payable in terms of 18 subsection 6. What is 18 subsection 6? So much of the ITC availed minus 5% for every quarter or part thereof from the date of invoice till the date of sale, or GST on transaction value at the time of sale, whichever is higher. But in this case, ITC not taken, so the regular valuation we need to apply. But before that, you check is it a supply. So it is sold for an amount of 1,50,000 during the month of October. So sale, so for consideration, supply under 7(1)(a), and it is not capital goods on which ITC availed. So 18(6) will not be coming. So we will be taking normal value. What is the normal value here? 1,50,000. On that 1,50,000 we will be paying GST. And it is given here itself that it is an intrastate transaction, means CGST, SGST. So what is the rates that is given? So generally all cases it is CGST 9%, SGST 9%. So therefore 1,50,000 into 9% and into 9%. So that is worth 13,500.135 lakhs. So we have got, okay, CGST, SGST liability. So this part also we have completed. Then next, number 3, and sale of van, we don't have any RCM. So it will be FCM only. Then the company has a policy of raising invoices separately towards transportation cost of their products on their dealers at the time of invoicing for the product sold to them. The company is collecting GST at 5% on all transactions, and the amount is collected as a percentage of the value of goods supplied. So here it means, so 5% is the GST and the amount collected as a percentage of, so whatever amount that they are collecting is as a percentage of value of the goods supplied irrespective of the distance involved. The amount collected during the month of October 2020 towards transportation in intrastate transaction is 6 lakhs and interstate transaction is 4 lakhs. Actually, here sale of goods. Sale of goods is taxable at what rate? 18%. Sale of goods and transportation is coming under composite supply. Why? Because they are going to provide, they are going to sell the goods and they are also going to provide the transportation services, and which is naturally bundled in the ordinary course of business. And sale of goods, whenever they sell the goods, they need to do transportation also. So therefore the principal supply is sale of goods. What is the rate applicable to the principal supply? The rate applicable to principal supply is 18%. See here, GST at 5% on all transactions means don't try to understand on goods also. On the transportation cost, 5%. But principal supply rate only will be taken. So therefore, the 6 lakhs and 4 lakhs will be taxable at 9% in case of CGST, SGST, 18% in case of IGST. We are applying the concept of composite supply in this case. Okay. So see there, what is it we need to write? Transportation cost charged on the product, and we need to write that it is composite supply, as transportation cost is charged at a flat rate from all customers. Can't it be taken as expenditure incurred as a pure agent? No, we cannot take it. Why? Because in case of expenditure incurred as a pure agent, only the actual cost incurred to be recovered. But in this case, what they are doing is that, so they are going to collect the even amount from all irrespective of the distance that is involved, which means they are just apportioning the cost, and due to that reason, so whatever transportation cost that is collected is not an actual basis. The moment it is not an actual basis, it will not come under expenditure incurred as a pure agent, and moreover, first of all, it is not the liability of the recipient which is incurred by the supplier, only then pure agent concept will come. So here that is also not applicable. So composite supply, rate of principal supply is 18%, that should be taken. And what is the transportation cost? Intrastate 6 lakhs. So 6 lakhs into 9% and 9%, 54,000, and interstate is 4 lakhs. So 4 lakhs into 18%, 72,000. So that is about this transportation cost. So this part also we have completed. Then next, number 4, the security establishment of the company caught an employee who has stolen bearings of value 2.5 lakhs during the month of October 2020. Bearings could not be recovered, but the company successfully recovered the cost from the employee. IGST credit of 45,000 had been taken by the company on these bearings. Actually, this is related to inward supply. It is not outward supply. This is an inward supply. A company purchased the bearings, and these bearings were stolen. So we have blocked the credit. Section 17 subsection 5 says that when purchased goods are lost, stolen, destroyed, written off, or distributed as gifts or free samples, we cannot take ITC with respect to this. So in this case, the bearings got stolen, so ITC not available, but we recovered the cost. That is irrelevant. Whether we recovered bearings or recovered the cost, we recovered the cost. So, but bearings we could not recover, then we cannot enjoy the ITC. Had the bearings got recovered, means bearings is in the stock, so we can enjoy the ITC. As bearings could not be recovered, only the cost is recovered from the employee, ITC not available in this case, okay. And so this is already availed, ITC already taken. So which means we have some paragraph in the beginning na. So ITC, eligible credit on inputs and input services, 1.4 crores of IGST, 20 lakhs each towards CGST, SGST. So first we need to take the third statement. In third statement, we should take what is the input tax credit. Eligible input tax credit already that is given, 20 CGST, 20 SGST, and so 1 crore 45 lakhs, that is 145 lakhs IGST. Now we need to reduce the ITC that has already been taken in relation to the bearings. So what is the ITC that has been already taken related to this bearings? 45,000, and IGST credit is given. So therefore we need to reduce it from IGST column. So 45,000, so means what, 0.45 lakhs has been reduced here. So that is the adjustment related to this. So this also we have completed. Then next, the company supplies food and beverages to the employees, and all the items are priced at 10% of the actual cost to the company. During the month of October 2020, the company had charged 50,000 to the employees. Assume that it is intrastate transaction. Now what we need to do in this case, first, whenever food is supplied to the employees and we are collecting some amount, it is supplied under 71A. It's not 71C, it is 71A, because there is consideration, okay. But the value needs to be determined in terms of rule. Why? Because employer and employee are treated as related parties. Between related parties, transaction value not applicable. So we need to determine the value in terms of rules. So as per rule 28, we need to take open market value, if not like kind and quality, if not cost plus 10%. If you see here, so what is the amount that they are recovering? 50,000. This 50,000 is nothing but 10% of the actual cost to the company, which means what would be the market value of this? The market value, because we don't have any other data to arrive at the market value. So 50,000 that is collected is 10%. Then what could be 100%? So 50,000 divided by 0.1. So therefore 5 lakhs will be taken as the value in this case. So on that 5 lakhs, GST will be payable. And what type of transaction it is? So see there, assume that it is an intrastate transaction, which means it will be chargeable to CGST, SGST. So 5 lakhs into 9% and 5 lakhs into 9%. That is what food and beverages supplied to the employee should be taken, okay. So therefore be careful, don't take 50,000, 5 lakhs should be taken. Reason, we need to determine the value in terms of rule 28, okay. Then next, Sixth point, and all these cases, it is FCM. We don't have any RCM transaction so far, okay? Because we know what are the transactions which will come under RCM. So, Sir CG got salads. Apart from that, every other transaction will be under FCM only. Then during the month of October 2020, the company purchased 10 mobile phones in its name and distributed to the employees to enable them to perform their duties more efficiently for the company. So now in this case, can they take ITC on these mobile phones purchased? Yes, because these mobile phones purchased are not for gift, it is for business purpose. So which means that they can take ITC on this mobile phone. So where it should come? It should come in input tax credit statement, that is third statement, and that too where it is purchased. So assume that it is intra-state transaction, means it is purchased within the state. So what is the value at which it purchased? 1,20,000, and already we have seen one assumption that all these amounts are exclusive of GST. So 1,20,000 into 9% and 9%. So that will be taken here. So as ITC, so mobile phones purchased for employees, 1,20,000 into 9%, 1,20,000 into 9%. So that is 0.108 lakhs. So 10,800, that is with respect to this. So this also we have completed, but one more part is there. At the end of the month, so October they purchased, at the end of the month, company sold these mobiles to employees and company recovered only 20,000 rupees per mobile from the employee. So no, all mobiles together 20,000 only, but actually 20,000 will not be taken as a value. They are selling. So selling means 71A, but it is an employer-employee transaction. When it is an employer-employee transaction, it's a related party transaction. Again, we need to determine the value as per Rule 28. So based on that Rule 28, so what is the price of this mobile phone? 1,20,000. So that itself is taken as the open market value. So 1,20,000 into 9%, 9%. First we took the ITC, and 1,20,000 should be taken as a value, and we should show it as outward supply. So see here, so supply of mobile phones to the employee, supply is being made to the related person, open market value is taken, on that we are taking 9% and 9%, and we show it as liability. So we are already creating this as ITC once, and we are showing this parallelly as our liability. Now there are two issues here, you may get two queries here. Query number one, sir, it is given in the question somewhere that restaurant will be taxable at 5%. So restaurant service will be taxable at 5%. But when supply of food is made by employer to employee, why we did not take 5%? See, supply of food by employer to employee is not restaurant service. So that's why we are taking 9%, 9%. So, but not 2.5, 2.5. Okay. If it is specifically given as restaurant, then only we should take it as 2.5, 2.5 or 5% in this case. Then second query. Sir, why can't this mobile be taken as capital goods? If it is treated as capital goods, 18.6 will be applicable. Of course, yes, 18.6 will be applicable. But where is it given that they have capitalized these mobiles purchased? Anywhere it is given that the mobile purchased is capitalized. The company purchased 10 mobiles in its name and distributed to employees to enable them to perform their duties more efficiently for the company, and price of the phone was 1,20,000. At the end of the month, company sold these mobiles to employees and company recovered only 20,000 from the employees. In the same month it is sold, so therefore they will not recognize it as capital goods. Sir, if I assume that it is capital goods, then how to compute the GST payable? Simple, ITC availed minus 5% for every quarter or paragraph. 1 month they use, so 5% should be reduced, or GST on sale value, whichever is higher. So whichever is higher is definitely GST on sale value. What is the sale value here? Open market value will be taken. So therefore that will be 1,20,000. Then also the answer is not going to change. Even if you apply 18.6 also, the answer is not going to change. The answer will be same. So we will create a liability of 1,20,000 into 9%, 1,20,000 into 9%. That is given by ICI in the suggested answer itself. See there, it has been assumed that selling of mobile phones to employees at reduced rate does not form part of the employment contract. Further, mobile phones have been considered as inputs. However, it is also possible to consider the mobile phones as capital goods. Since in the given case mobile phones are being removed, so amount determined in terms of 18.6 shall be payable. So even though ITC availed minus 5%, one month used means 5%, but value, sale value is how much? 1,20,000. So whichever is higher, so therefore the answer we end up will be the same, no change in that. Then next, so seventh transaction, if you see, the company's registered office is located in a building which belongs to the local municipality. The monthly rent is 1.5 lakhs. So municipality. So municipality means government. Government providing services to a business entity. And in this case, so what is the rent amount? 1.5 lakhs. So renting of immobile property by government to business entity. It is not covered under the specific exemptions. And the first general exemption is not applicable. What is the first general exemption? Services provided to a business entity whose aggregate turnover during the previous year does not exceed threshold limit. That exemption is not applicable in this case for renting of immobile property. Now the second general exemption is what? Value of supply does not exceed 5,000, but here value of supply exceeds 5,000. And in case of continuous supply of service, do you remember? So when what is called as a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations is known as continuous supply of service. For continuous supply of service, actually this 5,000 should be taken per annum. Generally that 5,000 rupees services provided by government to business entity, 5,000 is per invoice. But if it is a continuous supply of service in a financial year, renting is actually continuous supply of service. In a financial year, it does not exceed 5,000 rupees. So due to that reason, the exemption will not be available here because it is 1.5 lakhs. Now, whenever this activity will be taxable, who will pay GST? Is the recipient unregistered person? No, it's a registered company, because renting of immobile property by government to business entity, if the business entity is unregistered, then government will pay under FCM. But if the recipient business entity is registered, then it will come under RCM. So in this case, this MS Limited has to pay GST under RCM with respect to this rent. And whether it is intrastate supply or interstate supply, simple. Where the property is located, so in the state where the company is in, local authority, na, of course in the same state. So therefore, location of supplier, municipality, same state, property, same state, because place of supply will be taken as the location of immobile property. In case of any service in relation to immobile property, the place of supply will be taken as the location of that immobile property. So what is the location of that immobile property? Location of immobile property is in the same state. So it will become intrastate supply, chargeable to CGST, SGST. But there is another adjustment also. First we need to add this under RCM liability, and we can also avail it as ITC. So 2 places we need to write. First we need to write it under statement 2. So what is that? Statement number 2, tax payable under RCM, rent paid to municipality. So CGST, SGST 1.5 lakhs into 9%, that is 13,500, 0.135 lakhs. The same thing you need to add it under ITC also, rent paid to municipality. So same we need to add under ITC also. Okay. Then that is the 2 adjustments related to this. Then next one, the whole time director of the company was paid a salary of 5 lakh during the month. Salary paid to the director will be not a supply, because services provided by employee to employer in the course of employment is excluded from supply. So this 5 lakhs which is paid as salary is excluded from supply, consequently GST not payable. He was also paid 20,000 towards sitting fees for his participation in the meeting. So now what about that 20,000? Sitting fees will be coming under supply. So therefore sitting fees will be chargeable to GST, but we have RCM. What is that? Services provided by director to company. So here company is making the payment, so that MS Limited. So company is making the payment, so therefore it will come under RCM, where MS Limited is having the liability to pay GST under RCM, and also they can take ITC. So again here also we have 2 adjustments. Adjustment number 1, we need to take it as RCM liability. How much? 20,000. And sitting fees. Sitting fees means place of supply as per general provisions. So general provisions, location of recipient will be taken. So location of supplier, same state. Place of supply is a location of recipient, same state. Again it will be taken as intrastate transaction, chargeable to CGST, SGST. So 20,000 into 9% and 9%, CGST, SGST. And the same we also take under ITC, sitting fees paid to the director. Okay. Then next one, so this also we have completed, 8th transaction also. So all these transactions we have completed. Now we need to compute the net GST payable, but they have given one note. Company wants to pay minimum amount of SGST as far as possible. What does it mean? when you have the credit of IGST, so that IGST credit, so we have manner of utilization of credit under section 49 subsection 5 read with section 49A etc. So which says that IGST credit first should be utilized for payment of IGST liability, and thereafter it will be utilized for payment of CGST or SGST liability. But here majorly you should use it for what liability? SGST liability. Why is it? Because clearly they are telling the company wants to pay the minimum SGST liability as possible. So due to that reason. Now, so let's see first statement total. What is the first statement? So total liability, gross GST payable. So all the transactions we have taken, and the gross liability we got 55.233 lakhs, 55.233 lakhs of CGST, SGST, and IGST 72.72 lakhs. Then second statement total you need to take. What is that second statement? GST payable under RCM 0.153 lakhs and 0.153 lakhs. Now third statement. What is the third statement? ITC. So in this ITC, so first we have opening the 2020, and ball bearings we need to reduce. Mobile phones we can take ITC, then rent paid to municipality and sitting pays RCM. So this total 20.261 CGST, SGST, and 144.55 lakhs of IGST. Now, so what we need to do? Computation of net GST payable. Now the fourth statement, gross liability under FCM already we know. Now ITC, if you see, we have gross liability how much? 55, 55, 72, but we have more ITC. So more ITC of IGST. So IGST credit should be first utilized for payment of IGST liability. How much IGST credit we have? 144.55. First use it for payment of, IGST liability. How much? 72.72 you use. So remaining how much we have? 71.83. But what is the question that says minimum SGST liability as far as possible? So therefore use it for SGST. So minus 55.233. So therefore 16.597 we have. That 16.597 you adjust with CGST liability. So now still there is some CGST liability. So 55.233 minus 16.597. So we have 38.636. But what is the ITC of CGST? 20.261. So minus 20.261. So that will come to 18.375. But we have SGST liability. Can we set off? No. SGST credit cannot be set off with CGST liability. So we have SGST liabilities, it became 0 because that's what question says. Now we have still some SGST credit of 20.261. Can we use that for payment of this 18.375? No, we cannot use it. So 18.375 will be, FCM liability plus RCM liability. What is the RCM liability? 0.153, 0.153. If you add 18.375 plus 0.153, that is 18.528 will be the total liability payable in cash of CGST, and SGST is 0.153. Then we have SGST credit. Can we use it for payment of RCM liability? No. So any input tax credit cannot be used for payment of RCM liability. So in this calculation, one more point also you can write. What is the excess ITC that is carried forward? Excess ITC carried forward. In case of CGST 0, but in case of SGST, this 20.261 is the SGST credit that can be carried forward for the subsequent period, that is subsequent month. So this is about the answer to this question. So like what and all we have in this? Almost everything. Place of supply we touched, value of supply we touched, RCM we have touched. So except exemptions, even input tax credit, blocked credit and all we have touched. So this is how a typical 14 marks question will be. Now we are moving on to question number 2. In question number 2, Motor Power Private Limited, registered under GST, is engaged in manufacture of 5-seater luxury cars at its factories located in the state of Rajasthan, Uttar Pradesh and Gujarat. So they have many branches. The company has obtained registration in each of these states. It also enters into contract for providing these cars on rent to corporate clients, wherein the cost of fuel is included in the value of supply. Generally, when cost of fuel is included, we have two rates of GST, 12% with ITC and 5% without ITC. So, but here we don't know what is the rate that has been taken here, so that we need to see in the subsequent information. The company reports the following details for a tax period pertaining to its factory located in Gujarat. So, these are the details related to Gujarat factory. So, they have some inward supplies and outward supplies. So, these payments are with respect to inward supplies, these receipts are with respect to outward supplies. Now, we have all the above amounts are exclusive of all kinds of taxes wherever applicable, excluding of GST. However, the applicable taxes have also been paid by the company, and we have some additional details here. So, total some 12 points are there. Compute the total ITC available. Anyhow, we will do that because we have receipts and payments. For payments means inward supply, we will take the ITC, and for the given tax period and computation of net GST payable. So, this is also a consolidated question, a 14 marks question that is involving computation of net GST payable from electronic cash ledger. See the rates here. CGST and SGST rates on all inward and outward supplies are 9%, 9% and 18% respectively, except on renting of cars. On renting of cars, they are taking 5%. Means what? 5% rate is without ITC, which means they cannot take ITC on the inward supply. It is important to note that credit of input tax charged on goods and service used in supplying the service of transportation of passenger by any motor vehicle designed to carry passenger where the cost of fuel is included in the consideration charged from the service recipient is not available. So, ITC not available except the credit of input service in the same line of business. So, 5% rate is given. Then the necessary condition for availing ITC have been complied with by Motor Power Private Limited wherever applicable. Now, you need to compute the net GST payable. In that, we have the additional information. First, raw materials worth. So, we have raw material 4.5 lakhs. This is the purchases, means inward supply. So, we need to prepare two statements, that is statement showing the GST liability on outward supply and statement showing the input tax credit, and we might have some RCM also on safer side. So, it is better to prepare. So, same template, no change. Statement 1 gross liability under FCM, statement 2 input tax credit, statement 3 or statement 2 RCM liability, statement 3 input tax credit and statement 4 computation of net GST payable. So, here you can see raw material 4.5 lakhs they purchased, and raw material worth 0.5 lakhs purchased from a registered supplier located in Gujarat. So, right now they have given details related to the factory in Gujarat. So, within the state purchases, so located in Gujarat, were destroyed due to fire in the factory and thus could not be used in manufacturing process. So, purchased goods are lost, stolen, destroyed, written off, etc. ITC not available with respect to this. Remaining raw material has been procured from various vendors located in Maharashtra. So, therefore, this particular 4.5 lakhs, 0.5 lakhs, so ITC not available. Remaining 4 lakhs ITC available, procured from various vendors in Maharashtra means IGST. So, therefore, we need to take in input tax credit raw materials 4.5 minus 50, and we need to write the reason as to why on 50,000 ITC not available, because it is a block credit under 17 subsection 5, and on this 4 lakhs IGST liability, that is 4 lakhs into 18%. So, 72,000 is the ITC with respect to IGST. So, this first part we have completed. Then second, rent has been, so here also raw material discussion over. Now, rent paid 1 lakh. Related to rent paid, they have given some information. Rent has been paid for the factory building located in Gujarat to its owner registered in Gujarat. So, supplier Gujarat. Place of supply, any service in relation to immovable property, location of immovable property is taken as place of supply. So, that is in Gujarat, therefore, it is intrastate supply, and this 1 lakh will be chargeable to CGST, SGST 9% and 9%. So, 1 lakh into 9,000, 9%, 9%, 9,000 and 9,000. So, we completed this second part, and even here rent related information over. And thereafter, payment for security services. Service provided by way of supply of security personnel for the tax period has been made by Safe and Secure Solutions Private Limited, a company located in Gujarat and not registered under GST. Now, in this case, if you see, supplier is security agency. Security agency service will come under RCM when if the security agency is other than body corporate and the recipient is registered person, not opting for composition scheme or not registered only to deduct TDS. But in this case it will not come under RCM. Why? Because security agency service is provided by Safe and Secure Solutions Private Limited. In order to bring it under RCM, supplier should be other than body corporate. So here it will not come under RCM, FCM only. But FCM, they are not registered. So will there be any GST liability? No. First of all, there is no GST liability. Consequently, ITC also cannot be availed with respect to this security services 0.70. So security services, so 70,000 nil. First of all, we have not paid any GST with respect to this. Then next, number 4, general insurance services. So what is the general insurance service? General insurance service of cars manufactured 2.5 lakhs. So for that, general insurance service have been availed from dividend insurance company registered in Gujarat. So it's an intrastate. General insurance service with respect to the cars manufactured, there is no blocked credit. Generally, life insurance and health insurance we have blocked credit, and insurance in relation to motor vehicles also we have a restriction, but not applicable in case of goods manufactured by them. So they can take ITC and it is within the state, so intrastate. So what is the general insurance? 2.5 lakhs. So 2.5 lakhs into 9% and 9%, 22,500 and 22,500. So this part also over. Then works contract service. So works contract service we have 1.6 lakhs. So this works contract service related information given availed from Chitra Builders, Gujarat. Generally works contract service is blocked credit, but we have some exceptions. If it is in relation to plant and machinery, then ITC available. If the expenditure is charged to P&L, ITC available. The restriction is not applicable to supplier. So in this case, if you see, works contract service availed from Chitra Builders, Gujarat have been used by the company for construction of a foundation on which machinery to be used in production process is to be mounted. So therefore, this works contract service is in relation to plant and machinery. So ITC is available. From whom it is received? From a person in Gujarat. This is service in relation to immovable property, plant and machinery, but it is immovable. So therefore, location of immovable property where? Gujarat, and supplier also Gujarat. So it's an intrastate supply. What is the works contract service? 1.6 lakhs. So 1.6 lakhs into 9% and 9% CGST and SGST. Then next we have audit fee. Audit fee is paid to a firm of chartered accountants, Messrs. Pandya and Associates, registered in West Bengal with an aggregate turnover of 30 crores in the preceding financial year for conducting the statutory audit of the company in the preceding financial year. The firm raises an e-invoice without invoice reference number. So actually here audit fee they can take ITC because audit fee we don't have any restriction, but the problem is wherever e-invoice is applicable to a person, if that person has not given a proper e-invoice, so e-invoice itself means what? It should be having an invoice reference number, then QR code and digital signature. So invoice reference number itself is not there, means it is not a e-invoice and not a valid invoice. Consequently, the recipient cannot avail ITC in this case. So therefore, in case of these audit fees, even though no restriction, but e-invoice should be issued, but they have not given a valid e-invoice. So ITC cannot be availed with respect to this. So nil nil. Then next one, we have bank charges. Bank charges are towards various services availed by the company during the month with regard to its current account maintained with Money Bank registered in Gujarat within the same state. The bank issued a consolidated tax invoice for all such service at the end of the month containing the details of tax charge, description of service, total value, GST of the bank and the recipient. So we have one point in rule 36 which says that if there is no valid invoice but there is minimum details containing in a document, it will be called as an invoice for availment of ITC. So we have section 16 which says that a person who is availing ITC should be in possession of tax paid documents. So one of the tax paid documents is tax invoice, but tax invoice not necessary that everything should be there. there are 6 details present that is called as a tax invoice for availment of ITC. What are those 6 details? GSTN of the supplier, GSTN of the recipient, description, value, tax and place of supply in case of interstate supply. Here everything is there. So this is a valid invoice. ITC can be availed with respect to this. And what is the bank charges here? 0.10 lakhs, so 10,000. So on that, within the state, so CGST, SGST, 900 and 900 will be taken as the credit. Then number 8, automobile association. So what is that? Membership of automobile association. So membership of a club. So membership of a club, health and fitness center is blocked credit. But this is what? It's an association. It's not a club and it's not a health and fitness center. So due to that reason, we don't have any restriction. See there, automobile association is registered in state of Gujarat. So consequently, we can take ITC. So that membership of a club, health and fitness center point is not applicable here. So ITC available within the state, intra-state. Again 10,000 into 9%, 9% CGST, SGST. Then, so all these are over. No, one more point is there. Consumables is left. Consumables is left. But other than that, everything is over. Then the breakup of sales is as under. So this where we need to update, this we need to update in the first statement, GST payable on outward supply. And so far, all these points what we have seen, except that consumables, nothing is in RCM. So that's the reason why we are not putting it under statement 2. Okay. So everything is under FCM liability only. So we have taken the ITC wherever available. Then the breakup of sales is as under. So what is the sales data here? Sales data is 30 lakhs. In this 30 lakhs sales, what happened? So sales in Gujarat 14 lakhs and sales in states other than Gujarat 6 lakhs and exports of under letter of undertaking. Exports under letter of undertaking is without payment of GST. First sales within the state 14 lakhs. So on that 14 lakhs, CGST, SGST, how much? 9%, 9%. So see the outward supply data, 14 lakhs, 9% CGST, 9% SGST. And thereafter, interstate sales chargeable to IGST. So 6 lakhs into 18%, 1 lakh 8,000. Then exports under LUT, 10 lakhs. So on the 10 lakhs, so no GST because it is under bond or LUT. So total 30 lakhs is over. And thereafter, sales related portion we completed. Car rental income. Car rental income pertains to renting of cars. Renting of motor vehicles, we have RCM. What when supplier other than body corporate, recipient is body corporate and rate of GST 5%. In this case, who is the supplier? Supplier is this company, Motor Power Private Limited. As the supplier is body corporate, RCM will not come. Even though the rate is 5%, RCM will not come. Why? All the 3 conditions should be satisfied. Supplier should be other than body corporate, recipient should be body corporate, rate of GST 5%. Here supplier is not other than body corporate. So RCM will not come, it will be FCM only. So it will be taxable in this company's hands. Car rental income pertains to renting of cars to Zamis Travels Limited, registered in Gujarat. So within the state. So therefore, in case of renting of movable property, general provisions, location of recipient will be taken as the place of supply and rate of GST 5%, CGST, SGST 2.5, 2.5. So what is the car rental income? Car rental income, sales we completed, car rental income 50,000. On that 50,000, 2.5%, 2.5%, 1,250 and 1,250. Now, some more information is given related to consumables. Further, consumables procured from registered suppliers located in Gujarat include diesel worth 75 lakhs used for running the car, so rented out to Zamis Travels. Assume that except diesel, no other inputs and input service is used in providing the car renting service. Super point. Why it is given, you know? Generally, when you take 5%, so rate on renting of motor vehicles, ITC cannot be availed. And they have only one inward supply, that is petrol diesel. On petrol diesel, anyhow, there is no GST. Consequently, ITC will not come. No restriction also to do the reversal. Suppose if you have any other inward supply used for car renting, we cannot avail the ITC and we should have reversed it. But here we don't have that issue. But consumables, 75 lakhs is petrol diesel, on which no GST. So therefore in consumables 1.5 lakhs, 75 lakhs, first of all we did not pay GST, remaining 75 lakhs we paid GST and we can take ITC. Sir, but it is used for renting of motor vehicles. No, it is not used for renting of motor vehicles. Consequently, we can take ITC with respect to this. So see the ITC statement. So 1.5 lakhs minus 75,000, and that too it is given entire consumables is within the state. So 75,000 into CGST, SGST. So that is this. Next, services provided to Gujarat Government Administration are under a health training program. 51% of the total expenditure is borne by Gujarat government. So we have one exemption. Services provided to government in relation to a training program for which at least 75% of the expenditure is borne by the government, then it is exempted. We have one exemption here. Okay. So what is the expenditure? Greater than or equals to 75% of the expenditure should be borne by the government. So, but here how much expenditure they are bearing? 51%. So, the exemption is not available. Consequently, it will be taxable. And how much it is? 2.5. And it is training program to government of Gujarat. So, intrastate chargeable to CGST, SGST. So, 2.5 lakhs into CGST, SGST 22,500, 22,500. So, that also over. Then opening balance of ITC. So, it should come in ITC statement. So far again no RCM liability and all. The opening balance of ITC, CGST 0.5, SGST 0.26, IGST 0.35. So that we are taking in opening balance. Okay, ITC statement. This is also over. So all the adjustments we completed. Now net GST payable. So what is the total ITC? So the total of this CGST 1,04,450, SGST 80,450, IGST 1,07,000. Also liability, we don't have any other liability because all the outward supplies we completed. So the liability if you see 1,49,750, CGST 1,49,750, SGST, IGST 1,08,000. Now IGST credit first we need to utilize. So we can utilize easily, and CGST, SGST credits is less than the liability. So therefore we get the net GST payable. So it's a simple, not much complications are involved, but there is a possibility that we might have some inward supply used for car renting, then proportionate to that we need to reverse the ITC. So that point may be tested. If that is tested, then the question will be little complicated, but otherwise it will be easy in this case. Okay. So but whenever they give that way, please be careful. Whenever without ITC like that they are giving, proportionate to that exempted portion, that should be treated like exempted value. Proportionate to that ITC needs to be reversed. So exempted divided by total, the common ITC, how much ever inward supply used in that, the common ITC needs to be reversed. Okay. So that is with respect to this question number 2. Then look into question number 4. Ragini Traders, a registered supplier of Jaipur, Ragini Traders, a registered supplier of Jaipur, is engaged in supply of various goods and services exclusively to government departments, agencies, local authority and persons notified under section 51 of CGST Act. So section 51 of CGST Act is with TDS provisions. So Ragini Traders is making supply to government departments which are liable for TDS, and when TDS is applicable if the contract value of supply exceeds 2,50,000. So that we need to check here. You are required to determine, briefly explain the provisions relating to the TDS under section 51, also determine the amount of tax if any to be deducted from each of the receivables given below. Assuming that the payments as per the contract values are made on 31st October, the rates are assumed to be: number 1, supply of computer stationery to public sector undertaking located and registered in Mumbai, total contract value is 2,72,000 including GST. So first we need to write about section 51. Section 51 says what? Any supply of goods or services whose value of supply under the contract exceeds 2,50,000. While computing the value of supply under the contract, we need to take out the GST, and if it exceeds 2,50,000, then TDS will be applicable on the amount that is remitted by the notified recipient. Who will be taken as a notified recipient? central government, state government department, local authority, public sector undertakings or government entity in which government has invested greater than or equals to 51%. So they are called as notified recipients. So in this case, if you see first case, supply of computer stationery to PSU. Is PSU a notified recipient? Yes, PSU is a notified recipient. Located and registered in Mumbai, total contract value 2,72,000. First see the contract value excluding GST. So 2,72,000 into 100 divided by 112. So that is 2,42,000, which does not exceed 2,50,000. So due to that reason, TDS will not be applicable in this case. Then second, supply of air conditioner to GST department located and registered in Delhi. Total contract value is 2,55,000. Now in this case, supply of air conditioner to GST department. So department of government, central government, so that is also a notified recipient. Total contract value 2,55,000 exclusive of GST. So therefore it exceeds 2,50,000 and TDS will be applicable in this case. And what is the TDS? Is it CGST, SGST or AGST? First you check the nature of supply. Where is the supplier located? Supplier is in Jaipur. And supply of air conditioner to GST department registered in Delhi. So in case of goods, so we need to take ending point as a place of supply. So here ending point is what? Delhi will be taken as the ending point. So it's an interstate supply chargeable to IGST. So TDS also IGST. And what is the rate of TDS? If it is CGST, SGST 1%, 1%. If it is IGST 2%. So what is the value here? 2,55,000. So 2,55,000 into 2%, that is 5,100. Will be taken as the TDS that is to be deducted. Then third one, supply of generator renting service to municipal corporation of Jaipur, not exempt under GST. Total contract value 3,50,000 inclusive of GST. So supply of generator renting. So any renting of movable property, general provisions. Location of supplier Jaipur and place of supply is also Jaipur. Therefore, it will be coming under intrastate supply and chargeable to CGST, SGST. So TDS also 1% towards CGST and 1% towards SGST. And what is the value? 3,50,000. You take out the GST component in this. So because that is inclusive of GST into 100 divided by 112. So that is 3,12,500. On that 3,12,500 into 1% is TDS. So into 1% TDS towards CGST 3,125. And 3,125. So this is total. So it's a 4 marks question which is given in MTP for May 23 exam. This is related to TDS. Now look into the previous question, question number 3. Question number 3, Jaskaran, this is an RTP November 18, a very old question. Jaskaran, a registered supplier of Delhi, has made the following supplies in the month of January 2021. Supply of 20,000 packages at rupees 30 each to Sukija gift shop in Punjab. Each package consists of 2 chocolates, 2 fruit juice bottles and a packet of toy balloons. Now chocolates, fruit juice bottles and toy balloons all are taxable. But is it naturally bundled in the ordinary course of business? No. In the ordinary course of business these are not naturally bundled. So it will come under mixed supply. When it becomes mixed supply, so what are the 3 conditions for composite supply? All are taxable, naturally bundled in the ordinary course of business, principal supply identifiable. So then only it will be composite supply. If any one condition not satisfied and if it is for a single price, yes, for a single price 30 rupees each, so therefore it will be coming under mixed supply. In case of mixed supply, what we need to do? We need to take the highest rate. So between this chocolate, fruit juice bottles and toy balloons, what is having the highest rate? Chocolates is having a highest rate of 18%. So that 18% should be taken for 6 lakhs. And again, is it intrastate or interstate? Where is the supplier located? Delhi. And sale of goods. Sale of goods, usually ending point will be taken as place of supply. So Punjab, and it's a interstate chargeable to IGST. So 6 lakhs into 18%, that should be taken. Okay. That is the answer for this first part, 6 lakhs into 18%. Then second, 10 generators hired out to Morarji Banquet Halls, Chandigarh, including cost of transporting the generators, 1,000 for each generator from Jaskaran's warehouse to Morarji Banquet Halls. So hiring of generators along with transportation. So hiring of generators is taxable and even transportation. So transportation, what is the rate? the transportation of generators. Second point you see, the transportation of generators from Jaskaran warehouse to the customer premises is arranged by Jaskaran through a GTA who pays a GST of 12%. So now, in case when they incur the transportation services, so that will be coming under naturally bundled in the ordinary course of business. All are taxable, naturally bundled in the ordinary course of business. And what is the principal supply? The principal supply here is renting. Renting is taxable at 18%. So we need to take 18%. Now, in case of renting services, general provisions, location of recipient will be taken. So where is that location of recipient? Chandigarh, and supplier is located in Delhi. So therefore again it will be interstate supply chargeable to IGST. So 2,50,000 into 18%. See, valuation is different from rate of GST. Yes, transportation cost should be included in the value, no doubt about that. Valuation is different from the rate that is applicable. Valuation is only for the purpose of arriving at the value. Thereafter rate we need to multiply. So that rate depends upon whether it is a composite supply or mixed supply. As per valuation it is to be included, no doubt. But for the purpose of rate of GST, what we need to do? We need to take the principal supply because it is a composite supply and the principal supply rate is 18%. So 18% is applied here, and that's where 2,50,000 into 18%. Then third transaction, 500 packages, each consisting of one chocolate and one fruit juice bottle given as free gift to Delhi customers on the occasion of Diwali. Now in this case what will happen? Again, one chocolate and one fruit juice bottle. So this cost of each package is 12. First of all, we need to understand, is it supply or not a supply? Because first one, no doubt, it is sold for consideration 71A. Second one also for consideration 71A. Here they are giving it as free gift. Free gift means, so 71C. In 71C, number 1, disposal of business asset on which ITC is availed. Yes, these goods are their business asset, but we don't know whether ITC availed or not. It is given. Input tax credit has not been availed on these items. So which means that disposal of business asset on which ITC availed will not be applicable. Number 2, related party transaction including transaction between distinct person, Delhi customers. So related party transaction, distinct person will not come. Import of service from related person will not come. Principal agent transaction also will not come. Consequently, this transaction is not a supply. So we don't have to pay any GST with respect to this. So nil. Okay. Then next, suppose if this transaction becomes supply, then what we would have taken? We would have determined depending upon the rule. So either rule 27 or rule 28 depends upon the valuation rule we will be applying here. That's why they gave cost of each package is 12, but the open market value is not available like that. So cost plus 10% will be taken. When open market value not available, like kind and quality not available, cost plus 10% will be taken. But here, first of all, this activity is not a supply. Then number 4, catering service provided free of cost for elder son's business inaugural function in Delhi. Cost of providing the said service is 55,000, but the open market value of such service and service of like kind and quality is not available. So again it is free of cost. Free of cost to whom? For elder son's business inaugural function. Elder son. So son will always be treated as related. So whether or not he is dependent. So therefore for Jaskaran, the son will be treated as related. It's a related party transaction without consideration. So it will come under 71C provided it is in the course or furtherance of business. So yes, it is in the course or furtherance of business. Consequently, it is supply under 71C. And here if you see what is happening, catering service is provided, and in case of related party transaction, we need to determine value as per rule 28. As per rule 28, first we need to take open market value. Here we don't have open market value. Then second, like kind and quality, that is also not available. So we need to take cost plus 10%. What is the cost here? 55,000. 55,000 plus 10%. So that will be 60,500. And 60,500 here, where is the supplier located? Delhi. Catering service. Catering service, general provisions. We need to take location of recipient. So location of recipient is also Delhi. And therefore it will be coming under intrastate supply chargeable to CGST, SGST on 60,500. For catering service, what is the rate given here? 9% and 9%. So 60,500 into 9%, 60,500 into 9%, CGST, SGST. So these are about these 4 points. You are required to determine GST liability as the case may be of Jaskaran for the month of January with the help of additional information. Already this GTA point we considered. Penalty of 10,000 was collected from Shukija gift shop for the payment received with the delay of 10 days. So now if you see here, the first transaction is only sale to Sukija gift shop, and whenever the penalty is collected, interest, late fee or penalty for delay in receipt of consideration should be included in the value as per section 15(2)(d) of CGST Act. Accordingly, this penalty should be included in the value, and they have not given any information, which means this penalty 10,000 is inclusive of GST. So then how to calculate GST in this case? Also, what is the rate of GST that should be taken? See, penalty is not a separate activity here. So whatever is the rate applicable on this first transaction, what is the rate we have taken? Mixed supply highest rate we have taken 18% na. So that 18% is only applied on this 10,000 also. So interest, whenever it is taxable at the rate applicable to the invoice for which this interest arises, and in the absence of information it will be taxable on inclusive basis. So 10,000 rupees into 18 divided by 118, so that will be 1,525 will be taken. Okay, so that will be the IGST component. So here already 6 lakhs into 18% we have, 6 lakhs into 18%, 1,08,000 we have. Okay, I'm just giving you the breakup how we got this. So already 6 lakhs we have taken, 1,08,000. Now this interest is also taxable on inclusive basis, 10,000 into 18 by 118, so that will be 1,525 point something, so 1,526. The total is only 1,09,526 has been taken here. Okay, but actually it is 1,525.42, so we should have taken it as 1,525. So 1,525 means 1,09,525 will be taken as the answer in this case. So here it is done on a together basis, but we can do it separately also, not an issue. And to collect this penalty, they will be giving one document. What is the document that they will be giving? Debit note. Supplier will be giving a debit note to the recipient, and we need to write the explanation here as to why it is mixed supply, why it is composite supply, and why that interest penalty should be included in the value. All those aspects we need to write as the notes. Remember, writing notes is very, very important. So when you are arriving at the answer is not just sufficient. You need to write proper explanation for that, then only you can expect full marks in exam. Okay, then next question number 5. This question is actually from ICA's study material. They have not given this anywhere before. Andes Private Limited, a registered supplier, manufactures product A and product B. While product A is taxable under forward charge, B is taxable under reverse charge, the following details are provided in relation to two individual supplies of product A and B made by the company. Here on 10th February, payment of 1 lakh made by the buyer for supply of A to be delivered in the month of March. Like this, we have a big details of transaction. So around some 14 points are there. And what is that we need to determine in this case? Determine the time of supply of the goods for the purpose of payment of tax. So time of supply we need to determine. Product A is covered under forward charge. First we will see product A forward charge. So in case of goods covered under FCM, what is the provision that we need to apply? 12 subsection 2. As per 12 subsection 2, what is the time of supply? Due date of invoice or actual date of invoice, whichever is earlier will be taken. If the person is opting for composition scheme, then due date of invoice or actual date of invoice or date of payment, whichever is earlier. Here nowhere in the question it is given that they are going for composition scheme, then it will be due date of invoice, actual date of invoice, whichever is earlier. So just these two informations only we need to search from the data. Okay, then actual date of invoice will be directly available. What will be taken as the due date of invoice? Here we need to understand whether supply involves movement of goods or supply does not involve movement of goods, because as per section 31 subsection 1, if supply involves movement of goods, the due date of invoice will be taken as at the time of removal. If supply does not involve movement of goods, the due date of invoice is at the time of delivery. So here you check product A related, wherever you have product A, that alone you see. So first with respect to product A, payment of 1 lakh made by supplier for supply of product A to be delivered in the month of March. Then next product A, where it is product A manufactured and removed. Removed means supply involves movement of goods. So because they are manufacturing and removing, supply involves movement of goods. So we need to take at the time of removal as the due date of invoice. So first we need to write the provision as per section 12 subsection 2. So what is taken as the time of supply, then what is taken as the due date of invoice. Okay, now what is the actual date of invoice? With respect to product A So actual date of invoice is 4th March. So 4th March will be taken as the actual date of invoice. What is the due date of invoice? At the time of removal. So when is it removed? On 5th March. So 5th March will be taken. So 4th March or 5th March, whichever is earlier. So 4th March will be taken as the time of supply with respect to product A. So with respect to product A, what is taken as the time of supply? Say this line. So in the present case, we need to take time of supply with respect to product A. We need to take time of supply with respect to product A. Here it is there. Time of supply of product A, which is taxable under forward charge, is 4th March being the date of issuance of invoice. So due date of invoice or actual date of invoice, whichever is earlier is taken here. Okay, that is how we arrived. Now next two aspect will use, if you see product B. Product B is what? Product B is covered under RCM. So goods covered under RCM, what should be taken as the time of supply as per section 12 only, subsection 3. So 13 is applicable in case of services, 12 only it is goods, but covered under RCM. So 12 subsection 3, the date on which product B is received by the recipient, or the date on which recipient is making payment to the supplier, or 31st day from the date of invoice, whichever is earlier. As date of payment is involved, if multiple payments are made, we need to determine multiple time of supplies. First, related to product B, you search what are the data that is given. So payment of 2 lakh made by buyer for supply of product B. So for supply of product B, okay, so payment is made of rupees 2 lakhs, and then product B related information to be delivered in the month of March, receipt of 2 lakhs, okay, product B manufactured and removed. So we have some data related to product B manufactured and removed, and receipt of product B, the date on which buyer has received the product B, invoice for product B, and payment. So what is the invoice value? 4 lakhs is the invoice, but already how much payment is collected for product B? 2 lakhs. So balance 2 lakhs, made, payment made by buyer of B on 1st April. Okay. So now what should be taken in case of product B? So we need to take first date of receipt of goods. What is the date of receipt of goods? Date of receipt of goods, if you see, when the product B is received, 23rd March. So 23rd March. And next B, date on which payment is made. Date of payment, actually there are two payments. First advance 2 lakhs, thereafter balance 2 lakhs. Okay. So date of payment, if you see, for advance 2 lakhs, it will be 17th February. 17th February, whereas the balance 2 lakhs payment made by buyer of B is on 1st of April. And with respect to date of receipt of goods, so again date of receipt of goods is 23rd March only, and no change in that. Okay, payment only two different payment dates. See, 31st day from date of invoice, 31st day from date of invoice. So what is the date of invoice? Date of invoice of product B. So invoice for 4 lakhs issued for supply of B 11th March. From 11th March you need to take 31st day. So in 31 minus 11, in March 20 days, and in April, so 11 days will become 31st day. So 11th of April. 11th of April will be taken as 31st day. 11th of April. Now if you see in this case, first 2 lakhs advance 23rd March or 17th February or 11th April, which is earlier? 17th February is only earlier. Then for the remaining 2 lakhs, 23rd March, 1st April or 11th April, which is earlier? 23rd March is only earlier. So therefore, for first 2 lakhs it will be 17th February. First 2 lakhs, it will be 17th February for first 2 lakhs. Remaining 2 lakhs, it will be 23rd March. So that's how we arrived at the answer. So this is a question related to time of supply in case of goods that covers both FCM as well as RCM. Then next question you can see, question number 6. This is an RTP November 22 question. Sanmati Industries registered in the state of Maharashtra receives a machinery for repair in its workshop located in Mumbai. So received the machinery, Okay, so they are providing the services of repair and maintenances. So receives a machinery for repair in its workshop located in Mumbai, Maharashtra from Mitsubishi Limited, an automobile manufacturing company based in Japan. The repair work was carried out by Sanmati Industries, for which it was to be paid in convertible foreign exchange, and goods were returned to Mitsubishi Limited after being used for some time in India. Now, actually this we need to determine what is the time of place of supply and what is the nature of the transaction in this case. First, who is the supplier? Sanmati Industries. Where is that they are located? Maharashtra. Who is the recipient? Mitsubishi Limited. Where is it located? Japan. So supplier, and what is the service here? Repair and maintenance. So person, supplier in India, recipient outside India. So place of supply determined under section 13. And in case of section 13, what is the activity here? Performance based service in relation to goods. What is the provision? If presence of goods is required, physical presence of the goods required, location where service are actually performed. If physical presence of the goods are not required, location of goods at the time of providing service. And we have 4 exceptions in case of physical presence of the goods required. In case of goods temporarily imported for carrying out repairs or any other process, and it is exported after repairs or any other process, then in that case location of recipient will be taken as the place of supply, and it should be exported without being put to use. And second exception is that research and development carried out on certain pharmaceutical products. And number 3, repair, maintenance and overall in relation to aircraft or aircraft parts used for business purpose. Number 4, repair, maintenance and overall service in relation to ship and its parts used for business. In all these 4 cases, even though physical presence of the goods required, we will take location of recipient as the place of supply. So here if you see, so it comes into the first exception. So goods are imported temporarily. See there. So their repair work is carried out, for which it has to be paid in convertible foreign exchange, and they are bringing the machinery. So receives a machinery for repair. So goods are temporarily imported for carrying out repairs. And are they exporting it immediately without being put to use? No, they are exporting it after being used. After being used for some time in India, which means it will not come under the exception. As it is not coming under the exception, we will take location where services are actually performed. Where is it performed? In Maharashtra. So if you see in this case, so location of supplier is Maharashtra, location of recipient is Japan, and place of supply, location where services are actually performed, so again Maharashtra. And will it qualify for export of services? No. Why it will not qualify for export of services? In order to become export of service, 5 conditions should be satisfied. Supplier should be in India, recipient should be outside India, place of supply should be outside India, consideration should be in convertible foreign exchange, supplier and recipient are not establishments of the same person. So in this case, if you see place of supply is in India, so it will not become export of service. When it is not an export of service, then whether GST payable or not, yes, because it will come under 75A, deemed interstate supply. Supplier in Maharashtra and place of supply in Maharashtra, not 75A, 75C. 75C, supply in India, not elsewhere specified. And once the place of supply is determined under section 13, it's a deemed interstate supply chargeable to IGST. So that is the first part in this. Now, while raising the invoice for the said consideration, the accountant of Sanmati Industries approaches you as to whether the dynamic QR code is mandatorily required on the said invoice. You are required to advise him on the same. Mitsubishi is not registered in India, means it's a B2C transaction. Whenever there is a B2C transaction, the payment should be collected by giving the dynamic QR code. So payment should be collected by scanning the dynamic QR code only. Further, the aggregate turnover of Sanmati Industries was 550 crores in the preceding financial year. So when there is a requirement of dynamic QR code in invoice, so whenever the aggregate turnover of a registered person exceeds 500 crores in any of the preceding financial year. So in this case, to Sanmati Industries, dynamic QR code concept is applicable. But where the recipient is located outside India, as the recipient is located outside India and the payment is made in convertible foreign exchange, so they cannot scan the dynamic QR code and make the payment. So the restriction of collecting the payment only by scanning dynamic QR code is not applicable in this case. We have a circular also in this regard. So CBIC clarified that whenever a transaction which is in the nature of export of service but not an export of service is chargeable to GST, means where the recipient is outside India, and when the consideration is payable from outside India, scanning dynamic QR code is not possible. Due to that reason, the restriction of or condition of collecting the money only by scanning dynamic QR code is not applicable in this case. So that is the clarification circular. So based on that circular only, this question is coined. So actually this question has two aspects. Aspect number one related to place of supply. Aspect number two related to the dynamic QR code provisions. Okay. So that is what we need to write. Thus dynamic QR code is not mandatorily required to be mentioned on invoice issued by Sanmati Industries to Mitsubishi Limited. Then question number 7. So this is a November 2020 question given for 5 marks, and I have seen the summary of examiner comments. Majority of the students, so 90% of the students have not approached this question rightly. So therefore like this type of questions might be repeated again. See, all these questions are based on little research only. So I have seen the examiner comments, even though it has been given. So but when examiners is of the opinion that this question many students did not attempt, so which means that there is a chance that asking the same question again, because this happened in May 23 exam also. So May 23 exam, so there was one question related to this Profit Petroleum, ERCC, etc. and all. So this joint venture related question. So this particular question came in November 2019 in the exam itself. But at that attempt, many students did not attempt that question. They did not write anything related to that question. So that was the summary of examiner comments that time. And what I thought, okay, maybe this question could be tested again. So I gave it in May 23 Mighty 50. So in that May 23 Mighty 50, I have given that question and same question came for 14 marks. Okay. So that's why I have selected this particular question number 7. Messrs. Houseful Convention Hall is in the business of letting out its halls for functions. It provides you with the following information for determining the amount of refund out of advance received based on the time of supply for one of its clients. So here we need to determine the time of supply. No, we are not required to determine time of supply, but it's a question related to time of supply. Advance paid at the time of booking of the hall for a function from 1st to 3rd November 2020. So 16/7/2020 advance is received 1 lakh. Additional deposit paid on 18/8/2020 for 2 lakhs. Function is held as scheduled from 1st November to 3rd November 2020. Invoice is issued. Taxable value. Taxable value means it is a value excluding GST on 25/11 for 2,50,000. Consider that there is a change in rate of tax on 15th October from CGST 2.5, SGST 2.5 to CGST 9 and SGST 9. Now what is the question here? What would be the amount of refund payable to the client? So now in this case, first you need to determine what is the time of supply when there is a change in rate of tax. First of all, section 14 is applicable or not, we need to check. Section 14 deals with time of supply in case of change in rate. For that, between 3 dates there should be change in rate. What are the 3 dates? Date of completion, date of invoice, date of payment. If you see, the date of completion here is 3rd November and date of invoice is 25th November. Date on which they received the payment is 7th and 8th, that is like 16th July and 18th August. So between these 3 dates, yes, there is a change in rate because the change in rate is from 15th October 2020. Now what you need to do? Section 14 we need to apply, and section 14 again we have, so section 14A and 14B. So in this case, which will be applicable? Is the completion before change in rate or after change in rate? We need to check. So here the completion is after change in rate. When the completion is after change in rate, so we have 2 points, whether both invoice and payment before change in rate, yes, then whichever is earlier, otherwise whichever is later. Here invoice is before change in rate or after change in rate? After change in rate, because invoice is given on 25th November, but the payment is before change in rate. So whichever is later should be taken. Whichever is later is what? 25th November 2020 will be taken as the time of supply as per section 14. And therefore what is the relevant rate as on November? What is the relevant rate? 9% is the rate. So therefore rate will be 9%. 9% will be taken as CGST, SGST, that is 18% will be taken. Now, so we determine the rate applicable. Now what is the value of supply? The value of supply is 2,50,000. So 2,50,000 into 18 or plus 18%. So 2,50,000 plus 18%, if you see, that will come to 2,95,000. But already they collected 1 lakh plus 2 lakhs. So which means that 3 lakhs already collected. So therefore, what is the question here? What would be the amount of refund? How much refund? Already 3 lakhs collected, but total amount that they need to collect is only 2,95,000. So 3 lakhs minus 2,95,000, remaining 5,000 will be given as a refund. So that is the answer for this. Therefore, refund in this case is 5,000 rupees. Now, there might be a slight variation in this question. They may change. So they may be asking, so compute the GST payable if any or refundable. So like on advance already they would have paid GST. Now they need to pay some GST. Is there any differential GST payable or refundable? Usually on advance what they would have done at the time when they received the advance, whether GST payable on advances in case of services? Yes. So therefore at the time when they received the advance, they would have already paid the GST. How much? So 1 lakh plus 2 lakhs into, at the time what was the rate? At the time the rate was 5%. So therefore they would have already paid the GST. So 3 lakhs into 5 divided by 105, because on inclusive basis, because advance whatever is collected on inclusive basis they would have already paid, because at that time the rate of GST was 5%. So therefore 14,286 they would have paid. 14,286 they would have paid already. Now what is the liability? Liability, if you see, 2,50,000 into 18%, the liability is 45,000. So therefore the differential liability is payable by this convention hall. So 45,000 minus 14,286, that is 30,714 is payable. Actually this part is not tested in the question, but like this also the question, same question, a different requirement can be given. So maybe this also can be tested, but not tested in this question. Then next one, question number 8. PQ as statutory body deals with all the advertisement and publicity of the government, and actually this is a question related to place of supply and IGST rules related to place of supply. This was an RTP question, but not yet tested in exam so far. So maybe there is a chance of asking, because place of supply connected with IGST rules they can ask. So this is related to advertisement services to government. In case of advertisement services to government, what will be taken as place of supply? So each state where the advertisement is provided will be taken as place of supply. If we have the information related to how much amount is the contract price as per contract, if we have the details, we will take that amount, that particular state. But suppose in the contract there is no information as to in which state how much amount, but the total amount is available, but the service of advertisement needs to be provided in more than one state, then we need to apportion. So the entire contract value needs to be apportioned between the states. In what basis it will be apportioned? So for that we have IGST rules, rule 3 of IGST rules. This question is based on that. PQ as statutory body deals with all the advertisement and publicity of the government. It has issued a release order to Moon Plus channel registered in state A for telecasting an advertisement relating to one of the schemes of the government in the month of September. The advertisement will be telecasted in the states A, B, C, D, E. The total value of the service contract entered into between Moon Plus and PQ is 10 lakhs. So 10 lakhs will be taken as the total value. You are required to determine the place of supply of services in the instant case as the value of supply attributable to A, B, C, D, E. Now what will be taken as a place of supply in case of advertisement service to government? Each state. So here each state A, B, C, D, E will be taken as a place of supply. So this 10 lakhs we need to apportion between these three. Now this is advertisement in what mode? So channel means advertisement in television. In case of advertisement in television, what will be taken as the base of apportionment? So we need to first divide the entire consideration between the channels. So thereafter we need to, that is a primary apportionment. Primary apportionment is based on channels, but how we need to apportion? So based on the BARC data, Broadcast Audience Research Council data for the last week of the last quarter. So you take the previous quarter, and in the previous quarter last week you will have a BARC data for each and every channel. Based on that we need to apportion first. And suppose if a particular channel is telecasted in more than one state, then thereafter based on the population census we need to divide that between the two states. So now in this case, if you see what is the period for which this advertisement is provided? September. So what is the quarter before September? April to June quarter. In April to June quarter, June last week we have the data. Yes. Viewership figures of Moon Plus channel in the last week of June as provided by Broadcast Audience Research Council. So they have 3 channels. for which they gave 50,000, 1 lakh and 50,000 as the viewership data. Now what is the ratio? If you see, ratio is 1:2:1. So this is the ratio. So now the entire 10 lakhs you divide between these 3 channels in 1:2:1 ratio. So with respect to 10 lakhs into 1/4, so 2,50,000 for channel 1, 5 lakhs for channel 2 and 2,50,000 for channel 3. Channel 1 is only in state A, so no problem. Entire 2,50,000 is the value of supply for state A. Then channel 2 is for B and C. So divide this 5 lakhs between B and C. So 5 lakhs needs to be divided between B and C on what basis? Population census. Population census is what? 180 and 20. So that is 9:1 ratio. So then 9/10, 1/10. 5 lakhs into 9/10, 4,50,000. 5 lakhs into 1/10, 50,000. Thereafter D and E. So D and E 2,50,000. So 2,50,000 we need to divide between these two. So 25 ones are, 25 fours are. So then we need to take 2,50,000 into 4/5, 2 lakhs, and 2,50,000 into 1/5, 50,000. So that's where we will be getting the amounts for all the 5 states. So state A amount is 2,50,000, state B amount is 4,50,000, state C amount is 50,000, state D amount is 2 lakhs, and state E amount is 50,000. Now after that we need to determine the nature of supply and GST liability, because they are asking us to compute the GST payable. CGST, SGST 9%, IGST 18%. Now where this channel is located, Moon Plus channel registered in state A. So supplier state A, place of supply also state A. So the first one will be intra. The first one will be intra. But all these cases it will become inter. So first one alone is intra liability, intrastate CGST, SGST, remaining and all will be IGST liability. So calculate the liability, 2,50,000 into, so 9%, that is 22,500, 22,500 CGST, SGST liability. Remaining amounts and all you take 4,50,000 plus 50 plus 2 lakhs plus 50,000, that will be 7,50,000, that is 10 lakhs minus 2,50,000 into IGST 18%. So it will be 1,35,000. So that is the liability with respect to states. And they have asked one more question here, that is compute the GST liability of Moon Plus. Also advise whether it should issue one invoice for the entire contract value or separate state-wise invoices. How many place of supplies are there? 5 place of supplies. How we can give a single invoice? We cannot give a single invoice because more than one place of supply cannot be selected in the invoice. So therefore we need to give 5 separate place of supplies. So 5 separate invoices needs to be given in this case. So that is the answer. Since there are 5 different place of supplies, so they need to give 5 separate invoices in this case. So suppose in the contract clearly it specifies, so this much is for state A, this much is for state B, like that, we go by that only. When clearly in the contract the amounts are not specified separately for each state, then only we will apply rule 3, that is apportionment with respect to whatever amount that is there in the contract, apportion between the states. Then question number 9, this is also an RTP question related to place of supply. Musicera Private Limited, owned by Nitish Dani, a famous classical singer, wishes to organize a Nitish Dani music concert in Gurugram, Haryana. Musicera Private Limited, registered in Ludhiana, Punjab, enters into contract with an event management company, Supriya Private Limited, for organizing the said music concert at an agreed consideration of 10 lakhs. So for this 10 lakhs, what is the service? The service is event management services. For event management services, first we need to determine, so what is the nature of supply and determine the GST payable, because they are asking us, you are required to determine the CGST, SGST or IGST liability as the case may be in respect of the supplies involved in the given scenario. So what is the first supply? Event management. And in this section 12 or 13 is applicable, section 12 is applicable because supplier is also in India, recipient is also in India. So section 12. As per section 12, organizing an event, so B2B, B2C, B2B location of recipient, B2C location where the event is held. Here Who is the supplier? So Supriya Private Limited is the supplier. Who is the recipient? Musicara Private Limited is the recipient, and it's a B2B because they are registered in Punjab. So in case of B2B, location of recipient will be taken as the place of supply. So the first activity is with respect to event management services, and for that event management services we need to take location of recipient, that is Punjab, as the place of supply. Supplier is located in Delhi, Supriya Private Limited Delhi, and place of supply is Punjab, therefore it is interstate supply chargeable to IGST. So 10 lakhs into 18%, 1,80,000 is taken as the answer. That's the first part. Then Supriya Private Limited books the lawns of Hotel Dum Dum Gurugram, registered in Haryana, for holding the music concert for a lump sum consideration of 4 lakhs. For this 4 lakhs, what is the transaction? That is a booking of hotel. So booking of hotel means service in relation to immovable property. Again section 12, what will be taken as a place of supply? Location of immovable property, as a property is in India. So what is the location of immovable property? Haryana is taken as place of supply. So location of supplier Haryana, that is hotel, and place of supply also Haryana, and therefore it will come under intrastate supply. So this 4 lakhs is chargeable to CGST, SGST. So 4 lakhs into 9%, 36,000. 4 lakhs into 9%, 36,000. Then next, continue further. Musicara Private Limited fixes the entry fee to the music concert at 5,000 rupees, and 400 tickets for Nitish Dani music concert are sold. So in case of sale of entry tickets, so admission to an event, what will be taken as a place of supply? Again section 12. So location where the event is held. Where the event is held? In Haryana. So what is the location of supplier? Musicara Private Limited is selling the tickets na. Location of supplier Punjab, place of supply Haryana, therefore it will be interstate supply chargeable to IGST. So how many tickets? 400 tickets into 5,000 rupees per ticket into 18%, so that is 3,60,000 will be taken as the IGST liability. Then, so will your answer be different if the price per ticket is fixed at 450? Yes, because we have one exemption. What does it say? There are certain entry tickets which are exempted if the ticket price does not exceed 500. So like entry to certain performance related, musical performance, concert, theatrical performance, dance performance. In that concert is there, ticket price does not exceed 500, exempted. Even we have certain events like circus, then we have a award function, pageant and sporting event, then admission to planetarium, like that 9 tickets. So if the ticket price does not exceed 500, it is exempted. So under that category, it will become exempted. If the price of the entry ticket is fixed at 450, then there is no GST liability, as the same is exempted. Then next, question number 10. This is an RTP May 21 question related to place of supply. Determine the place of supply in the following independent cases. Mr. Shaukar, New Delhi, boards the New Delhi Kota train at New Delhi. Mr. Shaukar sells the goods taken on board by him in the train at Jaipur during the journey. Now what will be taken as the place of supply? First we need to understand what is a transaction. Is it goods or services? It is goods. So supply of goods on board a conveyance. Supply of goods on board a conveyance as per section 10(1)(d) of IGST Act will take starting point of the goods, where the goods are loaded. So loaded at New Delhi. Sells the goods taken on board by him at New Delhi in the train at Jaipur during the journey. So therefore New Delhi, they are loading na. So therefore New Delhi will be taken as the place of supply. So starting point of the goods, location where the goods are loaded. Then number 2, Vidyut Private Limited imports electronic food processors from China for its kitchen store in Noida, Uttar Pradesh. Vidyut Private Limited is registered in Uttar Pradesh. So in case of import of goods as per section 11, the location of importer will be taken as place of supply, not location where it is imported. So what is the location of importer? Uttar Pradesh, that will be taken. Even if these goods are imported to Gujarat, but Uttar Pradesh only will be taken as place of supply, that is location of importer. And then number 3, Mr. Atmaram, a manager in a bank, is transferred from Bareilly, Uttar Pradesh to Bhopal, Madhya Pradesh. Mr. Atmaram's family is stationed in Kanpur, Uttar Pradesh. He hires Gokul Carriers of Lucknow, Uttar Pradesh to transport his household goods from Kanpur to Bhopal. Now, in this case, what is the service here? Transportation of goods service. Transportation of goods service as per section 12. Okay. If the goods are taken from India to outside India, ending point of the goods. Otherwise, B2B, location of recipient, B2C, starting point of the goods. So, in this case, so he is an unregistered person or not? So, Atmaram, he hires Gokul Carriers of Lucknow, Uttar Pradesh to transport his household goods. So, definitely he is a manager in bank, means he is an unregistered person. So, from where to where the goods are taken? So, to transport his goods from Kanpur to Bhopal. So, Kanpur will be taken as the place of supply in this case, starting point of the goods. Then number 4, Bolunath, a resident of New Delhi, opens his savings account in New Delhi branch of Best Bank after undergoing the KYC process. He goes to Amritsar for some official work and withdraws money from Best Bank's ATM in Amritsar, thereby crossing his limit of free ATM withdrawals. So, therefore, due to that reason, so GST will be payable on this transaction. And now, please try to understand, in case of banking and other financial services, section 12 we don't have any specific provision. So, general provision will be applicable. As per general provisions we will take, so B2B, location of recipient. So, is a registered person, nowhere it is given as registered person, so unregistered person. B2C, location of recipient in the records of supplier, otherwise location of supplier. Here he is undergoing KYC process, means in the bank's records recipient details are available. So, therefore, location of recipient will be taken as the place of supply. So, what is the location of recipient? New Delhi. So, therefore, for fourth case, New Delhi will be taken as place of supply. Then, fifth one, Mr. Chekmak, an architect, New Delhi, enters into contract with Mr. Jishan of Newark to provide professional service in respect of immovable properties of Mr. Jishan located in Pune and New York. So, now, in case of service in relation to immovable property, and is it 12 or 13? 13. Why 13? Who is the supplier? Chekmak, India. Who is the recipient? Jishan of New York. So, section 13. As per section 13, any service in relation to immovable property, location of that immovable property will be taken as the place of supply. So, in this case, where is the immovable property located? Pune and New York. So, Pune and New York will be taken as place of supply. But when in a single contract, partly the service is in India and partly the service is outside India, as per section 13 subsection 6, entirely the place of supply is deemed to be in India only. So, it is a single contract. Why it is single contract? Part of the supply is in India, part of the supply outside India. As per section 13 subsection 6, it is deemed that the entire supply is taken place in India and Pune will be taken as a place of supply. So, that is a reference 13.4 read with 13.6. So, Pune will be taken as place of supply in this case. To avoid this, what they should have done? They should have made a separate contract for Pune and separate contract for New York. Then in that case, with respect to contract of Pune, Pune will be place of supply. With respect to contract of New York, New York will be taken as place of supply. Then next we have question number 11. So, question number 11 is again an RTP question of May 23. May 23 RTP. Say this: Alpha is a manufacturer and supplier of a machine in India. Gamma of USA helps Alpha in selling the machine by identifying client in USA, that is Beta, who wants to purchase this machine, and helps in finalizing the contract of supply of machine by Alpha and by Alpha to Beta. So, Alpha is seller, Beta is buyer. Okay. So, Gamma is helping Alpha in selling the machine by identifying a client in USA, means Gamma is like a intermediary, an agent. Okay. Gamma charges Alpha for its services of locating Beta and helping in finalizing the sale of machine between Alpha and Beta, for which Gamma invoices Alpha and is paid by Alpha for the same. Determine place of supply of the service provided by Gamma to Alpha. So, where is Gamma located? Gamma is located in USA. And where is Alpha located? Alpha is located in India. Now, so we need to determine this as per section 13 of IGST Act. What service it is? It is intermediary services. So, we have a definition of intermediary. any person who facilitates or arranges a transaction between two parties is known as an intermediary. Here there is a transaction that takes place between two parties, that is alpha and beta, which is facilitated by gamma. So gamma will come under intermediary as per the definition. So therefore, in case of intermediary, what are the aspects? There should be a transaction between two parties, that is the main transaction, and this intermediary service should be like an ancillary transaction. So then for intermediary service, what will be taken as a place of supply under section 13? As per section 13 of IGST Act, for intermediary service, the place of supply will be location of supplier will be taken as place of supply here. So what is the location of supplier? So USA, gamma USA will be taken as place of supply. So supplier is also in USA, place of supply is also in USA. Whether any GST is payable in this case, no, but they are just asking what will be taken as a place of supply. The place of supply is USA, location of supplier will be taken, okay. And here, whether it is intermediary service or not, what are the conditions to be satisfied? First, there should be three parties and two supplies. Yes, in this case there are three parties, so alpha, beta, gamma, and two supplies. So that is one between alpha and beta, next between gamma and alpha, okay. An intermediary service provider should have the character of an agent, broker, or any other similar person. Yes, and does not include a person who supplies such goods or services on his own account. Suppose if gamma is doing the supply, if gamma purchases it, thereafter if he supplies, so then gamma will not be called as an intermediary, so gamma will be called as a separate person in this case, okay. Then subcontracting also will not be coming under, like outsourcing. Subcontracting means outsourcing. Some activity which I need to do, I outsource it to some other person. When I outsource it to some other person, so that some other person will not be called as intermediary. So outsourced or subcontracts will not come under intermediary services. So finally, what will be taken as place of supply in this case? So location of supplier because of section 13. What if it is section 12? For section 12, we don't have any specific provision for intermediary services. It is general provision, so location of recipient will be taken. So I found this question as little relevant. Maybe this can be tested because high time they have not tested this circular related to intermediary. So it's also an important question that can be tested. Then next, question number 12 is related to value of supply. In value of supply, we have rule 32. So rule 32 says in case of few transactions, so total 5 transactions. Number 1, in case of foreign exchange transaction, then in case of air travel agent, life insurance business, second hand dealer in goods, and vouchers. So we have a simplified method of valuation which is actually an optional valuation. Now this question is based on second hand dealer in goods. Minas purchased a Mini Cooper car on 12/10/2020 for 35 lakhs. The purchase of the car was financed by 70% by Smart Finance Limited for 70%. The loan was payable in 40 installments beginning with 1/11/2020. Mr. Minas defaulted in repayment of loan and Smart Finance Limited repossessed the car on 15/6/2021. The car was disposed on 12/12/2021 for 29,50,000. Determine the value of supply. So in case when a financier has repossessed the goods and sale of that repossessed goods, so is also eligible for a margin scheme under rule 32. What does the margin scheme says? Sale price minus purchase price. The difference will be taken as a value for payment of GST. But if the value is negative, no need to pay any GST. Here, what is the sale price? Sale price we got 29,50,000. How much will be taken as the purchase price? The purchase price will be taken as purchase price of the defaulting borrower. So what is the purchase price of the defaulting borrower? 35 lakhs minus 5% for every quarter or part thereof. We need to give the depreciation. 5% for every quarter or part thereof from the date of purchase till the date of sale of that repossessed goods. So what is the date of purchase? 12/10. And what is the date on which this car was disposed of? 12/12/2021. So part thereof, quarter or part thereof. 12/10 means, so that comes in one quarter, October, November, December. So that is one quarter. Again in 2021, we need to take 4 quarters. So total 5 quarters. So 5 quarters into 5%, that is 25% we need to reduce. So 29,50,000 minus 25%. So that comes to, so 20 22,12,500. What is the 22,12,500? So that is the purchase price. Sale price is what? 29,50,000. So minus 29,50,000. So that will be taken as 7 lakh, 1 second. So 25% of what? 35 lakhs. Okay, 35 lakhs minus 25% should be taken. So 26 lakhs 25,000 is taken as the purchase price, 26 lakhs 25,000, and here 29 lakh 50,000. So 29 lakh 50 minus 26 lakhs 25,000. So 3 lakh 25,000 will be taken as the value of taxable supply. So sale price minus purchase price. So that is as per rule 32. Then question number 13. So this already they have tested. So this is related to again rule 32 only. Messrs Global Travels is providing money changer and air travel agent services to various clients. From the information provided below, you are required to calculate the value of taxable supply for the month of March 2022. It had converted US dollar 6,000 into Singapore dollar 9,000. RBI reference rate at the time was 72 rupees per dollar. For Singapore dollar, it was 52 rupees. So now, here the concern has not opted to value under 32.2b. 32.2b is a slab rate model. So 32.2a, when both the currencies exchanged are foreign currencies, convert both the currencies into Indian rupees using RBI reference rate, multiply with 1%, whichever is lower will be taken as a value in this case. So $6,000 converted into Indian rupees at 72 rupees per dollar, and thereafter multiply with 1%, so 4,320. Then again Singapore dollars, so 4,320 is one value, and next another value Singapore dollars 9,000 into exchange rate as RBI reference rate 52 into 1%, 4,680. So whichever is lower, so 4,320 will be taken as the value in this case. Then second part, it had booked a domestic ticket value of 7 lakhs and international ticket value of 15 lakhs. So therefore an air travel agent is required to pay GST on 5% of the base fare in case of domestic bookings, 10% of the base fare in case of international bookings. That should be taken as a value. Here what is the domestic ticket? 7 lakhs. So in that 7 lakhs, base fare is how much? So basic airfare component under both domestic and international ticket value is 70% and 60%. So 7 lakhs into 70%. So you take, so 7 lakhs into 70%, that is 4 lakh 90. On that 4 lakh 90, we need to take 5%, that is 24,500. Again, international ticket 15 lakhs. In this, what is the base fare element? Usually in every ticket there will be 3 components: base fare, fuel surcharge, other charges and taxes. So in this 15 lakhs, what is the base fare? 60%. So 15 lakhs into 60%, that comes to 9 lakhs. On that 9 lakhs, so we need to take 10%, because 10% of the base fare in case of international bookings, so 90,000. So 90 plus 24,500, 1,14,500 is taken as the value in this case. The next question is question number 14. So in this 14th question, it is also related to value of supply, and it's a RTP November 22 question. Super Level Limited is engaged in manufacture of taxable electronic goods. It has 2 manufacturing units located in Mumbai and Nagpur, and both the units are registered under GST in the state of Maharashtra. The company has another manufacturing unit in Bengaluru, registered under GST in the state of Karnataka, and a retail showroom located in Ahmedabad, registered under GST in the state of Gujarat. The company has provided following details of activities or transactions undertaken in a tax period. So these are the details of Mumbai unit and Nagpur unit. Compute the value of supply made by Bengaluru unit as well as value of supply made by Ahmedabad retail showroom with respect to transfer of goods by these units to Equilibrium Sales, Paridhi Sales and Dara Enterprises if Super Lever Limited furnishes the following additional information for the month of October. So this is additional information. So first we need to compute the regular value of supply. So we need to take it for Mumbai unit and for Nagpur unit. Okay. So first with respect to Mumbai unit, if you see, sale of taxable goods 12,50,000. So that will be taken. And next transaction, sale of securities. Sale of securities is not a supply, so it will not come. Then the next one is sale of old factory building which was not used anymore. Sale of building, again it is not a supply, so 12,50,000 so far. Then Nagpur unit, if you take sale of taxable goods 13,50,000, 1,08,000 interest on fixed deposits, it is exempted. And sale of agricultural land, sale of land is also excluded from supply. Then transfer of actionable claims other than lottery, betting, gambling is also not a supply. So 12,50,000 and 13,50,000. Now first transaction, if you see, Bangalore unit has appointed Equilibrium Sales as its sole selling agent. So actually there is a confusion as to whether sole selling agent is related party, so rule 28 should be taken, or for principal agent transaction we have rule 29, whether 29 to be taken. Simple, sole selling agent will always be related and prefer specific over general. 29 is general, any principal to agent, but sole selling agent being related, so we need to apply 28 only in this case. So for this we need to determine the value as per rule 28. Bangalore unit has appointed Equilibrium Sales as its sole selling agent. Equilibrium Sales sells the electronic goods of Bangalore unit under the invoice issued in its own name. The Bangalore unit transferred the goods costing 7,25,000 to Equilibrium Sales on 20th October, which were sold by Equilibrium Sales on 31st October at 7,65,000. On 20th October, another electronic goods manufacturer supplied the goods of like kind and quality to Equilibrium Sales as the one supplied by Bangalore unit at a price of 7,75,000. Now, here what should be taken? First, if recipient is eligible for full ITC, open market value is deemed to be the transaction value. We don't have that point whether recipient is eligible for full ITC. And another point is there, resale price into 90%. What is the price at which? So this Equilibrium Sales is subsequently selling, so 7,65,000. So 7,65,000 into, so we will take 90%, so that is what, 6,88,500 will be taken here as value. So what will be taken as a value in this case? 6,88,500. So you can see here. So first one, 6,88,500, 90% of the resale price. Okay. And so when we have like kind and quality, but sir, like kind and quality, no. Whenever we go for that option of 90% of the resale price and that value itself is less, why you need to talk about the like kind and quality? That you don't have to. So 6,88,500 will be taken as a value in this case. Then next, number 2, the retail showroom at Ahmedabad transfers goods costing 85,000 to its agent Paridhi Sales on 12th October. So agent, so therefore we need to determine value as per rule 29. And measures Paridhi Sales on 12th October. Paridhi Sales sells such goods on 18th October at rupees 5 lakhs under the invoice issued in the name of retail showroom at Ahmedabad. On 17th October, Paridhi Sales has sold goods of like kind and quality as the one supplied by the retail showroom at Ahmedabad to an unrelated customer at 4,70,000. The retail showroom at Ahmedabad also transferred to another agent. Okay, so in case of principal agent transaction, we will take open market value or 90% of the resale price. What is the open market value in this case? So Paridhi Sales sells such goods on 18th October. So what is the date on which they are selling? 12th October. So open market value will be on the same date. So therefore this 18th October transaction will not be taken. And on 17th October, Paridhi Sales sold goods of like kind and quality. Yes. So resale price into 90%. What is the resale price? 4,70,000. So 4,70,000 into 90%. So that will be 4,23,000 will be taken in this case. Okay. So 4,23,000. Since Paradhi sells the goods under the invoice issued in the name of retail showroom. So again, we need to check here whether the agent is acting on behalf of the principal. So see this line. So Paradhi sales is making supply in the name of retail showroom at Ahmedabad. Means Paradhi sales is not acting on behalf of principal. So when they are not acting, because when an agent will be acting on behalf of principal, when they are raising invoice in the name of the agent, then the agent is acting on behalf of principal. In this case, they are not acting as agent on behalf of principal. Consequently, it will not come under supply. So GST not payable in this case. So then next one, the retail showroom at Ahmedabad also transfers goods costing 95,000 to its agent Dhara Enterprise on 15th October. Dhara Enterprises sells such goods on 20th October under the invoice issued in its own name. Means own name of the agent. So in that case, what we will do? Principal agent transaction will become supply, and on 19th October, Dhara Enterprises sold the goods of like kind and quality as the one supplied by retail showroom at Ahmedabad to an unrelated customer at 98. So 98,000 into 90%, that is 88,200 will be taken. So 98,000 into 90%, 88,200, that will be taken as a value in this case. Okay. So that is with respect to this question, and here, these points are unnecessary. Sale of securities, interest and all, everyone knows that. So that will be exempted or not a supply, that will not be taken. So that is the value here. Thus the value of supply of Bangalore unit is 6,88,500 and retail showroom at Ahmedabad will be 88,200. Okay. Apart from this other activities, then next question number 15, this is also related to value of supply. MTP May 23, G1 Life Insurance Company has collected premium from policy subscribers. It does not intimate the amount allocated for investment to the subscribers of the policy at the time of supply of insurance services. So in case of rule 32, life insurance, what will be taken as a value? If it is risk cover policy, 100% of the premium. If it is reinvestment policy and the amount allocated for investment is communicated to the policyholders, then premium collected minus amount allocated for investment. And if it is single premium annuity policy, 10% of the single premium. If it is any other life insurance policy, first year premiums into 25%, subsequent year premium into 12.5%. Here, they did not communicate to the policyholder at the time of issue and collection of premium that how much amount they are allocating for investment. Then in that case, so we will treat it like a regular policy only. First, premium only for risk cover, take entire 25 lakhs. Premium from new policy subscribers. New policy subscribers, so we need to take 25% and renewal premium will be taken as 12.5%. So 40 lakhs into 12.5%, 25%, 10 lakhs and 80 lakhs into 12.5% also 10 lakhs. Then single premium annuity into 10%. So 1 crore into 10%, 10 lakhs. So total 55 lakhs will be taken as the value in this case. First we need to write the provision of rule 32 and thereafter we need to arrive at the value that is payable. So the next question that we are going to discuss is question number 16. So this question was asked in old syllabus CA final November 18 for 10 marks. Quanto Enterprises is not required to register under CGST Act. However, it applied for voluntary registration on 17 September. Registration certificate has been granted to the firm on 25th September. So when are they applying for registration? 17 September, that's a voluntary registration, and they have been granted a registration certificate on 25th of September. The CGST and SGST liability of the firm for the month of September is 24,000 rupees each. The firm is not engaged in making interstate outward taxable supplies. Okay. So now Quanto Enterprises provides the following information regarding capital goods and inputs held in stock by it as on 24th September. So this 24th September is what? So this is immediately before the date they got the registration certificate. So we have some details of inputs which is lying in stock, etc. Now what is that we need to find? You need to compute the net GST payable from electronic cash ledger by Quanto Enterprises for the month of September. So here what we need to understand is that section 18 subsection 1 clause B says that whenever a person is getting registered, so before the date they got the registration certificate, whatever is the closing stock that they have, on that closing stock GST paid can be availed as ITC. So here, what is the meaning of closing stock? Raw material as such held in stock, and inputs in the form of WIP held in stock, inputs in the form of FG held in stock, and on capital goods. But capital goods full credit cannot be taken. So for capital goods we cannot take the credit at all in case of 18(1)(b). So for 18(1)(c), 1(d) only capital goods credit can be taken, but in case of 18(1)(a), 1(b) we cannot take. 1(a), 1(b) is what? So when a person is liable to get registered and they are making application for registration within 30 days, 1(b) is a person who is voluntarily getting registered. So in this case, if you have any capital goods, on that capital goods ITC cannot be taken. Whereas inputs procured on 2nd September. So as on 24th September, 2nd September purchase. So is it within 1 year? Because we can avail the ITC on inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, provided those inputs are purchased within 1 year prior. So in this case, what is that? It is within 1 year prior. So 24th September, 2nd September, yes, of course it is within 1 year prior. So this 4,500 and 4,500 can be availed as ITC. Inputs received on 21st July. So 21st July to 24th September, again within 1 year, contained in semi-finished goods. So yes, this 7,500, 7,500 also can be availed as ITC. Value of inputs contained in finished goods held in stock 2 lakhs. Such inputs were procured on 19th September last year. So what is the closing stock date? 24th September. But purchased 19th September last year, definitely we cannot take ITC with respect to this. Why? Because the goods should have been purchased within 1 year prior, means invoice date to the closing stock date should be within 1 year. It is beyond 1 year. So therefore this 36,000 cannot be taken. Then inputs valued at 50,000 procured on 13th September lying in stock. 13th September is within 1 year. So this 9,000 can be taken. So this 4,500, 4,500, 7,500, 7,500 and this 9,000. These three things can be taken as ITC. That is with respect to this. So ITC is how much? If you see, so 4,500, 4,500, 7,500 and 7,500 and 9,000. So see the total of this. So 4,500 plus 7,500 is 12,000. So 12,000, 12,000 and 9,000 can be taken as credit. Now, what is their liability? If you see, that is given in the question itself. The CGST and SGST liability of the firm for the month of September is 24,000 rupees each. So CGST liability 24,000, SGST liability 24,000. So we need to take 24,000 and 24,000 as the liability minus ITC. So first, which ITC we need to exhaust? IGST credit. How much is the IGST credit that we have? So 9,000 IGST credit we have. We can use it for payment of any liability. So because CGST, SGST credit is going to be the same. So therefore any liability we can use. So I will be using it for CGST, IGST credit. Then CGST liability 12,000, SGST liability 12,000. So the answer is 3,000 CGST, 12,000 SGST. Is there an alternative answer? Yes, possible. So it can be like 12,000 CGST and 3,000 can be SGST liability. So any alternative answer is possible, but the total of this liability should be equals to 15,000. So then our answer will be correct. So therefore, we need to first write about the provision related to 18(1)(b) and then you need to apply this information into the provision and arrive at the answer. Okay, so that is with respect to this. And then one more point in the previous questions, so maybe you may get a doubt related to that. That is, we did one question, one 14 marks question. In that 14 marks question, why we have not applied rule 86B? So that query you may get. So what is this rule 86B? Whenever my turnover in a month exceeds 50 lakhs, then even though I have sufficient balance in electronic credit ledger, I have to pay 1% of my gross liability through electronic cash ledger. Now if you see this question, I think this is question number 2. In this question number 2, if you see, so what is our turnover? While computing the turnover, we should take out the exports. So exports should not be taken. Purely taxable turnover only should be taken. So 14 lakhs plus 6 lakhs and exports will not be taken. Car rental 50 and 2 lakh 50. So whether it exceeds 50 lakhs, the turnover, no. As the turnover does not exceed 50 lakhs in a month. So for this month, we have not applied that rule 86B. Okay. So but in every question, you please be careful whenever you get the turnover related information and computation of net GST payable. So ensure that 1% of our liability we have to pay through cash ledger if turnover in a month exceeds 50 lakhs. Now this question also, if you see here, we don't have the turnover information, so that's the reason why we are not applying rule 86B. Then look into the next question, that is question number 17. This question number 17 is related to manner of availment and utilization of input tax credit in respect of inputs and input services as per rule 42. So say this. So this is also one old exam question. Van Shopee is a registered supplier of both taxable and exempted goods registered under GST in the state of Rajasthan. Van Shopee has furnished the following details for a month. So we have got taxable goods 50 lakhs and non-taxable goods 10 lakhs. So taxable goods 50 lakhs and non-taxable goods 10 lakhs we have got, and non-taxable means that will come under exempted goods. Details of goods purchased for being sold in the shop, taxable goods 45 lakhs. So this is the purchase details. And what is the question here? So we need to compute the net GST payable, how much ITC that we avail in the electronic credit ledger, etc. And you need to remember the template related to this. What is the template? So first we need to take T. So T refers to total ITC on all inputs and input services. And thereafter we need to reduce from this T minus T1. What is T1? Inward supplies used for non-business purpose, and minus T2. So what is T2? Inward supplies used for exempted outward supply, minus T3. So T3 is what? Blocked credit. Now what you get is known as C1, that is ITC availed in GSTR 3B. From this C1, if you reduce T4, what is T4? Inward supply used for taxable and business purpose, that is T4. Now what you get will be C2. C2 is common credit, and now this C2 common credit. So if you take D1, so D1 is what? Common credit attributable to exempted supply. How to calculate? C2 into E by F, and then minus D2. D2 is what? Common credit attributable to non-business purpose. How to calculate? Common credit into 5%. So this is the template that you need to remember. Now whenever you are seeing the inward supplies, accordingly you segregate between T1, T2, T3 and T4. T1 is what? Non-business. T2 inward supply used for exempted. T3 blocked credits. T4 inward supply used for taxable and business purpose. Here we purchase some goods for being sold in the shop. Taxable goods 45 lakhs. So this will be coming under T1. And then goods not leviable to GST. First of all, we are not paying GST, so it will not come in T itself. So this we can safely ignore. Then details of expenses. Monthly rent payable for the shop 3,50,000, and this monthly rent which is payable for the shop is going to be common, because in the same shop we are selling taxable goods as well as exempted goods. So therefore it is a common credit, so we cannot segregate it anywhere. Then telephone expenses paid 30,000 for landline phone installed at the shop and 20,000 towards mobile bills of the employees. Mobile phones are given to employees for official use. Again in this GST we are paying, but we cannot segregate it anywhere because it is common, used for both taxable and exempted supplies. Then audit fees paid to a chartered accountant, 35,000 for filing income tax return and statutory audit of preceding financial year, and 25,000 for filing GST return. Yes, GST paid and we can avail it as ITC, but only thing, it will go into the common credit. Then premium paid on health insurance policies taken for specified employees of the shop as per company policy. So life insurance and health insurance is blocked credit. ITC not available with respect to this. So due to that reason, this will be coming under T3. Then freight paid to GTA for inward transportation of goods not leviable to GST. So therefore this will be coming. First, are we paying GST? Yes, we are paying GST under RCM. So this GTA services, because if you see GTA services, so assume wherever applicable for the purpose of reverse charge payable, the CGST, SGST rates are 2.5, 2.5 and IGST 5%, which means this GTA service will be coming under RCM, but we pay GST, and this is used for what purpose? So goods not leviable to GST means exempted supply. Inward supply used for exempted supply, so it will be coming under T2. Then freight paid to goods transport agency for inward transportation of taxable goods, so it will be coming under T4. First we are paying the freight and the GST also paid, but it is fully used for taxable. So we can take full credit, that is T4. Goods given as free samples, not including the taxable goods value of 45 lakhs. So here some 45 lakhs is there na, in that it is not included. Why this point is given? So we have one point. If purchased goods are distributed as gifts or free samples, ITC not available with respect to this. However, if the purchased goods which is distributed as gifts or free samples becomes supply, then we can take ITC on the gifts and free samples purchased. Okay. So generally, when I purchase some goods and distribute it as gifts or free samples, I cannot take ITC on the inward supply. But if that gifts or free samples become supply and GST payable, then I can avail the ITC with respect to that. So that point is not applicable here. Okay, so which means it's a blocked credit. So first we pay GST, but it will be coming under blocked credit. We cannot take ITC with respect to this. Then, so we segregated this now. All the above amounts are exclusive of all kind of taxes wherever applicable. All the purchases and sales made by Van Shopee are within Rajasthan, means everything will be intrastate. All the purchases are made from registered suppliers. All other expense also incurred within Rajasthan. And what is the rate of GST? Wherever RCM comes, then only it will be 5%. Otherwise, the rate of GST will be 12%. There is no opening balance in the electronic cash ledger or electronic credit ledger. Subject to the information given above, assume that all other conditions necessary for availing ITC have been fulfilled. First, we need to take T. What is T? Total GST paid on inward supply. What is the total GST paid on inward supply? This is outward supply data. So for the time being, this is not required. So inward supply, first 45 lakhs. On that 45 lakhs, so we will be paying 45 lakhs into, so first we take regular full rate and thereafter finally we can divide, or from the beginning also we can take that separately. So we need to create a template. So in the template we need to properly write. This is like a working note. Okay. So this is like a working note, and properly we need to write each and every point, and thereafter CGST, SGST like that we need to show, and finally we need to arrive at the answer for that. Okay. So in this working note, T. What is T? So 45 lakhs. So we are paying GST. What is the rate of GST? The rate of GST that we pay on 45 lakhs will be 12%. So 45 lakhs into 12%, 5 lakh 40,000. So we will save that. And next, 3 lakh 50,000 also we pay GST. Again, how much? 12%, because on all supplies it will be 12% except under RCM. So monthly rent 3 lakh 50 into 12%. So that also we keep 42,000. And then we have 50,000. On this 50,000 also 12% we pay, so that is 6,000, that also we will be keeping. Then audit fees paid to chartered accountant 60,000, so 60,000 into 12%, so that will be 7,200, that also we keep in memory. Okay. And then premium paid on health insurance, first we are paying GST, so 10,000 into, so 12%, that is 1,200 M plus, and then freight paid to GTA. So these two things will be under RCM 5%. So 1 lakh 50 plus 50, 2 lakhs. So on the 2 lakhs we need to pay GST 5%. So and we will keep it in the memory. And then finally goods given as free samples, on that also GST paid. So 5,000 into 12%, that will be 600 M plus. Now MRC. So 6 lakh 7,000 is the total GST paid on inward supply. The total GST paid on inward supply is 6 lakh 7,000. So hope you understood how we got this 6 lakh 7,000. So the 6 lakh 7,000 is based on, whatever GST, that is T1. Okay. So thereafter, after the 6 lakh 7,000, we need to see T1. What is T1? So this is actually fully used for taxable. So T4. So this 45 lakhs fully used for taxable. So T4. So therefore that will not come under T1. So we don't have anything in T1. Then T2 we have. So how much? 50,000. On this 50,000, how much GST we paid? 5%. So 50,000 into 5%, 2,500. So the 2,500 we will keep under T2. Inward supply used for exempted outward supply. Then T3. So what is T3? This 10,000 and this 5,000. So 15,000. On this 15,000, so we are paying 12%. So that will come to 1,800. So that will be T3. Now the balance is known as C1, that is ITC availed in GSTR 3B. How much is ITC availed in GSTR 3B? 6 lakh 7,000 minus 2,500 minus 1,800. So that will come to 6 lakh 2,700 will be ITC availed in GSTR 3B. Then T4. Out of this, which is exclusively used for taxable, so 45 lakhs plus even this GTA 1,50,000. So 45 lakhs into 12%, that is 5,40,000, and this 1,50,000 into 5%. Okay, so 1,50,000 into 5%, 7,500. So total 5,47,500. 5,47,500. If you reduce, that will be known as common credit. So what is a common credit? 6,02,700. 6,02,700 minus this. So 55,200 is the common credit. Now in this common credit attributable to exempted supply, what is a common credit attributable to exempted supply? If you see here, the exempted supply is 10 lakhs and the total supply is 60 lakhs. So therefore common credit is 55,200 into exempted outward supply 10 divided by total, that is 60. So that will be 9,200. So D1 is 9,200 common credit attributable to exempted. Is there any common credit used for non-business purpose? Nothing. Everything is used for business purpose only. Here nothing is used for non-business purpose. So the C2 into 5% will not arise. So when C2 into 5% will arise, out of this inward supply, if we have any one inward supply used for non-business purpose, then it will be coming. So now we have to answer based on this working note. First, what is the input tax credit credited to electronic credit ledger? That is C1. How much is credited? 6,02,700. 6,02,700. You can divide that into 2. CGST, SGST. So 6,07,200 divided by 2. That is 3,03,600. 6,02,700 divided by 2. Sorry, 3,01,350. 3,01,350. 3,01,350 will be taken. The next question that we have is common credit available for apportionment. So what is a common credit here? C2. So C2 is 55,200. So that 55,200 is the common credit available for apportionment. And again that also you can divide and show. 55,200 divided by 2. That is 27,600 CGST and 27,600 SGST. Now ITC attributable towards exempted supplies out of common credit. So out of this common credit, what is the ITC attributable to exempted supplies? 9,200. So that 9,200, so how we got 9,200? Common credit into E by F. So therefore 9,200 is the common credit attributable to exempted supplies. That also you can show as a division. 9,200 divided by 2, that is 4,600 and 4,600. Now net GST payable from electronic cash ledger. So here if you see, so all these numbers we got 3,01,350. So 3,01,350 and 3,01,350 is the ITC credit to electronic credit ledger minus 4,600. 4,600 is what? So that is this common credit attributable to exempted supply. Now what is the net eligible ITC? So the net eligible ITC, if you see, 3,01,350 minus 4,600. 3,01,250 minus 4,600, that will come to 2,90,000 net eligible ITC. Net eligible ITC is 2,96,650. CGST 2,96,650 SGST. Now, what is the gross GST payable under FCM? So here taxable goods is how much? 50 lakhs. On that 50 lakhs, GST liability is how much? 6%, 6%. So gross GST payable will be, so total here we have under FCM 50 lakhs into 6%. So 3 lakhs and 3 lakhs. And thereafter ITC, what is ITC? Net ITC 2,96,650. So the 2,96,650 if you reduce, so we will be getting, so 3,250 plus RCM liability. What is the RCM liability? Only 2 are RCM, 50,000 and 1,50,000, that is 2 lakhs. So 2 lakhs into 2.5%. So 2 lakhs into 2.5% is what? 5,000. So therefore that 5,000 will be RCM liability 5,000, 5,000. So now 3,250 plus 5,000, 8,250 will be the total GST payable. That is GST payable through electronic cash ledger. So that is with respect to this purely application of rule 42. So if you remember this template, easily you will get the answer. Any difficult question, just segregate it between T1, T2, T3, T4, you will be able to get it. Then the next question, question number 18, it is an MTP question. Actually it came in RTP, thereafter in MTP, but in the main question it is not a task, main exam it is not a task. So it's a very good question. Mr. Rajesh Surana has a proprietorship firm in the name of Surana and Sons in Jaipur. The firm registered under GST in the state of Rajasthan manufactures 3 taxable products M, N and O. Tax on N is payable under reverse charge. So N is a product which is covered under RCM. The firm also provides taxable consultancy services. So when N is covered under RCM, we have the meaning of exempted supply which says that, so whenever we have outward supply that is covered under RCM, that will be treated as exempted supply for the purpose of availment of ITC. For the purpose of availment of ITC, what is the meaning of exempted supply? First, notified as exempted. Number 2, nil rated. Number 3, non-taxable. Then supply covered under RCM. And thereafter we have sale of land, sale of building and sale of securities. So these are the 7 transactions which will be treated as exempted for the purpose of ITC, and one exempted supply will be treated as taxable for ITC. What is that? Interest. Interest on loans, advances, deposits, other than for a bank, financial institution or NBFC, even though it is exempted for payment of GST, but for availment of ITC it will be treated as taxable. So now here we have turnover of M excluding export sales 14 lakhs. And turnover of N, turnover of O. Now all this data is given. Now what is that we need to find in this case? With the help of the above mentioned information, compute the net GST payable of Surana and Sons payable from electronic credit ledger and or electronic cash ledger as the case may be for the tax period. Assume that the rate of GST on goods or service is 12% and 18% respectively. On goods the rate of GST 12%, on services it is 18%. We need to compute the net GST payable, and we have some information. Turnover of Surana and Sons was 85 lakhs in the preceding financial year. Now what we need to do is that we need to first prepare a working note. In that working note you need to take each and every transaction. So first you need to see what is the supply that is given and what is the value, and for payment of GST what it is, and for availment of ITC what it is. Like that we need to prepare a table. So see this, first we need to prepare a working note. In that working note we need to take, so what is the activity that is given, what is the activity and what is the value of that activity, and thereafter for payment of GST, what it is, and for availment of ITC, what it is. So like that we need to prepare a table, and once we prepare this table, so thereafter it will be easy for us. So first one we need to take what is the activity. So the first one is turnover of M. So M is a normal product 14 lakhs on which GST will be payable. Being goods, the rate of GST will be 12%. So turnover of M. So what is the value here? 14 lakhs, and that 14 lakhs will be taxable at, so this is actually taxable for payment of GST, taxable. When it is taxable for payment of GST, even for availment of ITC also it will become taxable. And what is the GST that is payable? 14 lakhs into 12%, that is 1,68,000 will be the GST payable. And thereafter we have turnover of N. So that is 6 lakhs. N is a product covered under RCM. So therefore turnover of N, that is 6 lakhs. For payment of GST, it is not taxable in the hands of the supplier, it is taxable in the hands of the recipient, but for availment of ITC, it will be treated as exempted. And thereafter turnover of O, 10 lakhs. O is a normal product taxable under FCM. So therefore turnover of O. So turnover of O is how much? 10 lakhs. So turnover of O 10 lakhs, and it will be taxable. So the rate will be 12%. So 1,20,000. Even for ITC purpose, it will be treated as taxable. And then export of M with payment of IGST. So it is not under option 2, it is option 1. Upon payment of IGST, 2,50,000. So So we have export of M upon payment of IGST. So export of M, what is the value? 2,50,000 upon payment of IGST. So therefore it will be taxable and we will pay IGST. Again this is goods only. So 2,50,000 into 12%, that is 30,000. Even for availment of ITC it will be treated as taxable. And then we have export of O under a letter of undertaking, which means without payment of GST. So what is the value? 10 lakhs. So export of O 10 lakhs, and actually it is zero rated and we are not going to pay any GST, but for ITC purpose it will be treated as taxable, it will not be treated as exempted. Then consultancy services provided to unrelated clients located in foreign countries. In all cases, the consideration has been received in convertible foreign exchange. Whether we are going for upon payment of IGST or without payment of IGST, actually this is an assumption that can be taken. But remember, usually when the question is silent, we can take an assumption that usually we can take an assumption that it is export without payment of IGST under bond or LUT. So that assumption we can take. No sir, but bond or LUT not given. I want to take the other assumption. Other assumption also you can take, but you need to write clearly in the note. But I will recommend you to take the assumption it is export without payment of IGST. So that is the assumption which they have taken in this question. So therefore this 20 lakhs consultancy services, export of services, so that export of services 20 lakhs, so again it is zero rated without payment of GST, but it will be treated as taxable for ITC purpose. And then we have sale of building. Sale of building, actually it is not a supply, but for ITC purpose it will be treated as exempted supply. How much should be taken as the value of sale of building? Here sale of building excluding stamp duty of 2.5 lakhs being 2% of the value. Usually land building should be recorded at stamp duty value. What is the stamp duty value? If 2% of the value is 2,50,000, then what will be the 100%? So that should be taken, that is 2,50,000 divided by 2%. So sale of building, how much should be taken as the value? So 2,50,000 divided by 0.02, that is 1,25 lakhs will be taken as a sale of building. Actually it is not a supply, we don't have to pay any GST, and for ITC purpose it will be classified under exempted. Then interest received, and that too when sale of building is excluded from supply if the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Interest received on investment in fixed deposits with the bank, that is how much? 4 lakhs. Actually interest should be treated as exempted for payment of GST, but for ITC it will be treated as taxable for a person other than bank, financial institution, NBFC, and here Rajesh Surana is a proprietorship firm, so therefore it will be treated as exempted for payment of GST. For ITC purpose it will be treated as taxable. So interest on fixed deposit. Interest on fixed deposit. What is the value of interest on fixed deposit? Interest on fixed deposit is 4 lakhs and it will be treated as exempted for payment of GST, but for ITC purpose it will be treated as taxable. Then sale of shares. In case of sale of shares, we need to take 1% of the sale value. So what is the sale value? 2 crore 50 lakhs into 1%. So that will be 2,50,000 will be taken. So sale of shares. In case of sale of shares, 2,50,000 will be taken as the value, and it is not a supply, but it will be treated as exempted supply. Actually 3 things which are not a supply treated as exempted: sale of land, sale of building, and sale of securities. And in case of sale of land and building we need to take stamp duty value. In case of sale of securities we need to take 1% of the sale value of that securities. And thereafter we have legal services received, that is received, and common inputs and input service, that is also inward supply. Now outward supply wise, so this much is only the outward supply that we have, and for this outward supply we need to determine what is the total. Okay, so now you see the total of this. What is the total of this amount column? So 14 lakhs plus 6 lakhs plus 10 lakhs plus 2,50,000 plus 10 lakhs plus 20 lakhs plus 1 crore 25 lakhs plus 4 lakhs plus 2,50,000. So 1 crore 94 lakhs is the total turnover. And what will be treated as the exempted turnover? So what is the total turnover? This is for payment for ITZ purpose. For ITZ computation, what is the total turnover? The total turnover will be 1 crore 94 lakhs. Then what you need? Exempted turnover, because how to calculate the common credit attributable to exempted supply? Common credit into exempted turnover divided by total turnover. So what will be taken as the exempted turnover? So the exempted turnover here, if you see, only the exempted components alone you take. Exempted, 3 exempted is there, that is 6 lakhs. Supply covered under RCM, and thereafter 1 crore 25 lakhs sale of building and 2 lakh 50,000. So therefore 1 crore 33 lakh 50,000 will be taken as the total turnover and exempted turnover. Now what is the question that is involved here? The question is compute the net GST payable. So now we got the gross liability. What is the gross liability? The total of this column. Already we computed wherever GST is payable. So 1,68,000 plus 1,20,000 plus 30,000. So that will be 3,18,000. So the 3,18,000 is the gross GST payable, and thereafter we need to calculate the net liability. For that, first ITC computation we will see. So what are the inward supplies that we have? Inward supplies, if you see, legal services received from an advocate in relation to product name 3,50,000. Services provided by advocate firm or advocate to a business entity whose turnover during the previous year does not exceed threshold limit for registration is exempted. But in this case, the turnover of Surana Industries was 85 lakhs in the preceding financial year, which means turnover exceeds the threshold limit. Therefore, the said activity of legal service will be taxable. Also, this legal service is exclusively used for manufacture or like making product M, which means full ITC is available. It will come under T4. So we don't have to do any reversal with respect to this. So entire ITC will be available. So but we need to pay this GST under RCM because legal services will be covered under RCM. So legal services with respect to product M, how much is the GST on this legal services? 3,50,000, and this being service, rate of GST is 18%. So 3,50,000 into 18%. So 3,50,000 into 18%. Remember, the 63,000 should also be coming under RCM. So this will also come under RCM liability. And thereafter we have some inputs. What is the value of that inputs that we have? Inputs, if you see, 35 lakhs, input services 15 lakhs. So inputs you take, inputs will be, so 35 lakhs, inputs will be 35 lakhs. So 35 lakhs into 12%. So 35 lakhs into 12%, 4,20,000, and input services. So what is the value of that input services? 15 lakhs. So 15 lakhs into 18%. So 15 lakhs into 18% will be 2,70,000. So this is the ITZ availed. So ITZ availed, if you see, 2,70,000 plus 4,20,000 plus 63,000. So that will be 7,53,000 is the ITZ availed minus ITZ reverse. So what is the ITZ that is reverse? First common credit you take, 4,20,000 and 2,70,000 is the common credit. 4,20,000 plus 2,70,000 into exempted turnover divided by total turnover. What is the exempted turnover? 1 crore 33 lakh 50,000 divided by 1 crore 94 lakhs. 1 crore 94 lakhs. So this is the ITC to be reversed. So 4,20,000 plus 2,70,000 into 1,335 divided by 1,940. So that will be 4,74,819.5. So 820 we will reduce. So remaining is the net ITC available for set off. Net ITC available for set off. So that will be 7,53,000 minus this. So 2,78,180. Now we will see the net GST payable. So gross GST under FCM. So what is the gross GST under FCM? So we have already calculated that 3,18,000. So 3,18,000 is the gross GST under FCM. minus ITZ. So what is the ITZ available? 2,78,180. Thereafter add RCM liability. RCM liability, what is the RCM liability that we have? So the RCM liability is 63,000. So now you will get this as the net GST payable using electronic cash ledger. So 3,18,000 minus 2,78,180 plus 63,000. So that will come to 1,02,820 will be taken as net GST payable. So the answer is 1,02,820. So say this. 3,80,000 is the gross GST payable, and thereafter we have the net GST payable computation, total GST payable from electronic cash ledger 1,02,820. So like this we need to arrive at the answer for this question. So remember this template, so this will be easy even we don't have multiple steps involved. So in a single working note, and thereafter you can arrive at the answer for this. That's about question number 18. To have a look into question number 19, We Supply Private Limited is a registered manufacturer of auto parts in Kolkata, West Bengal. The company has manufacturing facility registered under Factories Act 1948 in Kolkata. It procures its inputs indigenously from the registered as well as unregistered suppliers located within as well as outside West Bengal, as also imports some raw material from China. So they have given a lot of details here, and all these are the payments, which means those are with respect to inward supplies, and receipts, that is only one, that is outward supply. And with respect to these inward supplies, they have given a big breakup, and what they are asking us is compute the ITC available with We Supply Private Limited for the tax period and the net GST payable. So let's analyze these transactions. First, we have raw material 3.5 lakhs. Related to this 3.5 lakhs, they gave a breakup. Raw material amount to 0.8 lakhs is procured from Bihar, and 1.5 lakhs is imported from China, and basic customs duty of 0.15 lakhs, social fare surcharge of 0.015 lakhs, and integrated tax of 0.2997 lakhs are paid on the imported raw material. Then remaining raw material is procured from suppliers located in West Bengal. Out of such raw material worth 0.3 lakhs is procured from unregistered suppliers. So first, what is the total raw material? We have 3.5. In this 3.5, 0.8 is procured from Bihar. Okay. So in this 3.5, we have a breakup. 0.8 lakhs is procured from Bihar, and 1.5 lakhs is imported from China, and remaining raw material is procured from other suppliers located in West Bengal. Out of that, raw material worth 0.3 is procured from unregistered suppliers. So 0.3 is procured from unregistered suppliers. The remaining raw material is procured from registered suppliers. Okay. So further, raw material worth 0.5 lakhs purchased from registered suppliers located in West Bengal has been destroyed. Okay. So this 0.3 is from URP. Then what is the remaining from RP? Because they are giving 0.3 is from unregistered suppliers. So remaining is from registered. So you take 3.5 minus 0.8 minus 1.5 minus 0.3, and remaining is 0.9. In this 0.9, 0.05 is destroyed. So this is from registered person. In that 0.05 is destroyed. So has been destroyed due to seepage problem in the factory, thus could not be used in the manufacturing process. So definitely on that 0.05 we cannot take ITC. So on remaining only we can take ITC. First, 0.8 lakhs procured from Bihar. So where is this person located? Kolkata, West Bengal. So procured from Bihar means that's an interstate inward supply. On that IGST is paid, and the rate of IGST given here is 18%. So we are analyzing this raw material procured from Bihar. So what is that raw material procured from Bihar? So that is 0.8 lakhs. 0.8 lakhs means 80,000. 80,000 into what is the rate of GST? 18%. So 14,400, that will be IGST. And thereafter we have raw material imported 1.5 lakhs. In that raw material imported, only IGST paid can be taken as ITC. So what is that IGST? 0.2997 lakhs. So 29,970 IGST. Then thereafter, raw material procured within the state from unregistered person. First of all, we are not paying any GST. Consequently, we cannot take ITC with respect to that. So 0.3, so there is no GST, we cannot take any ITC. So therefore, that 0.3 nil. And then 0.05 raw material destroyed due to seepage problem. So we have blocked credit. Any goods purchased which are lost, destroyed, written off, etc. we cannot take ITC with respect to this. So 0.05 also gone. So what is the remainder? So 0.9 minus 0.05, so that will be 0.85, and that 0.85 is purchased within Bihar. 0.85 lakhs means what? 85,000. 85,000 into what is the rate of CGST? 9%. So that is 7,650 CGST and 7,650 SGST. So that is with respect to this. So raw material portion completed. Then next consumables. Consumables is 1.25. Related to consumables, one point is given. Consumables are procured from registered suppliers located in Calcutta and include diesel worth 0.25 lakhs for running the generator in the factory. Definitely on diesel there is no GST paid, on remaining only. So what is it? Consumables total 1.25. 1.25 minus 0.25. So what is the remainder? 1. On that one, that too, where is it procured? In Kolkata. So within the state. So 1 into 9%. So that is 9,000 and 9,000 is the CGST, SGST. So that consumables part is also over. Then next, transportation charges. So we have some transportation charges for bringing the raw material to the factory, 0.7. For that they gave comprise of 0.6 lakhs paid to GTA in Kolkata and 0.1 lakhs paid to horse pulled carts. Horse pulled carts means what? Other than goods transport agency or courier agency, transportation of goods by any mode in roadways, okay, roadways in any mode other than GTA or courier agency will be exempted. So therefore this 0.10 will become exempted. So remaining is what? 0.50, on which GTA rate is 5% and this transportation charge is within the state. So 2.5. So 0.5 lakhs means what? 50,000 into 2.5%, that is 1,250 and 1,250. So 1 second, 0.6 lakhs paid to GTA. So 50,000 into 2.5%, 1,250 and 1,250 should be taken here. Okay, so here it is given as 0.70. So 0.6 is GTA and 10. So therefore 60,000 should be taken. 60,000 into 2.5% will be 1,500 CGST and 1,500 SGST. And then life insurance policy. So we completed transportation also. And thereafter we have salary paid to employee on rolls. Salary paid to employee on rolls, first of all there is no GST because services provided by employee to employer in the course of employment is excluded from supply. So we don't have to pay any GST with respect to that salary, and there is nothing related to this. So salary nil. And next item that we have is premium paid on life insurance policies taken for specified employees. Generally life insurance premium will be blocked credit. Health insurance and life insurance is block credit. Let's see, is there any special point related to this? Life insurance policies for specified employees have been taken by the company to fulfill a statutory obligation. So in this regard, the life insurance service provider is registered in West Bengal. So whenever we have life insurance and health insurance which is taken by the employer under a statutory obligation for the purpose of providing it to the employees, then ITC is available in that case. Generally block credit, but if it is under a statutory obligation, ITC available. So due to that reason, in this life insurance premium 1.6 lakhs within the state. So CGST, SGST paid 9% and 9%. So 1,60,000 into 9%, that is 14,400 and 14,400 ITC is available with respect to this. So that life insurance also over. Then audit fee 0.50. Audit fee is paid to Goel and Co, a firm of chartered accountants registered in West Bengal. So within the state for statutory audit of the preceding financial year. Yes, we can take ITC with respect to this. So audit fee 0.50, that is 50,000 into 9%, that is 4,500 and 4,500. Then next we have telephone expenses 0.30. This telephone expense pertains to bill for landline phone installed at the factory and mobile phones given to employees for official use. So we can take ITC. Service provider is registered in West Bengal, so which means it is again intrastate supply chargeable to CGST, SGST. So 30,000 into 9%, 2,700 and 2,700 will be taken. And then last we have bank charges. Bank charges 0.10, that is 10,000. Bank charges are towards company's current account maintained with a private sector bank registered in West Bengal. So again it is intrastate supply because bank is also in the same state, its company is also in the same state. Intrastate supply. So therefore 10,000 into 9% and 9%, 900 and 900. So these are the various inward supplies that we have. Now thereafter we have only the outward supply. The breakup of sales is as under: sales in West Bengal 7 lakhs, sales in states other than West Bengal 3 lakhs, exports under LUT 5 lakhs. Because the sales we have 15, so that 15 ka breakup is given. 7 lakhs is in West Bengal, which means it is within the state. So 7 lakhs into 9%, that is 63,000 will be CGST, SGST liability. Thereafter sales in other states 3 lakhs. So 3 lakhs into 18%, 54,000, that will be IGST liability. And then we have export under LUT 5 lakhs. Export under bond or LUT. So GST is not payable. So therefore it will be nil. And this is our gross liability: 63,000 CGST, 63 SGST and 54,000 IGST. Then next we have opening balance of ITC. So that we will take in the opening balance 15,000, 8,000 and 9,000. So that's it now. Now this total is known as input tax credit. So 55,650, 48,650, 53,370. Now first IGST credit we need to utilize. So we have utilized for payment of 54,000. Thereafter CGST, SGST credit we utilize. So now this will be called as GST payable using cash ledger under FCM. Now out of this we have one RCM liability. What is that? GTA is a RCM liability. After reducing ITC, then we need to add back RCM liability. So this is the total amount payable through electronic cash ledger, net GST payable. So actually we discussed one question on similar lines. So one question number 2, this is like that only. So this is given in MTP May 18 for 10 marks it was given. Then so these type of questions can be coming. So the first question, 14 marks question, will be always on computation of net GST payable. In these lines only they will be asking, even though this question is for 10 marks, but the same type with some extra adjustments they can ask for 14 marks. Then next question number 20. So this question was given in May 19 for 9 marks. So see this: Flochem Palanpur Gujarat has entered into contract with R Refinery Abu Road Rajasthan on 1st July to supply 10 valves on FOR basis. FOR means what? Free on road basis. Okay. So free on road means, so they will incur the transportation cost and in turn they will recover the transportation cost from the customer. So therefore that should be before supply. Free on road means I have to deliver the goods to your location, like that. So the following information is provided in this regard: list price per valve. Actually they gave the valuation related data. And after that they are asking, Flochem also undertaken following local transactions during the month of July on which it has paid CGST, SGST. Means these are the inward supply data. So they gave value of supply for determining liability on outward liability, and that is outward supply, and they gave the inward supply data for which I put input tax credit. So output tax liability minus input tax credit, that's the net GST payable. So in this, if you see, list price per valve is 1 lakh exclusive of taxes. One of the conditions of the contract is that Flochem should ensure a 2-stage third-party inspection for the valves during the manufacturing process. Cost of inspection of 15,000 for 10 valves is directly paid by our refinery to testing agency. So first we will take 1 lakh as the list price, correct? And thereafter one of the conditions of the contract is that Flochem should ensure a 2-stage third-party inspection for the valves during the manufacturing process, and cost of inspection of 15,000 is directly paid by our refinery to the testing agency. Any liability of the supplier incurred by recipient on behalf of the supplier to be included as per section 15 subsection 2 clause B. So in this case, who should do that inspection and all? Flowchem should ensure a two-stage third-party inspection, which is paid by our refinery. So this 15,000 we need to add. So we need to take 1 lakh and to that 1 lakh. So how many valves? 10 valves. So 1 lakh into 10, because this is per valve. And here we have 10 valves. So 1 lakh into 10, 10 lakhs. And thereafter, this third party inspection is for all the valves. Okay, so that 15,000 we need to add. It is an expenditure to be included as per 15(2)(b), and the given price it is not included, so therefore we need to add. Our refinery requires a special packing for the valves. Cost of special packing is 10,000 for 10 valves. Again, special packing. So is it before delivery of goods or after delivery of goods? Before delivery of goods. Therefore, it is to be included as per 15(2)(c). Incidental expenses or any other expenditure incurred by the supplier and charged to the recipient before delivery of the goods should be included in the value. Accordingly, this 10,000 rupees should be included in the value here. And thereafter, we have Flowchem arranges for erection and testing of the valve supplied by it to our refinery site. Cost of erection, etc. is 15,000 rupees. Arranges for erection and testing of the valves. So which means that, so this erection and testing needs to be done before delivery of the goods, and they are incurring it. So definitely it should be included in the value. So 15,000 rupees we need to take. And then next one, goods are dispatched with a tax invoice on 20th July and they reach the destination at Abu Road on 21st July. Lorry freight of 5,000 has been paid by our refinery directly to lorry driver. Now this is where this FOR basis has got some logic. So what is it I said as FOR basis? FOR is opposite of X factory or X showroom. So X showroom or X factory means at my place. If I am supplier, at my place, if I am delivering the goods, that is known as X factory or X showroom. But whenever it is FOR basis, means I undertake to deliver the goods at your location. That's why I fix the price, which means here who should incur that expenditure? Supplier. Supplier should incur this expenditure of lorry freight, but who paid it? Our refinery. Again, as per 15(2)(b), it is to be included in the value. In the given price, it is not included, so that 5,000 also to be added. So that is where we get the total value of supply. So the total value is 10,45,000. And where our refinery is located? Our refinery is located in Rajasthan. Where the supplier is located? Gujarat. Generally, in case of goods, what will be taken as the place of supply? Ending point of the goods will be taken as the place of supply. So what is the ending point of the goods in this case? Rajasthan. Therefore, it will come under interstate supply and chargeable to IGST of 18%. So therefore, this 10,45,000 into 18%, 1,88,100. This is the first part that we have completed. This is about the output tax liability. Now, if you see input tax credit, there is an opening balance of ITC. So CGST is 20,000, SGST is 20,000 and IGST is nil. So that's the opening balance. And we have some other inward supplies. Availed service of works contract to erect foundation for fixing the machinery to earth in the factory. So generally works contract service is blocked credit, but we have an exception when it is incurred for plant and machinery, or if the expenditure is charged to P&L, or if it is incurred by a person not for his purpose but for providing service to some other person, means the restriction is not applicable to the supplier. In this case, this work contract service is for the purpose of installation of plant and machinery. Consequently, they can take ITC with respect to this. Laid pipelines from the water source outside the factory up to the gate of the factory for the purpose of production facility. So generally, any works contract service or construction service, etc., so received for construction of immovable property is blocked credit. However, with respect to plant and machinery, they can take ITC, but plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate. So in this case, the telecom towers and pipelines laid outside the factory gate. Here it is pipelines laid outside the factory gate. Due to that reason, ITC not available with respect to this. So input tax credit, opening ITC, CGST, SGST, 20,000, 20,000, works contract 5,000, 5,000, pipelines, ITC not available, that we have seen. And thereafter, for the purpose of smooth and convenient mobile communication in its factory, it has installed a telecommunication tower of the mobile company. So again, telecom tower, they cannot take ITC with respect to this. So they can take ITC with respect to installation of any plant and machinery other than telecom towers and pipelines laid outside factory gate. It has entered into an agreement with a travel company to provide a home travel facility to its employees when they are on leave. So travel benefits extended to employees on vacation, ITC not available. So they, even if it is like leave travel concession etc., ITC not available unless otherwise it is on a business visit. So this is for personal on a vacation. So this 2500 also ITC not available. And lastly, it has entered into an agreement with the fitness center to provide wellness service to employees after office hours. So membership of a club, health and fitness center, ITC not available. If it is under a statutory obligation, ITC available, but nowhere here it is given that it is under a statutory obligation. Due to that reason, ITC is not available with respect to this. So therefore, that also ITC not available. So total ITC is what? 25,000 and 25,000. And what is the liability here? 1,88,100 IGST liability. For payment of that IGST liability, we can utilize CGST and SGST credit of 25 and 25. So therefore, the net GST payable will be the difference, that is 1,38,100 will be taken as the net GST payable. So this is a question. Speciality in this question is they gave the value of supply and they also gave the inward supply details, and we need to compute the net GST payable. Similar to this, there can also be another question wherein they will be giving all purchase related data and they will say that they will be fixing a sale price based on cost plus 10% or cost plus 20% like that. So now what we need to do, you need to analyze the purchase data. Wherever ITC is available, so then you should not take in the cost of purchase the GST component. Wherever ITC is not available, in the cost of purchase you need to take the GST component, because whenever ITC available, the GST paid on inward supply will not be added to the purchase cost. Whenever ITC not available, so then the GST paid on inward supply will be added to the purchase cost. Now you need to arrive at the purchase cost. On the top of that, you need to add the profit margin, arrive at the sale value on which GST payable. Now while analyzing purchase itself, you know how much is the ITC available, that we need to adjust with the liability. So like that also they can coin a question, okay, possible. Then we are moving on to the next question, question number 21. Kaushal Manufacturers Limited, registered in Delhi, is a manufacturer and supplier of electronic home appliances. It is paying tax under regular scheme. It supplies the electronic home appliances in the domestic as well as overseas market. So they are making local sales as well as they are making the exports. For supplies in other states of India, the company has appointed consignment agents in each state except Gurgaon, Haryana and Noida, Uttar Pradesh, where the goods are supplied directly by them from their Delhi warehouse. So local supply is also there, interstate supply is also there, they are making supplies to agents also. Fine. So this is about the knowledge of their business. In the month of January, consignment of electronic home appliances were sent to Cardinal Electronics Private Limited and Rochester Technos, agents of Kaushal Manufacturing Limited in Punjab and Madhya Pradesh respectively. So this is supply to an agent. Whenever supply is made to an agent, we need to determine the value as per rule 29. So here Cardinal Electricals Private Limited and Rochester Technos supplied these electronic appliances under their invoices. Means what? Agent is acting on behalf of principal to the stores located in their respective states for 40 lakhs and 70 lakhs respectively. Open market value of such appliances is not available. So in case of rule 29, what should be taken as the value? Open market value or 90% of the resale price. Here we don't have open market value, so we will be taking 90% of the resale price. So 40 lakhs plus 70 lakhs is what? So that is 110 lakhs. 110 lakhs into 90%, that is 99 lakhs will be taken. And where is that manufacturer located? Delhi. And where is their agent located? So Punjab and Madhya Pradesh. Therefore it is interstate supply chargeable to IGST. And is there any rate given here? Yes, electronic home appliances rate of IGST is 5%. So 99 lakhs into 5%. So that will be 4,95,000. That is the answer for the first part. Then next. Further, in January, electronic home appliances have been supplied to Ron Technomart, a wholesale dealer of electronic home appliances in Noida, Uttar Pradesh, for a consideration of 23 lakhs from its Delhi warehouse. So, Kaushal Manufacturers Limited owns 75% shares of Ron Technomart, which means what? Related party. So who is treated as related? One company holding more than or equals to 51% in the other. One person directly or indirectly controls the another. He is known as a related person. So in this case, it is a related party transaction. So we need to determine the value as per rule 28. So as per rule 28, what we need to take? Open market value. If recipient is eligible for full ATC, the transaction value itself is open market value, but clearly given that the recipient is not eligible for full ATC, so the open market value will be taken here. What is that open market value? 30 lakhs. But we have, if we have resale price into 90%, that can be taken, but we don't have here. So that's why 30 lakhs will be taken. Again, it is interstate supply. Why? Because where is the supplier located? Delhi. And what is the ending point here? So Noida, Uttar Pradesh. Therefore, it is interstate supply. 30 lakhs into again 5%, that is 1,50,000. That is with respect to the next transaction. Then Kaushal Manufacturers Limited also provide repair and maintenance service to electronic appliance manufacturers located in India, but we don't have the information related to this. The company has also furnished the following information for the month of January. Supply of electronic home appliances to wholesale dealers of such appliances in Delhi within the state. So therefore, this 84 lakhs will be CGST, SGST, home appliances 2.5, 2.5. So therefore, 84 lakhs into 2.5%, 2.5%. And then next we have electronic home appliances supplied to Anchor Electricals Incorporation USA under LUT. So supply of goods under bond or LUT. So bond or LUT will be coming under, so zero rated supplies. We don't have to pay any GST in this case. So on this 1,26,000, we don't have to pay any GST, that will be nil. And then repair and maintenance service provided to Unitech Limited, electronic appliance manufacturer located in Delhi. So in case of services, repair and maintenance services, as per section 12 of IGST Act, the place of supply is determined as per general provision. So we will take location of recipient Delhi. So it's an intrastate supply chargeable to CGST, SGST. So 8,40,000 into 9% and 9%, because repair and maintenance service is taxable at 9%. Na? So therefore 9% and 9%. Then next we have advance received towards repair and maintenance service to be provided to Orelec Limited, an electronic appliance manufacturer located in Delhi. Repair and maintenance service have been provided in February, and invoice is issued in 28th February, but in January we received the advances. So in case of services, the time of supply is invoice date or payment date, whichever is earlier. So therefore we need to tax this 7 lakhs. And this is services provided to a person in Delhi, again intrastate supply. So 7 lakhs into 9%, 7 lakhs into 9%. Then next, advance received for electronic home appliances to be supplied to Novik Electricals, a wholesale dealer of such appliances in Gurgaon, Haryana. Invoice for the goods is issued at the time of delivery of the electronic appliances in March. So now in this case, for goods, always we will take the time of supply as due date of invoice or actual date of invoice, whichever is earlier. In this case, so what is the invoice time? March. And we have received the advance now, so we don't have to pay GST now. Why we don't have to pay GST now? Because in case of advances we need to pay GST. So with respect to goods, based on the invoice is given in March. Right now we are discussing for the month of January, so that's why GST liability shall not arise. So this is the total GST payable, CGST, SGST and IGST, and we don't have any input tax credit related information. They're asking us to calculate only the gross GST payable. So in this there are multiple points. Rule 28, Rule 29, and even determination of intrastate or interstate supplies. Thereafter, time of supply related provisions is also connected. So this is an RTP November 21 question. Then next, we are moving on to question number 22. So this is actually an RTP as well as an MTP question, a very good question on transportation of goods services related exemption, and even it connects the value of supply also. It's a very good question. Actually I expected this question for quite a long time till May 23 exam, but they have not tested. So there is a chance of asking this question for 8 marks. If they want to ask, they can ask in the forthcoming exam. That much very important question it is. So look into this. XYZ Limited, New Delhi, manufactures biscuits under the brand name Tasty Picks. Biscuits are supplied to wholesalers and distributors located across India on free on road basis from the warehouse of the company located at New Delhi. The company uses multiple modes of transport for supplying the biscuits to its customers spread across the country. So free on road basis means what I told you already. So the supplier undertakes to supply the goods to the recipient. So that is known as free on road basis, and the company uses multiple modes of transportation for supplying the biscuits to its customers spread across the country. The transportation cost is shown as a line item in the invoice and is billed to the customers with a markup of 2% on the total amount of the freight paid inclusive of taxes. So means what they are going to do, they are going to incur the transportation cost. In turn, the transportation cost will be collected from the customers by adding a 2% markup. The moment they are adding 2% markup, they will not become a pure agent, because in case of a pure agent, yes, they are incurring the expenditure, but when they are incurring the expenditure, primarily it is their liability to incur the expenditure, because free on road means what? So they have to deliver the goods, so therefore they are incurring the liability. Even if they are not required to incur the liability, but if they incur it and recover it, to become a pure agent, only the actual amount they should recover, but they are adding a markup, 2% markup on the transportation cost, including the taxes, whatever they have paid. Now, flour used for the production process is procured from vendors located in Madhya Pradesh on ex-factory basis. The company engages GTA to transport the flour from the factories of the vendors to its factory located in New Delhi. So the company has provided the following data relating to transportation of biscuits and flour in the month of April 2021. So we have some carriage inwards and carriage outwards. With respect to carriage inwards for bringing the material, etc., so that we will not bill it to the customer. So that's our regular inward supplies, and we have some carriage outwards. For that also we have some inward supplies, but whatever cost we incur, we in turn recover it from the customer. So we have the data here. All these are the freight related data. Now what is that we need to find in this? Based on the particulars given above, compute the GST payable on the amount paid for transportation when it avails the services of different transporters. So they are not asking as to whether they will pay GST under FCM or RCM. So they are just asking, in the transportation, what are the various transportations which are taxable and how much is the GST with respect to that? That is the question here. Okay. Now look into the first one. For sales within the NCR region, the company arranged a local minivan belonging to an individual and paid him 54,000. So this is carriage inwards or carriage outwards, and this particular freight will be exempted. Why it is exempted? So in case of transportation of goods by roadways other than GTA or courier agency, all other cases is exempted. So this 54,000 is exempt. Then next. For sales to locations in distant states, the company booked the goods by Indian Railways and paid rail freight of 3,17,000. So in case of Indian Railways, what is the taxability? Specified goods will be exempted and other goods will be taxable. What are the specified goods? Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief materials for natural and man-made disasters, and defense and military equipment. Here what they are taking, again it is carriage outwards. What they are selling? Biscuits. As they are selling biscuits, so this will become taxable. Okay, this freight will become taxable, and this will be taxable at what rate? So here if you see, they have given the rates. Assume the GST rate on transportation of goods. So here many students will make a mistake. Transportation of goods is 5%, transportation of biscuits is 12%. Not that. So transportation of goods and biscuits to be 5% and 12% respectively, which means there is a separator and. So therefore for this transportation of goods the rate is 5%, for this sale of biscuits the rate will be 12%. So here they are transporting the goods, so the rate will be 5%, and railways we don't have RCM, so therefore it will be taxable under FCM. So 3,17,000 and tax rate at 5%, so therefore 3,17,000 5%, so that is 15,815. 3,17,000 into 5%, 15,850 will be taken. First one is exempted. And then for sales to locations in neighboring states, again carriage outwards, the company booked the goods by GTA and paid a road freight of 3,73,000. Again for GTA, what are the exemptions? Specified goods. Here it is not specified goods. Number two, if the recipient is individual or HUF or AJP, again it is not that. And if the recipient is central government, state government or local authority which is registered only to deduct TDS, that is also not applicable. Consequently, this 3,73,000 will be taxable and it comes under RCM. So again, what is the rate of GST? 5%. So 3,73,000 into 5%, 18,650. And then for purchase of flour, so carriage inwards, flour from Madhya Pradesh, the company booked the GT and paid a road freight of 55,000. So this 55,000 will become exempted. Why? So transportation of specified goods, flour will come under specified goods. What is that? Food grain including flours, pulses, milk and salt. So therefore it will become exempted. So no need to pay GST on that 55,000. Thereafter for purchase of butter, so means again carriage inwards. From Punjab, the company booked the goods by a GT and paid a road freight of 35,000. So butter is not in the specified goods. Milk and salt is only given. Butter is not given. So which means this 35,000 will become taxable. This will become taxable, and because it is GTA, it will come under RCM. So 35,000 into 5%, that is 1,750. And thereafter we have for local purchase of baking powder. Baking powder will be coming under, so like carriage inwards, but baking powder is not flours. So baking powder will not come under flour. So therefore it is not notified goods. Consequently, it will be taxable GTA in a single carriage. Previously, we had the exemption that transportation of goods in a single carriage, if the freight does not exceed 1,500 exempted, but now it is omitted. Consequently, it will be taxable, and it will be taxable under RCM. So 1,500 into 5%, that is 75. And thereafter, for transferring the biscuits, open market value 4 lakhs to one of its sister concern, the company booked the goods by GT and paid a road freight of 40,000. Again, it is carriage inwards or carriage outwards? Carriage outwards. So with respect to this carriage outwards, GTA 40,000. So we don't have any exemption with respect to this. So it will be taxable under RCM. So 40,000 into 5%, that is 2,000. Now the total of this GST is 38,325. That is the answer for the first question. So what we have done is we applied literally transportation of goods related exemptions, but in an indirect manner they have asked. Then next, see the second part of the question. Compute the GST charged on transportation cost. Be careful, compute the GST charged on transportation cost billed by the company to its customers. So this company is charging the freight to the customers, right? So how much freight they are charging and what is the GST on that? Okay, GST on the freight. So see here, usually the rate of GST on freight is 5%, but the moment this transportation cost is incurred by the company and thereafter they are recovering it from the customer, this recovery of expenses will be part of sale of biscuits. So this recovery of expenses will be part of biscuits. So therefore the rate applicable to the biscuit should be taken, because so along with biscuits they are also providing the transportation service, composite supply, naturally bundled. So principal supply is 12%. So the 12% should be taken on this transportation cost recovered first. So only with respect to carriage outwards they will recover. First one is carriage outwards, yes, but there is exempted. But even then they will recover that. Na? How much they will recover? 54,000 plus 2% they will recover. 55,080 they will recover. On that 55,080, what is the GST is what they are asking. So into 12%, so that will come to 6,609.6. So 6,610. Got it? Then next again. Second one is carriage outwards. Yes. How much? 3,17,000. But on that we are paying GST. So first you take 3,17,000. On that how much GST we paid? 5%. So plus 5%. Okay, on that we need to add 2%. Why? Because while adding 2%, we need to take freight paid inclusive of taxes. So plus 2%. So that is 3,39,507. On that 3,39,507, what will be the rate of GST that we are required to pay? 12%. So 40,741. 40,741. Then again third freight, if you see, again carriage outwards, how much? 3,73,000 taxable. So 3,73,000, how much GST we pay? 5%. Now when you add that, 3,91,650. On the top of that again we will be adding 2% markup. So 3,99,483. On that 12% is the GST that we need to pay. So 47,938. But sir, already we pay 5%, then again why we need to pay? See, 5% what we pay is on inward supply. Then again when we are recovering the same on outward supply, we need to. Then on this inward supply, whatever GST we paid, can we take as ITC? Of course we can take as ITC. There is no restriction at all. We can take ITC, but here they are not asking the computation of net GST payable. They are asking how much GST you will be charging on the freight to the customers. Okay. Then next one is carriage inwards. So that we will not recover from customer. Next also carriage inwards. Last only carriage outwards, but they are asking, so compute the GST charged on transportation cost billed by the company to its customers. So here sister concern is not customer, na? So a sister concern is not customer. So on this 40,000 rupees, so we will not be adding any markup and recovering. So that's the reason why it is not there. You can see the note. It has been assumed that there is no markup on transaction cost billed to the sister concern being non-customer. Okay. So that is with respect to this. So this is a very good question. Actually, I like this question a lot. So because the entire transportation of goods exemption along with that markup, like value of supply related point, superbly it is connected. So this can be tested in exam. I pray that it should come in exam. Then next one, question number 23. So this question is like general, all combination of exemptions that we have. So this also was given in RTP May 20. See, mostly I selected RTP questions and MTP questions, and apart from that, even some past exam questions which I feel, I told you already that which I feel like it may be tested because that questions would not have been performed well in the exam. So I have selected those questions also. So actually these 50 questions if you are solving, mostly all MTP, RTPs are covered. So therefore you don't have to spare more time on this. So these questions is really sufficient at this juncture and you don't have that much time, so please focus on other subjects as well. Okay. Then if you really have a lot of time and if you want to practice etc., so anyhow you have solved workbook, remaining questions are there, you can solve from that solved workbook randomly you can take, because at the end of the solved workbook I have given mighty 200 na, you take that mighty 200 questions and solve. In that mighty 200 some of the questions are covered in this itself. Okay. So therefore remaining questions you try to solve if you have time, otherwise these 50 questions are sufficient at this moment. Okay. Then look into this 23. Pehalal has obtained registration in the current financial year in Uttar Pradesh. His turnover in the preceding financial year was 19,90,000. So it does not exceed the threshold limit. He has received the following amounts in respect of the activities undertaken by him in the month of September. Funeral service 8,80,000. So we have an exclusion. Funeral, burial, crematorium, mortuary, including transportation of deceased. So this 8,80,000 is not a supply. So therefore we don't have to pay any GST with respect to this. So that is this. Okay. And then services of warehousing of jaggery. Previously we had an exemption with respect to warehousing of jaggery, but now that exemption is omitted. And is jaggery agricultural produce? No, jaggery is not agricultural produce. Sugarcane is only agricultural produce. What is an agricultural produce? The primary produce out of agriculture on which no further processing is done, or it is not processed by the cultivator to make it marketable to the consumer. So basically jaggery is not coming under agricultural produce. So storage of that jaggery will become taxable. So that 50,000 will become taxable here. So on that 50,000 GST will be payable, and we don't know whether it is intrastate or interstate. It is given all transactions stated above are intrastate transactions. So wherever it is taxable will pay CGST, SGST 9% each. So 4,500, 4,500. Then electrically operated bus given on hire to municipal corporation. So we have an exemption with respect to this. Electric motor vehicle that can carry more than 12 passengers given on hire to a local authority is exempted. Here bus, so we are assuming that the capacity is more than 12 passengers. Due to that reason it will be exempted, so that 5 lakhs will become exempted. Then next, services provided to recognize the sports body as commentator. So we have certain services provided by individual to recognize sports body as player, referee, umpire, coach, team manager. But commentator is not in the list. So therefore it will become taxable. So this 2 lakhs will be taxable, CGST, SGST 9% and 9%. And thereafter we have commission received as an insurance agent from an insurance company. So insurance agent to insurance company, it will come under RCM. So we have business facilitator or business correspondent of insurance company working in rural area is exempted. So otherwise it will be taxable. Here nothing is given, so it will be taxable. But wherever insurance agent is taxable, it will come under RCM. The insurance company has to pay, so therefore it will not be taxable in the hands of pay halal. So therefore we don't have to pay any GST with respect to this, so that is not applicable. And then we have commission received as a business facilitator for the services provided to urban branch of a nationalized bank with respect to saving bank accounts. So this business facilitator for the services provided to urban branch of a nationalized bank. So services provided by business facilitator to the banking company, again if it is with respect to rural area it is exempted, urban area taxable, but who will pay? So business facilitator service RCM, so bank will pay, again it will not be taxable in the hands of the person. Then pay halal. Then security services provided to Damodar Engineering College. So we have security agency service also under RCM. For that two conditions are there. Supplier should be other than body corporate. Yes, pay halal is other than body corporate, and recipient should be registered. Here recipient is registered under GST. So again it will come under RCM. So it will not be taxable in the hands of pay halal. But we need to write the reason that it will be taxable under RCM like that. Then next we have some inward supply data. So further he has received the following service in the month of September. Freight paid to unregistered GTA for his business activities relating to serial number 1 above. So GTA services provided to a individual, okay, and is he unregistered during the current year? No, he is registered. So therefore this GTA services will be taxable. And 1 lakh into what is the rate of GST? CGST, SGST. So that is GTA service will be always 2.5, 2.5 na. So is it given? So there was no opening balance. Rate of GST for all the outward supplies made by pay halal, outward supplies. But for inward supplies we don't have. And generally, so unregistered GTA, supplier is unregistered GTA, means consequently it will come under RCM. So on this we need to take 5% only, because GTA has two rates. So if it is FCM, 12% or 5%. If it is RCM, always 5%. So therefore the 5% should be taken. 1 lakh into 2.5 and 2.5. That is the RCM liability here. So 2500, 2500. Then legal advice received from Kanun Associates, a partnership firm seeking advice in relation to tax dispute of the business. So advocate services provided to a business entity. So that is pay halal. During the previous year, the business entity turnover does not exceed the threshold limit for registration, 19 lakh 90. Due to that reason, this 50,000 will become exempted. So there is no GST on that. Now this will be the total outward supplies, tax liability on outward supply 22,500, 22,500, and liability under RCM 2,500, 2,500. So total liability is 25,000 and 25,000. That will be taken. That is what they are asking. And we don't have any input tax credit. Why? Because first if you see, so they are receiving some inward supply from GTA, on which they pay GST under RCM, but it is used for what? Activities relating to serial number 1 above, that is funeral. So funeral service we are not paying any GST. So due to that reason, on this GTA service they cannot avail any ITC. So that's the reason why we have not taken any ITC in this case. So that's why 25,000 is taken as the net GST payable. Then next question number 24. So this question number 24 already tested. So in November 20 exam for 5 marks. So but maybe again they can ask, this is on exemptions, overall exemptions. Say this: measures all-in-one, a partnership concern and a registered supplier under GST is engaged in providing various services under one roof. The concern provides the following information pertaining to supply made or input service availed by it during the month of March 2022. Provided direct selling agent services to Y Bank Limited. So direct selling agent services to bank, we don't have any exemption. Perhaps it will come under RCM when? If the supplier is other than body corporate or firm. But if you see here, the supplier is partnership concern, so that's why it will not come under RCM. So it will be FCM, where liability to pay GST is on the all-in-one under FCM 4 lakhs. And here all the transactions, so how we need to treat it, whether it is intrastate or interstate, all supplies are intrastate. So which means CGST, SGST will be payable. So 9% each, except for renting of vehicle 2.5%. So 9% should be taken. 4 lakhs into 9%, 36,000, 36,000 will be taken. Then Provided security services to ABC Private Limited, a registered person under GST. So security agency services, supplier should be other than body corporate. Yes, supplier is other than body corporate. Recipient should be registered. Yes. So therefore it will come under RCM. So which means it will be taxable in the hands of the recipient. So it will not be taxable in the hands of all-in-one. So there is no GST here. Then third, provided security service to PSR trust, an unregistered person under GST. So in this case it will not come under RCM. Why? Security agency will come under RCM if the supplier is other than body corporate and the recipient is registered. In this case, yes, supplier is other than body corporate, but the recipient is an unregistered person. That's why it will not be coming under RCM. So it will be FCM, where it will be taxable in the hands of all-in-one. And as it is security agency service, 9% and 9% will be taken. So 1 lakh into 9% and 9%. And thereafter, provided renting of motor vehicle to Amaze Tours Limited and supply value included cost of fuel, means 5% will be taken. So supplier should be other than body corporate. Yes. Recipient is body corporate. Yes. And the rate of GST should be 5%. So then it will be coming under RCM. So it will be taxable in the hands of Amaze Tours. So it will not be taxable in the hands of all-in-one. Then next, provided renting of motor vehicle to Preeti and Co, a CA firm, and supply value included cost of fuel, again 5% rate. Supplier should be other than body corporate. Yes. Recipient should be body corporate, but recipient is also other than body corporate. Consequently, it will come under FCM and we don't have any exemption also. So therefore 40,000 into 2.5 will be taken. So 40,000 into 2.5, 40,000 into 2.5. Then next, availed represent. So far all these are what? Outward supplies. Now we have some inward supply. Availed representation services from PB and Co, a law firm, towards a consumer court case. So services provided by advocate to a business entity which is registered. So we don't have no their turnover during previous year. So they commence a business from February 2022, which means this is the first year in which they commence the business, 2022. So therefore turnover during the previous year is 0, it does not exceed threshold limit. So therefore this 70,000 will be exempted, there is no GST on that. Okay, so that is about the total taxability exemption. So this question is actually based on exemptions as well as RCM, both. So we few points we have exemptions, few point we have RCM. So this kind of questions, like after November 2020, so quite a long time they gave a gap, so they can ask again this type of questions. Then next, question number 25. So this was given in RTP May 23. So Swasthya Nursing Home, a clinical establishment, offers the following services. Rooms provided to the inpatients where the room charges per day are 6,500. So room charges per day is 6,500. We have an exemption with respect to room charges if the room charges does not exceed 5,000. But here the room charges is 6,500. As it exceeds 5,000, so entirely it will be taxable. So this will become taxable. It is not exempted. Then plastic surgery conducted to repair cleft lip of a newborn baby. Generally plastic surgery, cosmetic surgery, hair transplantation is not healthcare services, but when it is carried out to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma, then you know it will become exempted. It will be treated as healthcare service. So here it is a congenital defect. Cleft lip of a newborn baby is a congenital defect, so by birth itself. So for that, if the service is provided, that will become exempted. Then air ambulance service to transport critically ill patients from distant locations to Swasthya Nursing Home. All kind of ambulance services, they should be transporting the patient. Yes, they are transporting the patient. Let it be air ambulance or road ambulance or waterways ambulance, or ambulance services will become exempted. Then supply of food to inpatients as per the advice of the doctor or nutritionist from its restaurant Annapurna Bhavan located in the basement of Swasthya Nursing Home. The food is prepared by its employees and nothing is outsourced to any third party vendors. Then in that case, so supply of food to inpatients. Inpatient means those who are admitted in the hospital. So this will become exempted. Then homeopathic medical treatment. Homeopathic medical treatment. So homeopathy is also a recognized system of medicine. Homeopathy, naturopathy, Siddha, Unani, Ayurveda, etc. So therefore it will come under exempted. Then Swasthya Nursing Home also operated a cord blood bank which provides service in relation to preservation of stem cells. So previously it was exempted. Services by cord blood bank by way of preservation of stem cells. Now that is omitted. Consequently, it will become taxable. Okay, so that is this exemption available to services provided by cord blood banks by way of preservation, and now it is no longer exempt, therefore it will become taxable. Okay, so this is actually a May 23 RTP question on healthcare services. Then question number 26, this question number 26 again it came in RTP, but thereafter, that too long back in 2019, thereafter it did not see the daylight and it did not appear in any question in exam. So therefore it's a very good question. This is on composition scheme, computation of GST liability under composition scheme. Have a look into this question. B&D Company, a partnership firm in Nagpur, Maharashtra, is a wholesaler of taxable product P and a exempted product Q. The firm supplies these products only in the eastern part of Maharashtra. All the procurements, both goods and service of the firm, are from suppliers registered under regular scheme in the state of Maharashtra. The firm pays tax under composition scheme. So they are paying tax under composition scheme, but their inward supplies is from a person who is opting for regular scheme. B&D Company has furnished the following details with respect to its turnover exclusive of taxes and stock exclusive of taxes. Okay, so particulars P and Q. Turnover for the quarter ended 60 lakhs and 17 lakhs 65,000. So they are in Maharashtra. Product P is taxable, product Q is exempted. They are basically a trader. Okay, so they are a partnership firm, is a wholesaler, means what? Trader. So a person who is under composition scheme 10 subsection 1, being a trader, is required to pay GST only on taxable, because so the rate of GST applicable for a person under composition scheme is 1% on taxable turnover, the 2.5 CGST, 0.5 SGST on taxable turnover. So here, so 60 lakhs into 1% only they need to pay. So that is the liability for the first quarter. So 60 lakhs into 0.5 CGST, 0.5 SGST. So you can see here, turnover of P for the first quarter 60 lakhs, so 30,000 and 30,000 is only taken. And then next we have for second quarter. Second quarter, so for the quarter ended 39,2000, so product P is 50 lakhs, product Q is 17 lakhs. For product P only again taxable, so 1%. So therefore for the second quarter 50 lakhs into 0.5, that is 25,000 and 25,000, so that will be taken. Okay. Now, first quarter and second quarter, are they in composition scheme? Yes, because what is the turnover up to which they will be in composition scheme? Already they opted for composition scheme. During the current year, up to what limit they will be into composition scheme? Which state they are doing business? They are doing business in Maharashtra. In Maharashtra, under 10 subsection 1, the applicable limit will be 150 lakhs. So here, you count what is the turnover for the first quarter. So 77 lakhs 65,000. Again for the second quarter also you count. So second quarter it will be 67 lakhs. So 77 lakhs 65,000 plus 67 lakhs, so will be coming to 1 crore 44 lakhs 65,000. So they will be into composition scheme. Now for the month of, like for the third quarter, so they have given the extract of the bill book. So for October, so already their turnover up to 30th September was 1 crore 44 lakhs 65,000. Now let's add, let's add this 2 lakh 3,000. So what will happen if we add 2 lakh 3,000 here? If we add 2 lakh 3,000, so 1 crore 44 lakh 65,000 plus 2 lakh 3,000, so 1 crore 46 lakh 68,000. Still they will be into composition scheme. Again add 1 lakh 38,250. So 1 crore 48 lakh 6,250. Again add 1 lakh 6,250. So that is 1 crore 49 lakhs 12,500, and add 92,500, that is 1 crore 50 lakh 5,000. Exactly because of this 2309 invoice, they are crossing 1.5 crores, means from this invoice onwards they will be into regular scheme, and up to this invoice they will be under composition scheme. Got it? So because of a particular invoice, if they are crossing 1.5 crores, from that invoice onwards they will be under regular scheme. Up to that invoice they will be into composition scheme. So these first 3 invoices or bills, they will be into composition scheme, and again on these 3 only we need to pay tax under composition scheme. So see how much? 2 lakhs plus 1 lakh 36,000 plus 67,000 So that will be coming to 4,03,000. So on that 4,03,000 only, they need to pay GST under composition scheme. So 4,03,000. So into 0.5%. So 0.5%, 2015 CGST, 2015 SGST. So this is the GST payable under composition scheme, because they are asking compute the net GST liability of B and D company for the period April to October under composition scheme. So only composition scheme, regular scheme we are not required to do calculations here. And thereafter what is that? So stock data and all is irrelevant here for the purpose of arriving at the answer. And we have some inward supplies. On these inward supplies, if there is any liability under RCM, that they have to pay, because so even though you are under composition scheme, but if you have an inward supply on which you need to pay GST under RCM, you have to pay the GST irrespective of whether you are under composition scheme or not. Okay, so therefore freight paid to GTA during the period April to October, assume equal amount of freight is paid each month on the 10th day of each month. Also assume that the goods for which the freight is paid on 10th day of the month are transported between 11th to 20th day of the month. So this 1,40,000 is from April to October. April to October means how many months? 7 months. Means each month it is how much? 20,000. 1,40,000 divided by 7, 20,000. Now for the first quarter how much? 60,000. On that 60,000, 2.5, 2.5, CGST, SGST under RCM. So see this 60,000. So 2.5, 2.5 RCM liability. Again second quarter also same 60,000, 2.5%, 2.5% RCM liability. Now this part is important. So the freight, assume that the goods for which freight is paid on 10th day of the month. So generally what is the time of supply with respect to services covered under RCM? The date on which payment is made or 61st day from the date of invoice, whichever is earlier. Here what is the date on which payment is made? 10th day of the month, which means so by 3rd October itself, so by 2nd October itself they are under composition scheme. Right now we are determining the tax liability under composition scheme. So therefore with respect to this 10,000 rupees pertaining to October, it will come during the regular scheme period, not under composition scheme period. That's why we don't have to take this liability for this composition scheme. Nil, paid on 10th day of goods transported, the same will be assessed under regular scheme. So therefore we don't have, and this will be the total liability under CGST, SGST under composition scheme. So this is with respect to this composition scheme. Maybe this type of question also can be tested. Then next question number 27. Examine whether the suppliers are eligible for composition scheme in the following independent cases. Is there any other option available for concessional tax payment with any of these suppliers wherever composition scheme cannot be availed? A. Messrs. Devlok, a registered dealer, is engaged in intrastate trading of electronic appliances in Jaipur. So they are trader and it has a turnover of 130 lakhs in the preceding financial year. So when a person can opt for composition scheme under 10.1, if their aggregate turnover during the previous year does not exceed 150 lakhs and they are manufacturer, trader or supplier of service provider, then they can opt for composition scheme under 10.1 if they are in Rajasthan. So 130 lakhs. In the current financial year, it also started providing repair service of electronic appliances. For the current year, can they opt for composition scheme? Yes. Current year, they can opt for composition scheme, but current year, they cannot provide services under 10 subsection 1 beyond 10% of the turnover during previous year or 5 lakhs, whichever is higher. What is the turnover during previous year? 130 lakhs. 130 lakhs into 10% is what? 13 lakhs. So during the current year, they can provide services only up to 13 lakhs during the current year. That is the answer for this. Okay. So 13 lakhs worth of services they can provide and they can be into composition scheme. Then B, Narayan and Sons, a registered dealer, is running a Kana Kazana restaurant near City Palace in Jaipur. It has a turnover of 140 lakhs in the preceding financial year. In the current financial year, it has also started dealing in intrastate trading of beverages in Jaipur. So during the composition scheme, they can be a trader as well as a restaurant service provider under 10.1, and previous year aggregate turnover does not exceed 150. So current year, they can opt for composition scheme under 10.1. So that is the answer for B. Then C, Messrs. Indra and Bro, a registered dealer, is providing restaurant service in Uttarakhand. So in Uttarakhand, so what are the states for which 75 lakhs limit will be taken? M, T, N, U, SAM. So the limit will be taken as 75 lakhs under 10.1. So here Uttarakhand is in that place. It has a turnover of 70 lakhs in the preceding financial year. It has started providing intrastate interior designing services in the current financial year and discontinued rendering restaurant services. So the problem is, the moment they are providing some other services other than supply of food, the applicable composition scheme will be 10.2A. So because 10.1 is only for trader, manufacturer and supply of food service provider. During the current year, as they are providing interior decoration, then 10.2A. But unfortunately 10.2A is not applicable in this case, because for the purpose of 10.2A, the turnover during the previous year should not exceed 50 lakhs, but here it is 70 lakhs. So therefore in C case, they cannot opt for composition scheme. So 10.1 also not possible, 10.2A also not possible. Then D, Messrs. Him Naresh, a registered dealer, is exclusively providing intrastate architect service in Uttarakhand, and it has a turnover of 40 lakhs in the preceding financial year. What services? Architect services. Architect services means 10.2A. For 10.2A, what should be the aggregate turnover during previous year? It should not exceed 50 lakhs. Any state, it should be 50 lakhs. So in this case, it is 40 lakhs. So yes, during the current year, they can opt for composition scheme. So that's the answer for this. So properly we need to give the explanation. So then only we'll get, maybe if this question is asked, they may be asking it for some 4 marks or 5 marks. So you need to clear cut give the explanation, that will be sufficient. And then next question is on registration. Mahadev Enterprises, a sole proprietorship firm, opened a shopping complex dealing in supply of goods at multiple locations, that is in Himachal Pradesh, Uttarakhand and Tripura in the month of June. It has furnished the following details relating to the sale made at such multiple locations for the month of June. So they are doing business in Himachal Pradesh, Uttarakhand, Tripura. Okay, 3 states. Himachal Pradesh, Uttarakhand and Tripura. Intrastate sale of taxable goods and exempted goods, interest on fixed deposits, intrastate sale of non-taxable goods. So this is the data we have. With the help of the above mentioned information, answer the following questions giving reasons. First, determine whether Mahadev Enterprises is liable to be registered under GST and what is the threshold limit for taking registration in this case. First, so they are doing business in more than one state. They are doing business in more than one state. Now, first point you need to check whether one of the state is a special category state. Yes. What is that? Tripura. And taxable supplies are made from that state. Yes. So therefore, the applicable threshold limit will be 10 lakhs. One of the state is a special category state. What is a special category state? MMTN, Manipur, Mizoram, Tripura, Nagaland, and they are making taxable supplies in that state. So applicable limit will be 10 lakhs. And therefore, in this case, the aggregate turnover is more than 10 lakhs. Consequently, so Mahadev Enterprises is required to get registered, and where they should register in each state from where they make taxable supplies. So they need to register in Himachal Pradesh and Tripura, but not in Uttarakhand. Why? Because in Uttarakhand they are making non-taxable supplies. That's why they are not required to register in Uttarakhand. Then second, explain with reasons whether your answer in 1 will change in the following independent cases. A, if Mahadev Enterprise is dealing in taxable supply of goods only from Himachal Pradesh, if they are engaged in only taxable supply of goods from Himachal Pradesh, so then that is we don't have Uttarakhand and Tripura, only Himachal Pradesh 22,50,000. So this 22,50,000, so what is the limit here? They are dealing in only one state. And is that one state MMTN? No. Is that one state U stamp? Uttarakhand, so Sikkim, then Telangana, Arunachal Pradesh and Meghalaya? No. It is not. Himachal Pradesh, it is not in that use stamp. Other states, and they are exclusively engaged in supply of goods. So due to that reason, the limit will be 40 lakhs. But what is the aggregate turnover? 22 lakh 50. So they are not required to get registered. Then, if Mahadev Enterprises is dealing in taxable supply of goods and services from Himachal Pradesh, automatically the limit will come to 20 lakhs. Why? Because if they are exclusively engaged in supply of goods only, 40 lakhs limit is applicable. If they are supplying both goods and services, then the limit will be automatically 20 lakhs. In this case, it is 22 lakh 50,000, which exceeds 20 lakhs. So they are required to get registered in Himachal Pradesh. Then, if Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh and has also affected interstate supply of taxable goods amounting to 4 lakhs, See, the moment they are making interstate supply of taxable goods, section 24 gets attracted, compulsory registration. There are some cases where a person is compulsorily required to get registered. I creations, I for interstate taxable supply of goods and other than handicraft, C for casual taxable person other than handicrafts, then R for recipient liable to pay GST under RCM 9 subsection 3, E for supply like e-commerce operator, whenever e-commerce operator is liable to pay GST under 9 subsection 5, or e-commerce operator is liable to deduct TCS under section 52. A for agent making supply on behalf of principal, then T for TDS deductor, then I for input service distributor, O for OIDR supplier located outside India and making supply to non-taxable online recipient in India, and N for non-resident taxable person, and S for supplier of goods through e-commerce operator. Here we have interstate supplies, so definitely this person interstate supply of goods, so this person is compulsorily required to get registered whatever may be the turnover. So that is this question. Then next one, so this is a May 22 question. So this is for computation of interest liability. Agni Limited filed GST return under section 39 for the month of January 2021 on 11th April 2021. Original due date for the said return was 20th February. Yes, for January, return under section 39 means what? Usually GSTR 3B needs to be filed by 20th of February. Details of tax assessed as payable for the said month are given below. Output tax payable 1,80,000, tax payable under reverse charge 40, input tax credit available for utilization is 70,000 rupees. So what does it mean? This 70,000 rupees includes this 40,000 also. Input tax credit available for utilization means what? Whatever GST they paid under RCM also avail and ready for utilization, means this 40,000 is included in this 70,000. Okay, that is a meaning. Compute the net tax payable in cash while filing the said return as well as the interest payable for delayed remittance of tax. Let's see the liability first. So first we need to take output tax under FCM. What is that? 1,80,000. 1,80,000 minus 70. So that is 1,10,000. 1,10,000 plus 40. So that is 1,50,000 will be taken as the net GST payable using cash ledger, electronic cash ledger. And what is the liability here? So this 1,50,000 is net liability. By when they should have paid? 20th February, but they filed a 3B on 11th April 2021. So for delay in filing 3B, so interest needs to be computed under section 50, but not on gross liability, on the net liability. Net liability means that amount which is payable through cash ledger. So on this 1,50,000 we need to compute the interest. What is the rate of interest? 18% per annum. From when to when? From the first date after due date. What is the due date? 20th February. So we need to count from 21st February. So in February we have 8 days, and in March 31 days, and in April 11 days. So therefore 50 days we need to compute the interest. So 1,50,000 into 18% into 50 divided by 365, 3,699 is the interest under CGST and interest under SGST. Okay, so that is how we need to compute. And assuming that, so this is the first part over. Assuming that the company has an ITC balance of 2,50,000 each under CGST, SGST for the said month, compute the interest payable if the entire tax due for the said month was paid through electronic credit ledger to the extent possible as per the provisions of the act. Means if they already have a ITC balance of 2,50,000, we can use the 2,50,000 for payment of liability, then net liability will be 0. No. Net liability will not be 0 because we cannot use input tax credit for payment of GST under RCM. So again we need to calculate how 1,80,000 plus input tax credit 70,000 plus 2,50,000. So full input tax credit used for FCM liability, but RCM liability should definitely be paid by cash ledger. So therefore RCM liability how much? 40,000. So that 40,000 we need to compute the interest because there is a delay in filing 3B. So interest will be computed on 40,000, 18% for 50 days. So 986 and 986. So that is the answer for the second part. So what we will do is that we will miss out this point and use input tax credit for payment of even RCM liability and say that the liability, net liability is 0, so interest not available. So no, we have to compute this way only. And here, why are we not taking rule 86B? If you see rule 86B, we need to know the turnover. We don't have the information related to the turnover. Had we got the information related to the turnover or the rate, so we would have taken so that rule 86B, okay. As turnover information in a month is not available, 86B restriction is not applied. Be careful here. So this 86B restriction we need to apply in every question wherever possible. You check that. That is wherever there is a question related to net GST payable, there we need to apply this. Then question number 30. Question number 30 is a question which I have coined and it is not there in any past exam, etc. This is on interest computation under QRMP scheme. Say this, Arpit has opted for QRMP scheme for quarter 1, April 21 to June 21 of financial year 2021-22, and its total tax liability, cash liability for the said quarter was 1 lakh. Okay. Arpit continues under QRMP scheme for quarter 1, July to September, and gives the following details. So they opted for QRMP for the first quarter, April to June, and its total tax liability in cash for the said quarter was 1 lakh. Now Arpit continues under QRMP and gives the following details. Self-assessed tax liability, cash liability of 40,000 paid on 31/8/2021 for July. For July month, what will be taken as the due date? For July it will be 25th of August. But when they are paying 31st August, so how many days delay? There is a delay by 6 days. For that 6 days, we need to compute interest on 40,000. So 40,000 into 18% into 6 divided by 365. So that will be 118 rupees we need to pay as interest for July. Then August 2021, self-assessed tax liability is 10,000 paid on 10/10. So for August it will be 25th of September, because under QRMP, what is the due date of payment of tax? 25th of the month following every month for the first 2 months in the quarter. So therefore, August it will be 25th of September, but they are paying on 10th of October. So in September 5 days, in October 10 days, 15 days. So 10,000 into 18% into, so 15 divided by 365. So that will be 73.97, 74 rupees. Then September 21, self-assessed tax liability of 70,000 paid on 11/11. So for September month, by when we need to pay? For the quarter, so July to September, 3B needs to be filed by 22nd or 24th of the month following the quarter. So what is the month following the quarter? October. So by October 22nd, it should be filed. Okay. So here we don't have the information as to the state. So assuming that, so it is 22nd October, but in exam it will be clearly given. So 22nd October will be taken. So 22nd October means 11 November. How many days? In October, so therefore 9 days, and in November 11 days, so 20 days. For 20 days we need to compute interest on 70,000. 70,000 into 18% into, so 20 divided by 365, that will be 690.4. So 690 will be taken. This is the total liability. Okay. Now they may give a different scenario. Interest fixed sum method of payment is opted. This so far what we have seen is self-assessment method. Suppose if it is fixed sum method, what will happen? In case of fixed sum method, so we need to take the liability as 35% for the first 2 months of the quarter. We need to take 35% of the liability of the previous quarter. What is the liability of previous quarter? 1 lakh. 1 lakh into 35% is what? 35,000. So in this case, for July it is 35,000. August it will be 35,000. Then for September, how much it will be? What is the total liability? The total liability is 40 plus 10, 50, 50 plus 70, 1 lakh 20. 1 lakh 20 minus, already how much is paid? 35 and 35. So therefore, for September, the liability will be 50,000. 1 lakh 20 minus 70 already paid. So the remaining will be 50,000 is the liability for September. And the period will remain the same, no doubt. So therefore, that 6 days, 15 days and 20 days, that 6, 15 and 20 will be taken, but the amount alone will be changing. Accordingly, the interest also will be changing. Now, case C, interest fixed sum method is opted for month 1 and self-assessment method for month 2 in the quarter. Possible? Yes. there is no issue, we can go. So month 1 under fixed sum, month 2 under self-assessment, like that we can do. In that case, what will happen? For month 1, what is the fixed sum? 35,000. So take 35,000 and 6 days interest. And for month 2, self-assessment. Self-assessment, how much they are showing? 10,000. So that 10,000. Now, differential liability. What is the total liability? 40 plus 10 plus 70,000. That will be 1,20,000. In that 1,20,000 already how much is paid? 35,000 and 10,000. So therefore remaining 75,000 will be taken as September month liability, and the period will be same, 6 days, 15 days and 20 days. So that will be taken. But we don't have the actual liability of each and every month. So for that actual liability of each and every month, accordingly we need to compute the interest also. So from 25th of the month following every month till the date of payment. So if we have the breakup of actual liability for each and every month. So this is a plain interest computation under fixed sum method and self-assessment method for QRMP. Again, on QRMP interest computation, they have not asked any question up to May 23 exam. So there is a chance of asking question on interest computation under QRMP. So little bit you revise that and go when you are going for the exam. Okay. Then next one, list any 4 records required to be maintained by an agent under CGST rules. This is on accounts and records. So generally, what are the accounts and records to be maintained by every registered person? Remember I formats. What is that I formats? So inward supplies, records pertaining to inward supplies. I. F for foreign trade, that is import and export. Then O, outward supplies. Then R, that is on the inward supplies. What are the supplies on which R is payable? Then M, manufacture and production related. A, advances received, adjusted and the balance. T, tax details. And S, stock of goods. These are the regular records to be filed by a registered person. So this you remember. And being an agent, additionally they need to maintain, so whatever authorization they received from each principal, and also description, value and quantity of goods or services received on behalf of every principal, and even so supplied on behalf of each principal. So whatever purchases they are making on behalf of principal, what are all the supplies they are making on behalf of each principal, separately we need to maintain. Then details of accounts furnished to each principal, and tax also, whatever tax details, that is inward supplies, outward supplies and tax details, okay, everything should be maintained with respect to each principal. That is this. Okay. So this question, because many attempts they have asked this question, so they may again repeat it for theory. So that's why it gave you, it's a simple answer only. So we will not be able to know what we need to write. That's why I just gave you this. Then next one, question number 32. Okay, see this question number 32. This is November 2018 question related to computation of interest on account of provisional assessment. Divi trader obtained permission for provisional assessment and supplied 3 consignments of furniture on 28th April. The tax payment on provisional basis was made in respect of all 3 consignments on 20th May. So the supply happened in April. For April month, what is the liability? Due date 20th of May. So they made the payment under provisional assessment by the due date. Consequent to the final assessment order passed by the assistant commissioner on 21st June, a tax of 1,20,000 and 1,50,000 became refundable on first and third consignment, whereas a tax of 1,20,000 became due on second consignment. So with respect to the first consignment and third consignments, so no, first and second consignment 1,20,000 and 1,50,000 became refundable on first and third. Okay, whereas on second consignment tax of 1,20,000 became due. Okay, Divi trader applied for the refund of tax on first and third consignment on 12th July 2021. What is the time limit within which the refund should be granted? Within 60 days from the date they make application for refund, and pays the tax due on second consignment on the same day. Tax was actually refunded to it on first consignment on 8th September, whereas on third consignment on 18th September. Customers of Divi traders who purchase the consignments have not taken ITC. Determine the interest payable and receivable if any. With respect to the first consignment we will take. So how much is the amount refundable? 1,20,000. And what is the date on which they made application for refund? 12th July. And when the refund is given? 8th September. So is it within 60 days? Yes, within 60 days. So therefore, in case of first consignment refund, there is no interest that is payable by the government. So with respect to the first consignment, there is no interest. Okay. So reason being, so what is the date on which application is made? 12/7. What is the date of refund? 8/9. So within 60 days, so interest shall not arise in this case. Then second consignment, we need to pay. Okay. Second consignment, what is the amount that is payable? 1,20,000. So this 1,20,000 pertains to which month? April month. By when it should have been paid? 20th May. So, but when are we paying this 1,20,000? We are actually paying it on 12th of July, because second consignment on the same day, 12th of July. Now count the number of days. So 20th May, so 21st May onwards. So in May 11 days, and in June it will be 30 days, and in July it will be 12 days. For 53 days, we need to pay the interest, because in case of provisional assessment gets finalized, the interest payable on difference at 18% per annum from the first date after due date till the actual date of payment. So for 53 days, we need to compute the interest on second consignment. So 1,20,000 into 18% into 53 by 365, 3,136.44 rounded off to 3,136 is what we need to pay as the interest to government. Then with respect to third consignment, what is the amount refundable? 1,50,000. And when are we making application? 12th of July. And when are we getting the refund? We are getting refund on 18th September. So you count whether it is within 60 days or not. 12th July. So 31 minus 12. So therefore in July 19 days, and in August 31 days. So 50 days already over. And September, so 10th plus 10, September 10th is the 60th day actually. But they are paying on 18 September, so 8 days delay. For this 8 days delay, interest will be payable by the government to us at 6% per annum on amount of refund. So 1,50,000 into 6% into 8 divided by 365. So interest and all you normally compute. So you don't have to split between CGST, SGST, because you are taking the total amount on that you are computing. Suppose if the tax given is CGST, SGST separately, accordingly you will compute the interest also separately. Then question number 33. So this is a Jan 21 question related to appeals. Anirudh Limited is registered in Telangana and paid IGST on a transaction considering the same to be interstate supply on the basis that the customer is situated in Delhi. However, GST authorities have raised a dispute and issued a show cause notice that since the services are rendered within Telangana, it is an intrastate supply leviable to CGST and SGST. Anirudh Limited lost the case before the proper officer and also in the first appeal before the Department Appellate Authority. Advise Anirudh Limited regarding the following. First question. Can Anirudh Limited file an appeal against the order of first appeal authority? If yes, before which forum can Anirudh Limited file the said appeal? So what is the second appeal? Second appeal to GSTAT, Appellate Tribunal. And in that Appellate Tribunal, we have two benches, national bench or regional bench, state or area bench. As the issue is related to other than place of supply or other than place of supply, the issue is related to place of supply. So therefore, we need to make appeal to national bench or regional bench of GSTAT. Then second, once a valid appeal is filed by Anirudh Limited, before the appropriate forum, can the authorities insist Anirudh Limited to deposit CGST, SGST, which the authorities are claiming that Anirudh Limited ought to have been paid but not has paid? No. So only pre-deposit. They don't have to pay full amount, but only the pre-deposit needs to be paid. So what is that pre-deposit? So 20, whatever is the admitted due, whatever they have admitted, that plus 20% of the disputed tax. So that should be paid as the pre-deposit subject to maximum 50 crores. Okay. Then third, if Anirudh Limited loses at the second appeal stage as well, is there any other statutory forum available for Anirudh Limited to file another appeal? If yes, before which forum? So the next appeal will be with Supreme Court, because if the national bench or regional bench, because the issue is related to place of supply, na? So the further appeal lies with Supreme Court in this case. So but not with High Court. Then assume that Anirudh Limited loses at all levels, would there be any interest liability on Anirudh Limited? No, because it is CGST as GST payable. Instead of that, we paid IGST. So it is revenue neutral. We don't have to pay any interest. Upon payment of correct tax as per section 77, we will get the refund of the wrong tax. So we don't have to pay any interest, and even penalty also shall not arise in this case. So that is with respect to this. So no interest will arise. So it's a very good question on appeals interest related provisions. Then question number 34. This was asked for May 19 for 4 marks. So this is related to the penalty under 129. Again the same question got repeated in November 22 exam also. Okay. So but many students did not write the answer properly. It is related to an amendment related to penalty under 129. Have a look into this question. XYZ carries goods from Vadodara, Gujarat to Pune, Maharashtra. The value of the goods is 80,000, which are chargeable to tax at 18% IGST, and in transit proper officer intercepted the same under section 68 of CGST Act and found contravention. Calculate the penalty payable under IGST Act if XYZ come forward for payment of tax and penalty. First we will compute the penalty under 129 of CGST Act, multiply with 2 is the penalty under IGST Act. So what is the penalty when the XYZ comes forward? So when the owner of the goods come forward to pay the penalty, it will be 200% of tax. 200% of tax is the penalty. So now what is the tax here? So 18% IGST directly given, IGST given. So on that IGST you compute 200%. So therefore 80,000 into 200%, 1,60,000 will be taken as the penalty. 80,000 is value, na? Okay. So 80,000 into 18% into 200%. So that is 28,800 will be taken as the penalty under IGST Act. Suppose if it is penalty under CGST Act, what you should do? Simple. You convert this for CGST 9%. So 80,000 into 9% into 200%, 14,400 will become the penalty. Then suppose if XYZ is not coming forward for payment, then what will be the penalty? 200% of tax or 50% of value. This is under CGST. So when it is IGST, double, 100% of value. So 200% of tax or 100% of value, whichever is higher. Okay. So what is the 100% of the value? 80,000. What is 200% of the tax? So 28,800. So whichever is higher is what? 80,000. So that 80,000 will be taken. Suppose if it is under CGST alone, simple, 50% of the value. So 40,000 or 14,400, whichever is higher, 40,000 will be taken. This is when, so when the penalty is payable for release of the goods under section 129. What will be the penalty payable for release of the conveyance? Whatever is the penalty payable for release of goods or 1 lakh, whichever is lower under CGST. So when it is IGST, it will become 2 lakhs. 1 lakh under CGST, 1 lakh under SGST. So therefore 2 lakhs. But usually 99.99% of the cases, they will ask the questions only on CGST only. So you don't have to worry. So only half information, that only we need to write. We don't have to multiply with 2. Okay. So remember the provisions here. When owner is coming forward, 200% of tax. When owner is not coming forward, 200% of tax or 50% of the value, whichever is higher. And suppose for release of goods, it will be penalty payable for release of goods or 1 lakh, whichever is lower is the penalty payable for release of conveyance. Okay, that is this. Then next question number 35. Examine whether the offences committed in each of the following independent cases are bailable. Further determine the quantum of punishment on prosecution under the CGST Act in each of these cases. Homi Gaba collects 240 lakhs as tax from its clients and deposits 150 lakhs with the central government. Balance amount of tax is not paid to central government. It is found that he has falsified financial records and has not maintained proper records to evade the tax. Now what we need to determine here? We need to determine, so quantum of punishment on prosecution. So what are the offenses that leads to imprisonment? So biodiscredits TFT minus ISRD STT. In this, what is the offense here? Collected an amount as tax and not paid within 3 months is an offense that attracts imprisonment. Okay, and in this offense, so the amount involved should be more than 1 crore, then only the imprisonment gets attracted, but 240 and deposits 150. So what is the difference? 90, as it does not exceed 1 crore, there is no imprisonment because of this offense. But there is another offense. It has also found that he falsified the financial records. So for BOT, bought, books of accounts default, obstructing an officer from doing duty, tampering material evidence, the imprisonment will be up to 6 months or fine or both. So that particular imprisonment is applicable here. So for falsification of financial records, punishment up to 6 months or fine or both, and generally only 3 offenses are cognizable and non-bailable. What are they? IIC, invoice default, ITC default, collected an amount as tax not paid within 3 months. These 3, that too when it exceeds 5 crores, then only non-bailable. Otherwise, all offenses are bailable offenses. Okay, so that's what we need to write here. And first case, as the amount does not exceed 1 crore, so will not be punishable with imprisonment. Then second, and this is in case of first time offense. What if it is subsequent? What if it is repeat the offenses? In case of repeated offenses, always the imprisonment will be up to 5 years plus fine. So therefore, in this case, if Homi Gaba and Datukeshwar that repeat the offense, the imprisonment will be up to 5 years plus fine, and there is a minimum imprisonment of up to 6 months. Then there is minimum imprisonment 6 months and up to 5 years. That's how we need to write. Then second, Datukeshwar Dutt collects 630 lakhs as tax from its clients, but deposits only 120 lakhs with the central government. Balance amount of tax is not paid to the central government. What would be the implications in the above case if Homi Gaba and Datukeshwar Dutt repeat the offenses? That already we saw. Now collecting 630 lakhs and paying only 120. So 630 minus 120 is how much? 510. Collected an amount as tax and not paid within 3 months. So and the amount exceeds 5 crores. So the imprisonment will be up to 5 years plus fine and minimum 6 months. First time also same, subsequent also same. Okay, and also that is 6 months minimum, up to 5 years plus fine. Also, as the amount exceeds 5 crores, and this is an offense which is cognizable plus non-bailable. So this is a non-bailable offenses. Okay, so that is about this question number 35. Now we are moving on to the next question, that is question number 36. So this is an RTP November 21 question. Nirmal Private Limited, registered in Wasim, Maharashtra, is engaged in supply of taxable goods and services. In the month of April, it sold goods worth rupees 5 lakhs excluding GST to Suraksha Enterprises and collected tax at 28% on the said goods from the buyer. However, the actual rate of tax applicable in the given case was 18%. So instead of 18%, they are collecting 28%. So they collected 10% in excess. So that 10% is known as amount collected as tax. Nirmal Private Limited deposited the tax at 18%, but they deposited only 18% on these goods to the government on the due date and retained the remaining tax collected. Determine the amount of penalty, if any, that may be imposed on Nirmal Private Limited in the month of October in the given case, ignoring interest any if payable. So here they need to pay the difference 10%. So what is the difference that is 10% in this case? So the difference of 10% will be like 5 lakhs into 10%, because value of the goods is 5 lakhs na. So 5 lakhs into 28 minus 18, 10%, that is 50,000. So 50,000 is the amount of tax evaded. And what is the penalty that is payable? So penalty will be, so under which section? 122 subsection 1, any amount collected as tax but not paid within 3 months. So penalty will be 10,000 rupees or 100% of the tax, whichever is higher, under section 122 subsection 1. So accordingly, under 122 subsection 1 of CGST Act, so here we are taking this as GST. So single computation we are making. So 10,000 rupees or 50,000 rupees, whichever is higher. So that will be 50,000 rupees that will be taken. And then next one, Bindu sir, Chief Executive Officer of Ashoka Solutions Limited, is issued a summon to appear before the central tax officer to produce the books of accounts of Ashoka Solutions Limited in an inquiry conducted on the said company. Determine the amount of penalty, if any, that may be imposed on Bindusar if he fails to appear before the central tax officer. So, whenever summons are issued and if a person is not appearing, or if a person is party to the offence, then penalty will be under 120 subsection 3. So, in this case the penalty will be 120 subsection 3, which is up to 25,000 under CGST Act, and the same amount will be payable under SGST Act. Now, in this case, suppose if they are asking what is the penalty payable, in the first situation, if they ask what is the penalty payable under CGST Act, then automatically what you need to do, this difference will be 10%. So, that 10% will be taken and 10,000 rupees into 5%, because instead of 9% they are collecting 14%. So, that difference will be taken. Okay. So, but in exam, whenever they give the rate of GST as this total, you do the total computation only like this, and no need to change anything. And second case also, you need to write penalty which can be levied up to 25,000. So, only CGST related information you write, that is sufficient. Then next, question number 37. So, this is past exam question for November 18. So, what is the procedure to be followed by authority for advance ruling for the purpose of pronouncing any ruling? So, this procedure we need to write. So, you need to remember, first what will happen, any person who is having a question related to which they need a clarification. So, like the question can be related to whether an activity is supply or not, whether it is taxable or not, and what is the value of supply, what is the time of supply, etc. So, in that case they can make an application for advance ruling, and that application for advance ruling will be made before the AAR. So, that is authority for advance ruling. Upon receipt of application, the authority for advance ruling shall send a copy of the application to the officer in whose jurisdiction the applicant falls. Okay. So, why? Because maybe what is the proceeding of the case, and even the jurisdictional officer should also be informed. So, that is the reason why the authority for advance ruling will forward the application to the jurisdictional officer, and thereafter they will examine the application along with records, and they will decide whether to accept or reject the application. Suppose if there is an issue which is already decided is pending, so then in that case, so they will not pronounce any ruling, so otherwise they will be accepting the application. So, now application for advance rulings will not be admitted in case where the question raised in the application is already pending or decided in any proceedings in the case of an applicant. Suppose if the proceedings are pending before the officer, so in that case, so definitely advance ruling is not possible. Suppose if the application is rejected, so they need to specify why they are rejecting. So, means they should give the reasons for rejection. So, speaking order giving the reasons for rejection, and after an opportunity of being heard to the applicant. Suppose if the application is admitted, they will pronounce the ruling. So, based on the question, and if they need any further information, they will get it from the department officer. And what is the time limit within which they need to pronounce the ruling? So, they need to pronounce the ruling within 90 days from the date of receipt of application, and they need to give the copy of the order, that is advance ruling order, so to the person, that is applicant, and to the jurisdictional officer. Also, if there is any difference of opinion, so usually this authority for advance ruling, if there is any difference of opinion, then the matter will be forwarded to appellate authority for advance ruling for hearing the issue. So, this is the procedure. So, this procedure maybe again it can be tested in exam. So, because quite a long time they did not ask any question related to advance ruling. So, that is why I have given this. Then look into the next question. So, this is July 2021 question for 5 marks. It is a very good question, but again as per summary of examiner comments, many students did not write the answer properly for this. Discuss the amount of tax and penalty to be paid, if any, in the following independent cases where show cause notice are issued under section 74 of CGST Act. Number 1, date on which credit was taken is 31st January 2019, and amount of input tax credit taken wrongly is 200. Adjudication order passed on 26th July demanding the entire amount of credit with interest and imposing amount equal to credit as penalty. Okay. Now, what happens in all the cases, Assi want to pay the amount by 29/2021. So, in case of section 74, so we have a reduced penalty. What is the penalty in case of 74? The general penalty will be 10,000 rupees or 100% of the tax, whichever is higher. So, tax or ITC or erroneous refund. Okay. 10,000 rupees or 100% of the tax or ITC or erroneous refund, whichever is higher, will be taken as the penalty under section 74. So now this particular penalty under section 74, if it is paid before show cause notice, it will be reduced to 15%. And if it is paid after show cause notice within 30 days, then it will be reduced to 25%. Suppose if it is paid after 30 days from show cause notice and within 30 days from adjudication order, then the penalty will be 50%, and after 30 days from adjudication order, the regular penalty will be payable. So that is the procedure in this case. Now here if you see, so on 31st January 2019, 200 rupees is the amount of input tax credit that is taken, 200 lakhs. So now 26 July is the adjudication order, order itself is passed. After order, whether the payment is made within 30 days, so 29/2021 July, no, definitely it is not within 30 days. So full penalty will be payable. And what is that penalty? 100% of the ITC. So therefore 200 lakhs will be payable as the penalty. Then next case, adjudication order passed on 26th August, demanding the entire amount of credit with interest, and the person has made the payment on 29. So 26th August to 20th September, is it within 30 days from adjudication order? Yes. As the payment is made within 30 days from adjudication order, the penalty will be, so 50% of the original penalty. So how much will be payable? So 100 lakhs. So what is the penalty in this case? 250 na? So 250 into 50%. What is 250 into 50%? 125 lakhs will be payable as the penalty. Then third case, date on which credit wrongly taken 30th October, amount is 120. Show cause notice has been issued on 5th September, demanding the entire amount of credit with interest and proposing penalty equals to 100% of the credit taken 5th September, and the payment is made within 30 days from the show cause notice, then automatically penalty will come down to 25%. So therefore 120 into 25%. So what is 120 into 25%? 30 lakhs will be taken as a penalty. Then next, fourth one. So date on which credit was wrongly taken 30th January, and amount of input tax credit wrongly taken 50 lakhs. Statement of the managing director has been recorded on 6th September, wherein he has admitted the non-receipt of the inputs and availing credit wrongly. So before notice itself, so he has admitted and he has made the payment. Okay. So then in that case, what will happen? So the payment is made before show cause notice, so the penalty will be 15%. Okay. So 15%, that is 7.5 lakhs. Suppose if the show cause notice is already given by that time, so then in that case, so 25% will be taken, because after show cause notice within 30 days, so it will be 25%. So that's why two alternatives. It is assumed that the payment has been made within 30 days from show cause notice. So then in that case 25% will be taken. So as alternative to it, can be assumed that the payment is made before show cause notice, because specifically they have not given the show cause notice date. So therefore, if the payment is made before show cause notice, 15% of the penalty, that is 7.5 lakhs will be payable. It's a very good question. So they have not tested this question in the exams thereafter. So July 2021 they asked, thereafter they did not test this question. Even the similar penalty is there under 73 also. 73 penalty also, if you pay before show cause notice, you don't have to pay the penalty. Completely it is waived off. And if you pay within 30 days from show cause notice also, fully it is waived off. Otherwise you need to pay the full penalty. So maybe on those lines also they can ask a question. Then next question number 39. This is on refunds. Kailash Global Private Limited supplies various goods in the domestic and international market. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. The company exports goods without payment of tax under letter of undertaking. Means what? Which option it is? Option 2. So option 1, export upon payment of IGST. Option 2, export without payment of IGST under bond or LUT. So this is option 2, and the company has made the following supplies during a tax period. Number 1, export of product A to UK for $10,000, assessable value under customs in Indian rupees. So export of goods is a zero rated supply. Export duty is levied. So we have two options for refund. Number 1, refund upon payment of IGST. Number 2, refund without payment of IGST under bond or LUT, will get the refund of ITC. But under option 2, we have restriction that you should not pay customs duty on export. If you pay customs duty on export, you will not get the benefit under option 2. In this case, they are paying the export duty on product A, which means they will not get the refund of unutilized ITC. Okay. Can they go for option 1? They can go for option 1, but they have decided not to go for option 1, because the company exports goods without payment of tax under letter of undertaking. So that is a policy that the company has taken. Due to that reason, option 1 refund is not possible, which means in this case, even though it is zero rated supply, there is no refund. Then how we need to treat this? We need to treat it like normal. So that is export of product A $10,000. So this will be treated like a normal. So of course they are exporting without payment of GST, but they will not get the refund of ITC. Okay. Then next number 2, domestic supplies of taxable product B during the period excluding tax at 5%. So this is local sales. And what is the rate of tax on product B? 5%. Inputs used in manufacturing such goods are taxable at 18%. Means the purchase is taxable at 18% and the sales is taxable at 5%. It is known as inverted tax structure. So in case of inverted tax structure, what is it we need to do? So we need to take refund of unutilized rate. You see, what is the inverted tax structure? So the rate of GST on outward supply is less than the rate of GST on inward supply. It is known as inverted tax structure. So this is a case of inverted tax structure, and we will get the refund of ITC. We will get a refund of ITC on account of inverted tax structure. And we have one condition there, that is these goods should not be notified for non-availability of the refund. So not notified as product in respect of which refund of unutilized ITC shall not be allowed. So it is not notified goods, therefore we can claim the refund. Then supply of goods to EOU. Supply of goods to EOU is deemed export. So whenever we are making supplies to EOU, that's a deemed export. In case of deemed export, either the supplier can claim refund or the recipient can claim refund. So two options are available. Supplier will recover the GST from the recipient, then the recipient will take ITC and he will get the refund. Who? Recipient. Whereas supplier will not recover the GST from the recipient, he will pay out of his pocket and he will get the refund. In this case, let's see what has happened. Supply of goods to EOU excluding tax at 18%. ITC has been claimed by the recipient. So when recipient claims ITC, how the supplier is treating it? Like a normal sale, supplier recovers the GST. So here who will claim the refund? Recipient will claim the refund, not the supplier. So therefore, Kailash Global Private Limited, they are asking. So therefore, no refund in this case, because the refund will be claimed by the recipient. Then number 4, export of exempted supply of goods. So goods are basically exempted. So when it is exempted, ITC not available. But the moment those exempted goods are exported, it will become zero rated and ITC will be available. So it is export of exempted supply of goods. So it will become zero rated, and so we will get the refund of unutilized ITC in this case. So refund of ITC is possible in this case. Refund of ITC is possible in this case. So there are two refunds in this question. One is refund of ITC on account of inverted tax structure. Another is refund of ITC on account of zero rated supplies. Then ITC available for the above tax period is as follows: on inputs, on capital goods, on input services. Now what is the question? Determine the maximum amount of refund admissible to Kailash Global Private Limited for the given tax period. First we will see refund of ITC on account of inverted tax structure. So what is the refund of ITC? Refund of ITC on account of inverted tax structure. Inverted tax structure. How to calculate this refund of ITC on account of inverted tax structure? So first we need to take, in case of refund of ITC on account of inverted tax structure, first the formula will be net ITC into, so inverted turnover by adjusted total turnover, So this is first part, minus net ITC into numerator tax on inverted turnover. This is the updated formula. Tax on inverted turnover divided by ITC with respect to inputs and input services. Means out of inputs and input services, how much is paid using the inputs and input service, proportionate to that. So that is this meaning, ITC with respect to inputs and input services. Okay. Now, so therefore total we need 5 data here. So this is the formula, and total we need 5 data here. Number 1, net ITC. So what will be taken as net ITC? Only ITC with respect to inputs. So 5 data, net ITC. Number 2, inverted turnover, and number 3, adjusted total turnover, and number 4, tax on inverted turnover, and number 5, ITC with respect to inputs and input services. So that should be taken. These are the 5 data that we need to take: net ITC, inverted turnover, adjusted total turnover, tax on inverted turnover, ITC with respect to inputs and input services. So what will be taken as the net ITC? Net ITC will be taken as the ITC with respect to inputs. How much is this? 3,50,000. So 3,50,000 will be taken here. Net ITC 3,50,000. But in that 3,50,000, they are telling, so why can't we take input services? Input services should not be taken, only input should be taken in case of refund of unutilized ITC on account of inverted tax structure. So 3,50,000, but in that 50,000 on export of exempted supplies. See, the moment exempted supplies are exported, it will become 0 rated and we can enjoy the ITC, no issue. Then what is the second thing that we need to know? Inverted turnover. In this, what is the inverted turnover? This 10 lakhs will be taken as the inverted turnover. So that will be 10 lakhs inverted turnover. Then adjusted total turnover. What should be taken in adjusted total turnover? All turnovers except exempt supplies. So 7 lakhs, yes, 7 lakhs will be taken, and 10 lakhs will be taken, and supply of goods to EOU 5 lakhs, that will also be taken, and here 6 lakhs. But we have one comparison that needs to be done. Whenever we are exporting, so we need to compare it with 1.5 times the domestic value of these goods, and whichever is lower should be taken. So 6 lakhs or 1.5 times of 5 lakhs, whichever is lower is 6 lakhs only. So therefore we will be taking 6 lakhs as the turnover. So 7 plus 10 plus 15 plus 6, how much it will be coming to? 28 lakhs. So 7 lakhs plus 10 lakhs plus 5 lakhs plus 6 lakhs, 28 lakhs will be taken. So therefore adjusted total turnover will be 28 lakhs. And what is the tax on inverted turnover? 10 lakhs is the inverted turnover na. On that, what is the rate of GST? 5%. So 10 lakhs into 5%. 10 lakhs into 5%, that is 50,000, will be taken as the tax on inverted turnover. Then ITC with respect to inputs and input services. So ITC with respect to inputs and input services, if you see, 3,50,000 plus 2 lakhs. But in this 2 lakhs, 18,000 on outdoor catering. Whether we would have taken that credit? No. Outdoor catering is a blocked credit. Exception number 1, inward supply, outward supply, same category, not applicable here. Exception number 2, inward supply part of outward supply, that is also not applicable here. Exception number 3, so if it is incurred under a statutory obligation by employer to employee, that is also not applicable here. Therefore, in this case, ITC not available on 18,000. So 1,92,000, 1,82,000 will be taken in this case. So 3,50,000 plus 2 lakhs minus 18,000. So that will be 5,32,000. 5,32,000 will be taken. So these are the numbers we got. And how to calculate the refund? Simple. The refund will be equals to, maximum refund will be equals to 1 into 2 by 3 minus 1 into 4 by 5. 1 into 2 by 3 minus 1 into 4 by 5. What is that 1 here? That 1 will be net ITC 3,50,000. 3,50,000 into 2 by 3. So what is that? 10 divided by 28 lakhs. 10 divided by 28 lakhs minus 3,50,000 into, what is the tax on inverted turnover? 50,000 divided by 5,32,000. So 3,50,000 into 10 divided by 28, so that will be 1,25,000 minus 3,50,000 into 50,000 divided by 5,32,000, so that will be coming to, so 32,895. So the remaining 1,25,000 minus 32,895, so that will come to 92,105 will be taken as the refund. So 92,105 is taken as the refund on account of inverted tax structure. Then what is the second refund? The second refund will be refund of ITC on account of zero rated supply. How to calculate the refund of ITC on account of zero rated supply? Refund of ITC with respect to zero rated supplies. Zero rated supplies. So refund of ITC with respect to zero rated supply. So how much will be taken? Maximum refund. So maximum refund equals to net ITC into. So we need to first take net ITC into what by what? Zero rated turnover divided by adjusted total turnover. So zero rated turnover by adjusted total turnover. Adjusted total turnover should be taken. So what is the net ITC? Net ITC here is with respect to both inputs and input services. We will get both. So not only with respect to inputs, even with respect to input services we will be taking. So therefore inputs 3,50,000, input services 2 lakhs minus 18,000. So therefore that 5,32,000 which we already took na. So the same will be taken as net ITC. So that is the difference between refund of ITC on account of inverted tax structure versus refund of ITC on account of zero rated supplies. So in this refund of ITC on account of zero rated supplies, in net ITC we will be taking 5,32,000. And what is the zero rated turnover? So zero rated turnover will be, so export of goods upon payment of IGST or without payment of IGST, that is whichever cases we are able to get the refund that should be taken. What is the case where we get the refund? 6 lakhs. Again we need to compare it with 1.5 times the domestic supplies. So whichever is lower, so that is 6 lakhs only should be taken. So 6 lakhs will be taken as the zero rated turnover. And what is the adjusted total turnover? So adjusted total turnover, same, already we have computed. So what is that adjusted total turnover? 28 lakhs. So that will be taken. And what will be the maximum refund in this case? So the maximum refund in this case is 5,32,000. Now you may get a doubt. Sir, already we claimed some refund as sir under inverted tax structure. Should we take it again? See, these are two formulas. Ultimately, how much is the balance in ITC? That much we will get as a refund. Okay. So 5,32,000 into zero rated turnover is 6 lakhs divided by adjusted total turnover 28 lakhs. That equals to. So 5,32,000 into 6 divided by 28. So 1,14,000 we will get as the maximum refund. Okay. So 1,14,000 we will get as the maximum refund. Now in this case, they may also ask, what is the actual amount of refund? Here the question is, what is the maximum amount of refund? We computed. Suppose if they ask, what is the actual amount of refund? Whether we have that much of balance in ITC, we need to check. We have. Because if you see, what is the total ITC that we have? 3,50,000 plus 1,20,000 plus 2 lakhs minus 18,000. So therefore we have 6,52,000 as the opening balance, minus we have the liability. So in the first case, no liability because it is export without payment of GST. Second case, there is liability. How much is the liability? 10 lakhs into 5%, 50,000 we will be paying, minus, so on this 5 lakhs also we will be paying GST. 5 lakhs into 18%, 90,000. On the 6 lakhs, no GST. How much is the balance we have? 6,52,000 minus 50,000 minus 90,000. So that will be 5,12,000. So 5,12,000 is the ITC we have. Here what we are claiming as refund is just 1,14,000 and 92,105. Easily we will be able to get the refund. So the actual refund also will be the same amount as the maximum refund. Okay. So that's how we need to arrive at the answer. Suppose if they ask that question, otherwise you just write the maximum refund, that will be sufficient. Then question number 40, this is the last question in GST. Answer the following questions. What is blocking of e-way bill generation facility? So whenever a person has contravened certain provisions of the law, so then the e-way bill generation will be blocked. So that is known as blocking of e-way bill facility. And so who is not whose e-way bill will be blocked? If a person has not filed the returns, so that person's e-way bill will be blocked. What returns? GSTR 1, GSTR 3B and even CMP 8, that is composition scheme return. For how many periods? So 2 consecutive tax periods if they are not filing returns. So and even if there is any suspension of registration, in that case also e-way bill will be blocked. That is with respect to this. Now if proper officer finds any discrepancies on comparing details of outward supplies in GSTR 1 and GSTR 3B, GSTR 2B with 3B and registration has been suspended. So in that case, can the e-way bill will be blocked? So basically e-way bill will be blocked if he has not furnished for 2 or more consecutive 3B or GSTR 1 for 2 months or 2 quarters or whose registration has been suspended. Okay. So therefore in this case, this is the reason for suspension of registration. So if there is any difference between these two, that is one of the reason for suspension of registration. Then also e-way bill will be blocked. Whether the recipient can generate e-way bill of blocked GSTN, indicating them as supplier and vice versa. No person can generate. If I am not filing returns as a supplier, if my e-way bill is blocked, so even my recipient or transporter or any other person cannot generate e-way bill with respect to my outward supplies. Okay, then can the transporter, e-commerce operator, courier agency generate e-way bill in respect of blocked GSTN either as supplier or recipient? No. So as a supplier, when the e-way bill is blocked, so no person can generate. However, as a recipient, suppose if my e-way bill is blocked, as outward supply is only blocked, but with respect to my inward supplies, it is not blocked, which means for that can the e-way bill be generated? Yes. For example, I have not filed returns. When I have not filed returns with respect to my outward supplies, I cannot generate e-way bill and any other person also cannot generate e-way bill. Whereas with respect to my inward supplies, so yes, e-way bill is possible. The restriction is only for the outward supplies, not for the inward supplies. Then whether unblocking of e-way bill can be made. Yes, commissioner on receipt of application by the registered person in EWB 5. So and he is filing the returns or he has given proper reply. So based on that, so commissioner will allow the person to generate the e-way bill. That is known as unblocking of e-way bill. That is with respect to this. Question number 40. This is also a very good question, not yet tested so far in exam. So this question also can be asked. This complete question is related to the concept of blocking and unblocking of e-way bill. Now we are moving on to the questions on customs. So 40 questions I have given on GST and 10 questions I have given on customs and FTP. On FTP only one question is there. So you can see this question number 41. Messrs. PCB Limited has imported printed circuit boards for sale in India from country X, which are liable for anti-dumping duty. You are provided with the following details. Country X does not sell these goods in its domestic market. However, it exports the same printed circuit boards at $200 per piece to another third country. The printed circuit board is sold in the domestic industry at 175 per piece. Okay. Now, what is that we need to compute? We need to compute the anti-dumping duty that is payable. How to compute the anti-dumping duty? As per section 9A of Customs Tariff Act, anti-dumping duty shall be dumping margin or injury margin, whichever is lower. What is dumping margin? Who is doing dumping? The foreign exporter is doing the dumping. So the price at which they are selling to India and minus what is the price at which they are selling in their country. So basically they are selling in their country at a higher price, but they are dumping to India at a lower price. That's where the dumping will come into picture. So normal selling price in their country minus export price to India. When there is no normal selling price in their country, then we need to take the price at which they export to a third country, that will be taken as their normal selling price. Suppose if that is also not available, we need to take cost of production plus usual profit margin of that exporter as the normal selling price minus export price, that will be taken as the dumping margin. So in this case, if you see, what is the price at which they are selling in their domestic market? Country X does not sell these goods in the domestic market, okay. However, it exports the same printed circuit boards at 200 per piece to another third country. So now we can take this. We can take this as the normal selling price. So the normal selling price will be 200 minus what is the price at which they are exporting to India? The printed circuit board is sold in India at 175. No. PCB Limited has imported the printed circuit board at 100 rupees per piece, means this is the price at which they are exporting. So therefore the dumping margin will be 200 minus 100, that will be $100 per piece. Then injury margin, who is getting injured? The Indian importer is getting injured. To what extent they are getting injured? They will be importing goods at a price so less than the domestic industry is getting injured, that is India. So they are importing, that is the person who is importing the goods is importing at a price less than the normal selling price in India. So therefore we need to say take the normal selling price in India. What is the domestic selling price of the domestic industry in India of this product? 175 minus what is the landed value? So they are importing for 100, but they need to pay some charges, na customs duty, etc. and all. So what is the landed value? Landed value is 125. How to compute the landed value? Assessable value plus basic customs duty plus social welfare surcharge is known as landed value. So therefore 175 minus 125 will be taken as the injury margin. So $50 per piece. So $100 or $50, whichever is lower, which will be taken? $50 will be taken. And how many units that we have? So we are having 1000 pieces. So $50 into 1000 pieces. So that will be, 50,000 into what is the rate 75 per dollar into 75, so 37,50,000 will be taken as the anti-dumping duty in this case. Very simple. So this is a question which was already tested in November 2020 exam. So this is a question asked for 5 marks November 20 exam. Same question may be asked, but slight change they may do. So here what they will do, instead of giving this, the price at which they are exporting to a third country, they will give the usual profit margin plus cost of production data. So cost of production plus usual profit margin should be taken, and that will be taken as the value, like that will be taken as the normal selling price minus export price. That's how we need to arrive at the dumping margin. Okay, then next one, question number 42. This question number 42 is related to valuation under customs. Arihant Industries has imported a machine from UK from the following particulars furnished by it arrive at the assessable value for the purpose of customs duty payable. Price of the machine 10,000 UK pounds, freight air 3,000 UK pounds, engineering and design charges paid to a firm in UK 500 UK pounds. So what is that we need to determine? We need to determine the value. So this is actually MTP May 23 question for 5 marks. So first we need to take the price of the machine. So this price of the machine will be taken, and we need to make some adjustments to arrive at the revised FOB. So this price of the machine will be taken as the FOB price. Now freight will not come now, it will come after arriving at the revised FOB. Engineering and design charges paid to a firm in UK. So this is before import. So definitely it should be included in the value. And then license fee relating to imported goods payable by the buyer as a condition of sale. Even though it is payable after import, but it is payable as a condition of the sale. So definitely it should be included in the value. 20% of price of the machine. So that will be 2,000 UK pounds. 2,000 UK pounds will be taken. Materials and components supplied in UK by the buyer free of cost valued at 20,000 rupees. So whether this materials and components should be taken into the value, definitely it should be taken, but be careful. So far whatever numbers that we have got is in pounds. So this is in rupees. So this should also be added, but after converting everything into rupees. Buying commission. No, buying commission will not come into the value. Only selling commission. Selling commission paid by importer on behalf of exporter. So that's an indirect consideration to the exporter, that will only come. So buying commission will not be included in the value. So now once you make these adjustments, you will get the revised FOB. So what is that we need to do? First take 10,000 pounds plus 500 pounds plus 2,000 pounds. So that will be 12,500. And what is the exchange rate to be taken? So interbank exchange rate 98 rupees per UK pound, that will not be taken. CBIC rate will be taken, that is 100 rupees per UK pound. So into 100, so that is 12,50,000. Now to this 12,50,000 you add 6,000 rupees. So 12,56,000. Now importer paid 5,000 rupees towards demurrage charges for delay in clearing the machine from the airport. So usually we will not take demurrage charges, but ship demurrage charges, if there is anything, that will be added in the freight, that too in freight, not in FOB. That will always, after FOB we will be adding that. Ship demurrage charges is different from demurrage charges. Ship demurrage charges is payable by the person in charge of the vessel if they are anchoring the vessel at a different location, whereas demurrage charges is payable by the importer after import of the goods if the goods are not cleared within the permissible time limit. Okay, so demurrage charges is after import, it will never be coming into the value. So don't take this demurrage charges. So 12,56,000 will be taken. Okay, and this 12,56,000 will be taken, 1 second, sorry, not insurance, 20,000. So 6,000 should not be added, 20,000 should be added. So I missed that. So 20,000 should be added. So therefore 12,50,000 plus 20,000, that will be 12,70,000. So 12,70,000 will be taken as the revised FOB. To this revised FOB you need to add freight and insurance. What is the freight? 3,000 pounds. But freight needs to be compared with 20% of FOB. So what is the revised FOB? 12,70,000 is the revised FOB. Now freight actual how much? 3,000 into 100. So that will be 3 lakhs, or 20% of FOB, that is 12,70,000 into 20%, that will be 2,54,000. So 2,54,000 only will be taken. Insurance actual ascertainable, we will be taking actual. So air freight should be always taken as actuals or 20% of FOB, whichever is lower. So now we will be getting the assessable value, that is 15,30,000, which is nothing but the CIF value. So this is how you need to arrive, and also we need to write the notes. as to whether these expenses will be included or not included in the value, etc. And this is a usual routine question. Every attempt they will be asking one question on valuation under customs. Then the next question you can see, question number 43. So in this question is related to rule 7, that is valuation rules 2007. Whenever we are unable to determine the transaction value in case of import, the value will be determined in terms of rules. In that we have computed value method. So this question is based on that. Mr. X, this is one old exam question, November 2019 question. Thereafter they have not asked this, so it's a very good question that can be repeated. Mr. X imported certain goods from a related person, Mr. Paul of US, and the transaction value has been rejected. Rule 4 and 5 of the import valuation rules are found inapplicable as no similar identical goods are being imported into India. Mr. X furnishes cost related data of imports and requests customs authorities to determine value accordingly as per rule 8. The relevant data are cost of materials incurred by Mr. Paul, $2,000. So as per rule 8, computed value method, what we need to do? We need to take all the cost up to the port of importation, and that will be taken as the computed value method. Okay. Now if you see here, cost of materials, yes, it will be taken. Fabrication charges, is it before import or after import? Before import, so it will be included. Other chargeable expenses incurred by Paul, $400, yes. Other indirect costs incurred by Paul, yes. This is all before import. Then freight from Paul's factory to US port, $250, yes. Loading charges at US port, $100, yes. Now this is the cost data. All this is the cost incurred. Thereafter we have net profit margin. See, only when you add for the cost the profit margin, we get the FOB. After we get the FOB, we need to add the freight and insurance. So now what is the cost, total cost so far? 2000 plus 1000 plus 400 plus 250 plus 250 plus 100, that is $4,000 is the cost. And what is given here? Normal net profit margin of Mr. Paul is 20% of FOB. So what is the FOB value? $4,000. So no, 4,000 is cost. If you add the profit, then you will get the FOB. So they are giving 20% of sale price as the profit. But what we need is actually, cost, on cost. If on sale it is 20%, on cost it will be how much? 25%. 20% profit on sales. So therefore 20 divided by 100. Okay, then on cost it is how much? 20 divided by 80. 20 divided by 80 is what? 25%. So therefore 20% of sale price is 25% of cost. So that will come to $1,000. So what will be taken as the FOB? $1,000 will be taken as the FOB, like $5,000 will be taken as the FOB. Now this particular FOB, so we need to calculate the freight and insurance. So then you will get the CIF value. So what is the freight? It is air freight. When it is air freight, we have a point which says that we need to compare it with 20% of FOB. So 20% of FOB or actual, whichever is lower. What is the actual? 1,500. What is 20% of FOB? 5,000. So 5,000 into 20%, 1,000. So 1,000 or 1,500, whichever is lower, 1,000. Now wait, 1,000 should not be taken directly, because in this 1,000, whenever we take 20% of FOB, that includes not only the freight from the port of export to import, from the factory gate of the exporter. So what is the freight from the factory gate of the exporter? So we need to take A, actuals. How much will be taken as actuals? Freight from factory of exporter, $250 plus loading charges in US port, $100 plus what is the freight from exporters port airport to importers airport, $1,500. This will be taken as actuals. So therefore 250 plus 100, 350 plus 1,500, $1,850 will be taken as actual. B, 20% of FOB. What is FOB here? 5,000. 5,000 into 20%. 5,000 into 20%, that will be $1,000. Whichever is lower will be taken. So which is lower? $1,000. You took but in that $1,000 already this 250 and 100 is also there. So that should be excluded. Why? Because it's already added in the FOB. So therefore, to this $1,000, we need to reduce 250 plus 100, 350. So remaining 650 should be taken. That's what I have given. So air freight 20% of FOB or actual, whichever is lower, minus already considered in FOB. What is already considered in FOB? So 350 already considered in FOB, so $650. Insurance, when actually is ascertainable, we will take actuals $50, so $5,700. If you convert into Indian rupees using the reference rate like exchange rate 65, so then what will be taken as assessable value in rupees? So that will be $5,700 into what is the exchange rate here? 65 rupees per dollar. So 65 rupees per dollar. So that will come to 5,700 into 65. So that will be 3,70,500 will be taken. So 3,70,500 rupees will be taken as the value in this case. So therefore, it's a very good question. Not only rules, but also that freight related point is tested here. Okay, and this freight point is common not only in rule 7, everywhere wherever we are doing computation, whenever we take 20% of FOB, the 20% of FOB is from the factory gate of the exporter till the port or airport of the importer. Then next question number 44. So this question came in November 22 exam. So this is related to import of goods at concessional rate of duty rules. And again, summary of examiner comments, many students did not attempt this question properly. So say this: Mr. X, a chemical manufacturer, imports a machine from Germany on 12 January. So the date of import of this machine is 12 January 2019 for 20 lakhs. Mr. X is eligible for concessional rate of customs duty on capital goods imported by him, subject to the condition that he follows the customs imported goods at concessional rate of duty rules. Now, machinery was put to use on 1st February. They imported on 12 January, but they have put to use on 1st February 2019. On 5th April 2022, Mr. X wants to clear the machine for home consumption after having used the machine for specified purpose for which it was imported. Okay. So actually, whenever we are importing the capital goods or any goods at concessional rate of duty, so then if it is sold, so then we need to pay the customs duty as if we are importing it now. Reason being, actually imported for what purpose? For a specified purpose. For that only you got the benefit. Now when you are selling it in India, so then you have to pay the customs duty. So but capital goods, we have a depreciation. Based on depreciation value we need to arrive, and on depreciated value only customs duty is payable. So now what they are asking, Mr. X requires your help in calculating the customs duty. He will be liable to pay for such clearance as per rule 7 of these rules. Concessional rate of basic customs duty is 5%. Normal rate of basic customs duty is 20%. Calculate the basic customs duty payable by Mr. X on clearance of such capital goods for home consumption on 5th April. Ignore interest calculation. Now, what is the depreciation schedule? So whenever import of capital goods at concessional rate or without payment of customs duty, and after using it for some time when it is sold, we need to arrive at the depreciated value, which is 5% for every quarter or part thereof in the first year, 4% for every quarter or part thereof in the first year, and thereafter 4, 3, 2.5, 2, like that you remember, 4, 3, 2.5 and 2. But 4% for every quarter or part thereof in the first year, 3% for every quarter or part thereof in the second and third year, and 2.5% for every quarter or part thereof in the fourth and fifth year, and thereafter it will be 2%. Now, so from when to when we need to compute this? From the date it is put to use till the time it is sold. What is the date it is put to use? 1st February 2019. So 1st February 2019 till when? 1st February 2019 to 5th April 2022. So 1st February 2019 to 5th April 2022. So we need to count the period for which it is put to use. So what is the period for which it is put to use? So number of quarters, you take calendar quarters. So 3 months, like February means Jan, Feb, March. So in 2019 is the first year. So in 2019, how many quarters? All 4 quarters, all 4 quarters. Then 2020, how many quarters? Again all 4 quarters. 2021, how many quarters? Again 4 quarters. 2022 alone, we have 2 quarters. How 2 quarters? Jan, Feb, March, and April few days are there. So 2 quarters. For every quarter or part thereof in the first year, it is 4%. So 4 4s are 16. For every quarter or part thereof in the second year and third year, it is 3%. So therefore 12% and 12%. Thereafter, for every quarter or part thereof in the fourth year, so it will be 2.5%. So therefore 5%. So now you see the total 16 plus 12 plus 12 plus 5, that is 45%. 45% will be taken as the depreciation. So what is the import value of these goods? The import value of these goods is 20 lakhs. The import value of these goods is 20 lakhs. So 20 lakhs minus 45%, that will be 11 lakhs will be taken as the depreciated value. Okay, 11 lakhs is taken as depreciated value. On that 11 lakhs, how much is the customs duty payable? Simple. Originally, how much customs duty we paid? Original value 20 lakhs. On that we paid 5%, that is 1 lakh. Now on this 11 lakhs, how much we need to pay? 20%. So 11 lakhs into 20% minus already what we paid is 1 lakh. So therefore 1.2 lakhs will be taken as the customs duty payable. So simple. At the time of import, how much customs duty concessional rate we paid on those capital goods, and we need to compare it with what is the depreciated value of the capital goods and how much customs duty we need to pay. That is the differential customs duty that is payable, that is 1.2 lakhs. On that 1.2 lakhs, we need to compute the interest. What is the rate of interest? At the rate of 15% per annum. From when? From the date of import. What is the date of import? 12 January 2019 till the date of payment of customs duty. Here we don't know when the customs duty is paid, but interest will be computed. What is the rate of interest? Interest under customs is always 15% per annum. Interest at the rate of 15% per annum from the date of import, till the date of payment of customs duty, till the date of payment of differential duty. Okay, till the date of payment of differential duty. So till that time we need to compute the interest. Okay, so that may be tested. So already they tested this depreciation. Now they can again ask depreciation along with interest computation on this. Then question number 45, Kankan Corporation has imported a machine from USA for 365 lakhs on payment of appropriate customs duty in February. However, in July, the machine has to be sent back to the supplier for repair not amounting to manufacture from the factory of Kankan Corporation. So imported machine which is exported back. The machine was repaired and thereafter re-imported. So imported goods exported and re-imported. So we have a concession with respect to this. So whenever the goods are exported for repairs, upon re-import, we need to pay customs duty on fair value of the repairs, including the material and labor used in that, plus freight and insurance both ways. That should be taken. Fair value should be taken, not the actual value. Sometimes a machinery may be covered under warranty. We might not have paid anything at all. So therefore, we need to take the fair value of the repairs plus freight and insurance both ways. Okay, that is because of the notification 45/2017, and there are certain conditions. What is that condition? The exported goods should be re-imported within a period of 3 years, and it can be extended for a further period of 2 years. And whatever we have exported, the same goods should be re-imported after repairs, and ownership should not be changed. So if these conditions are satisfied, then they will pay customs duty at the concessional value. Suppose if these conditions are not satisfied, then as if the goods are imported again, so we need to pay the customs duty on the full value. So here we don't have to pay customs duty on 365 lakhs, but we need to pay customs duty on the fair value, because when the machine is exported, so the machine is exported so in July, and thereafter it is imported in November next year, so within the time limit. The supplier has agreed to provide discount of 60% of fair value of repairs, resulting in Kankan Corporation paying 12,000. So 12,000 is after 60% discount. Then what is its original value? So 12,000 is actually 40%. Then how much is the fair value? 12,000 divided by 0.4. So 30,000 will be taken as the fair value of repairs. $30,000 will be taken as the fair value of repairs in this case, plus freight and insurance both ways. So what is the freight and insurance? And this 12,000 is what? Dollars. Now exchange rate you need to take. What is the relevant exchange rate for determining, for the purpose of import? So it is date of presentation of bill of entry only. So arrival of the aircraft is not relevant for exchange rate, that is only for the purpose of rate of duty. Here on the bill of entry date, what is the exchange rate? CBIC exchange rate 62. So that should be taken. So 30,000 into 62, 18,60,000 is taken, plus freighter insurance both ways, that is 23,000 plus 93,500 plus 27,000 plus 1,06,500. So total, if you do 21,10,000 will be taken as the value for payment of customs duty at the time of re-import. Okay. Now, what is the rate of customs duty? Basic customs duty will be taken depending upon bill of entry or arrival of aircraft, whichever is later. Which is later? 26 February. So 15% should be taken. So what is that 15% means? So 21,10,000 into 15%, that is 3,16,500. On the top of the 10%, 31,650 social welfare surcharge and IGST rate. What is the IGST rate? So we have any IGST rate given in the question. Determine the total duty payable. So for your computation, assuming that concurrent corporation is not an EOU and IGST is 12%. So we need to take 12%. While computing IGST, we need to add basic customs duty and social welfare surcharge. So 21,10,000 plus 3,16,500 plus 31,650. On the top of that, we need to take IGST into, so 12%, that will be 2,94,978. So this is the total customs duty payable. Okay. And what are the three conditions? The time limit for reimportation is 3 years. It can be extended for a further period of 2 years. The exported goods and reimported goods should be same. The ownership should not have been changed. So that is a notification reference you need to give. Then, so exchange rate also. Exchange rate, what should be taken, etc. and all. So here, why restriction of 20% is not applicable in this case? So here, even though air freight is given, the 20% restriction is applicable only when we are calculating the valuation of goods at the time when it is imported for payment. So not under the concession. Under the concession, we need to take the regular way. So whatever is the actual freighter insurance that is given, that only will be taken. Then the next question, this is on interest in case of duty drawback. So say this, compute the interest payable to an exporter in the following case of delayed payment of duty drawback. As per Customs Act 1962, the claim was made on 30th June 2020 for 80,000 and was settled on 15 September 2020. So whenever there is like a delay in giving duty drawback. Duty drawback is a refund which will be available to a person who is exporting the goods. Whenever he is importing some goods used in export, upon export he will be getting the duty drawback. So that duty drawback should be paid within 1 month from the date we make the duty drawback claim. So what is the date on which we made the duty drawback claim? 30th June. Means by 30th July it should be paid. But when is it paid? 15 September. So how many days delay? So 1 month you add. 1 month you add means 30th June. 1 month is what? 30th July. So 1 day in July, and August 31 days, and September 15 days. So that is 47 days. Interest will be computed at what rate? This is the interest which is payable by the government or to the government. It is interest payable by the government, it will be 6%. Whenever interest is payable to government, then the interest rate will be 15%. So here it is interest payable by government, so 6%. So therefore, how much is the duty drawback? Duty drawback is 80,000. So 80,000 into 6% into 47 divided by 365 will be taken. So that is 618 rupees will be the answer for this. Okay. Why are we not taking the leap year calculation 366? Only in the numerator February month is there, then only in the denominator 366 should come. In the numerator we don't have February, it is June, September and all. So therefore denominator it will be 365 only. Then next, number 2, compute the interest payable by the exporter under the Customs Act 1962 in case of recovery of 10,000 paid erroneously on 3rd July 2020. Demand for recovery was issued on 5th September 2020 and the exporter paid back the amount on 3rd November 2020. So in this case, what we need to do, first we need to calculate the interest that is payable to the government. So whenever a person is getting the duty drawback erroneously, so he need to pay back that duty drawback amount along with interest. Interest will be computed from the date he gets the duty drawback till the date he pays the duty drawback amount. What is the date on which he got the duty drawback? 3rd July he got the duty drawback, and demand for recovery was issued on 5th September and exporter paid back the amount on 3rd November 2020. So we need to count from when? From the date he got the duty drawback till the time. So the duty drawback is recovered from him. So but don't count 3rd July, count from 4th July. So 31 minus 3, so that will be 28 days in July and 31 days in August, and September it will be 30 days, October 31 days, November 3 days, so 123 days. So we need to count from 4th July. So 3rd July is only the duty drawback date, na? So 4th July till the date the duty drawback is paid, that is till 3rd November, so that will be 123 days. For this 123 days, the interest needs to be computed. So 10,000 into, what is the rate of interest? 15%. This is interest payable to government, na? So into 15% into, so 123 divided by 365, that is 505.47, that 505 rupees should be taken as the interest payable. This is on account of duty drawback, interest payable and interest receivable. Then next question you can see, this is on baggage. I don't know, this attempt, I feel like you may not get questions on baggage separately, because lot of times they have repeated this. Maybe in MCQs we may be getting. So this question number 47 was given in CMA final exam. It's a very good question because it involves certain specified goods on which 110% of baggage duty will be applicable. What are the 3 products for which 110% is applicable? Number 1, firearms. Number 2, cartridges of firearms exceeding 50. Then number 3, cigars exceeding 100. Then cigarettes exceeding 100, cigars exceeding 25, and tobacco exceeding 125 grams. In these 3 cases, the applicable rate of baggage duty is 110%. So that we need to check here. And some cases, general free allowance is not available. So this is a very good question combining everything. So that's why I have given this. After staying abroad for 16 months, Mr. Vasudev shifted his residence to India from Sydney to Kolkata on 12/10/2021. At the time of landing at Kolkata, he brought the following items. So gold bars 30 grams valued at 90,000. So gold bars is not eligible for GFA. So we need to prepare this into a table wherein first you need to check, is it eligible for general free allowance? So he is an Indian citizen. He is coming from other than Nepal, Bhutan, Myanmar. So what will be the general free allowance? 50,000 general free allowance is available. Okay. So therefore, first you need to divide that. Eligible for general free allowance, not eligible for general free allowance, and not eligible for general free allowance again divide into 2, dutiable at 110% or dutiable at 38.5%. So what are the 3 things dutiable at 110% already we have seen. What are the items which are not eligible for general free allowance? These 3. What are these 3? Firearms, cartridges of firearms exceeding 50, cigarettes exceeding 100, cigars exceeding 25, and tobacco exceeding 125 grams. Then alcoholic liquor in excess of 2 liters. Then LED, LCD, plasma TV, and gold or silver in any form other than ornaments. These are the 6 goods for which general free allowance is not available. So in this case, if you see, gold bars 30 grams, not eligible for GFA, but duty will be 38.5% only. Then alcoholic liquor 4 liter. 2 liter eligible for GFA, 2 liter not eligible for GFA. So divide that. So 5,000 eligible for GFA, remaining 5,000 not eligible for GFA, but rate will be 38.5%. Then 20 boxes of cigarettes, each box containing 10, means 20 into 10, 200. 100 eligible for GFA, remaining 100 not eligible for GFA. In that 100 eligible for GFA, we will put that amount, that is 2,000, and 100 not eligible for GFA, that is 2,000. At what rate? At 110%. Why 110%? Because cigarettes exceeding 100 will be dutiable at 110%. Thereafter, one notebook computer 1 lakh. So one notebook computer 1 lakh. So personal computer is exempted. So that will not be coming. Okay. That will not come. And person more than 18 years of age. So therefore that will not come. One PC meant for personal use. So that will be coming 40,000 rupees. And won't it come under personal effects? No, personal effects includes only necessities, etc. So this will not come under personal effects. So 40,000 but eligible for GFA. So under 40,000 eligible for GFA we are taking. So this 40,000 should not come. Okay. So this 40,000 should not come. And thereafter we have hand pistol. Hand pistol 83,000. So 83,000 hand pistol not eligible for GFA at 110%. Okay. So now what is the total amount eligible for GFA? 47. How much is the general preference? 47,000. So the dutiable value 0. But here not eligible for GFA 9,000, 90,000 into 38.5%. 5,000 into 38.5%. So total 95,000 into 38.5%, that is 36,575, and remaining two amounts, that is 2,000 and 83,000, that is 85,000 into 110%. So that will be 93,500. This is how we need to present the answer for this. Okay. Then next one. Question number 48. This question number 48 was given in CS exam. And even in CA exams also they have asked this similarly. So this is related to interest computation in case of warehousing. So you can see this. Vipul imported certain goods in May. An into-bond bill of entry was presented on 14th May and the goods were cleared from the port for warehousing. And 14th May was the date on which into-bond bill of entry was presented. Assessable value on that date was $1 lakh. The order permitting the deposit of goods in warehouse for 4 months was issued on 21st May. Vipul deposited the goods in the warehouse on the same day but did not clear the imported goods even after the warehousing period got over on 21st September. So even after the expiry of warehousing period, he did not clear the goods. Okay. And whenever a person has been permitted order for warehousing, if he is not clearing within the permissible warehousing period, on expiry of warehousing period, it is deemed that he has cleared the goods. So there is one Kesoram Rayan case and SBEC Sugars case by Supreme Court which says that after expiry of permissible warehousing period, it is deemed that the goods are cleared. Consequently, he need to pay customs duty on 21st September. A notice was issued under section 72 demanding duty and interest, but he actually cleared on 14th October. Compute the duty and interest payable by Vipul while removing the goods on the basis of following information. First, so what is the relevant date for determination of rate of duty in case of warehoused goods? For exchange rate, it is into bond bill of entry. For rate of duty, it is ex bond bill of entry at the time of clearance. But here there is a deemed clearance. What is a deemed clearance? 21st September. So as on 21st September, whatever is the rate, that only should be taken. Whereas exchange rate will be into bond bill of entry, that is 65.20. Actual date at the time when they cleared, even though 12% is there, that is not relevant. Now, so what is the value here? Assessable value 1 lakh into 65.2. So that is 65,20,000. Basic customs duty 10%. And we don't have IGST, only social welfare surcharge. So the customs duty payable will be 7,17,200. So 10% should be taken as the basic customs duty. Now, what is the interest payable? So there is a permissible warehousing period. What is a permissible warehousing period? So 90 days is the permissible warehousing period, and thereafter, so that is 90 days from which date? From the date on which order has been issued. So what is the date on which order has been issued? 21st May. When they are actually clearing 14th October. You count from 21st May to 14th October. How many days? So in May, 31 minus 21, 10 days in May, and June 30 days, July 31 days, August 31 days, September 30 days, October 14 days. So 146 days. In that 146 days, 90 days is the interest free period. So remaining 56 days for which we need to compute the interest. Okay. So 90 days is the interest free period from the date of order, not date of deposit, date of order till the date of 90th day. So no interest. Thereafter we need to pay. So total you count the number of days minus 90 days. For 56 days we need to compute interest on this. 7,17,200. So 7,17,200 into what is the rate of interest? In customs, always the interest rate payable to government is 15%, into 15% into 56 divided by 365, that is 16,505 will be taken as the interest payable. Then the next two questions that we have is on FTP. See my dear friends, this FTP is actually a changed area. So for November 23 exams, So the new FTP will be applicable from November 23 exam onwards. Already in my YouTube channel, I have posted the video on foreign trade policy, and many students were asking me, sir, can you post a video on revision of foreign trade policy? Whatever I have posted itself is like a crisp information. So as they can ask from any place, so that's the reason why I request you to go through that, and even I consider your suggestion. So I will make some video so as a revision of that particular FTP. Somewhere in 1 hour I'll try to revise that and I'll post that video related to that, but please go through that video. So hardly it is some 3 hours and odd only, so you can go through that video, and PDF also available in the description of that video, so you can see that. Okay, now see this, these are the two questions which are possible that may be asked so on this latest FTP amended. So question number 49, two exporters, namely Sunlight Exports Private Limited and Moonlight Exports Private Limited, have achieved the status of status holders 1-star export house in a financial year 2023 to 28. Every year both the companies have been regularly exporting goods to approved nations. To achieve such status, what would have been the minimum export performance of these two exporters? Both the companies are desirous of establishing export warehouses in accordance with the applicable guidelines. What should be their minimum export turnover to enable to establish export warehouses? First, so there is something called as status holder recognition in FTP. To get that status holder recognition, they need to achieve a export performance. So how much export performance they need to achieve? So they need to achieve, to get 1 star, $3 million, to get 2 star, $15 million, and then to get 3 star it will be $20 million, and to get 4 star it will be 200, 5 star it will be 500. So 3, 15, 20, 200, 800. So that will be taken as the export performance that they need to achieve. In this case, already they achieved the 2-star status. So two exporters have achieved the status of 1-star export house, which means what could have been their turnover? So $3 million would have been their export performance, and it will be counted for the basis of 3 years or 4 years. So 4 years, say this, export performance will be counted based on the current year and previous 3 years. So based on that, the export performance will be counted, and this status holder exporter needs to achieve the export performance of $3 million during current and previous 3 financial years. Together taken is $3 million, and this should be achieved in 2 out of 4 years in a block. So therefore in this case, that's how they will be getting, and every person 2-star and above, 2-star and above, say this, 2-star export house and above is permitted to establish export warehousing, but here it is only 1-star, so they cannot establish the export warehouses. So that is the answer for this. Then question number 15, determine the admissible refund under RODTEP scheme. So there is one scheme called as rebate of duties and taxes on exported goods. A percentage of FOB value will get as a refund, incentive. So how much is that? 2%. And goods X, FOB value declared in the shipping bill is 5 lakhs, payment realized in advance, so no issue on that 5 lakhs into that will be taken. And goods X, FOB value declared in shipping bill is 2 lakhs, payment is yet to be received. So on the 2 lakhs also we will get the incentive now, but we need to ensure that we are realizing the process within the time limit stipulated under FEMA. What is that? 9 months from the date of export. Otherwise, whatever refund that or rebate that we are getting, it will be recovered. Then supplies made to SEZ is ineligible. Supplies made to SEZ is ineligible for RODTEP scheme. And supplies made to 100% EOE also ineligible. So these two deemed exports are ineligible. Export of products liable to export duty, so 1,75,000, that is also ineligible. And then export of products subject to minimum export price, so that 4,25,000 also ineligible. So these are some ineligible cases. So only this 5 lakhs and 2 lakhs, 7 lakhs. On that 7 lakhs, 2% will be taken. So 7 lakhs into 2%, 14,000. So what are the cases where it is ineligible? So there are some ineligible supplies for the purpose of RODTEP, export of imported goods. The basic idea behind RODTEP is that there will be some local taxes that will be borne on the product to give the benefit of refund of that local taxes which are not covered under GST or customs. That's why they brought this RODTEP. Export of imported goods. When those goods are imported from one country and exported to another country, wherefrom there is a burden of local taxes, there is no burden of local taxes on that. Then exports through transshipment means exports that are originating in third country but transshipped through India. Again, on those goods also there is no local taxes. Export of goods which are subject to minimum export price. So price is fixed by the government. So then products which are restricted or prohibited under FTP, so that also will not come. Deemed exports will not come. Then supply of products manufactured by DTA to SCZ. So products manufactured in EHTP, Electronic Hardware Technology Park and Biotechnology Park, products manufactured in a warehouse under customs. So because there won't be any local taxes in that warehouse, products manufactured or exported having the benefit of notification, that is job work and re-export of goods, export for which electronic documentation has not been generated, goods which have been taken into use after manufacture. Like this, these are some ineligible categories under RODTEP scheme. So even on which if you already claimed advance authorization benefit etc., you will not get. So that is what you need to know. So these are the cases. Supply made to SEZ, we have one point. Then supply made to EOU, that is deemed exports, and minimum export duty, minimum export price, exports which are subject to export duty. So these are the cases which are ineligible. Remaining cases will get. The rate will be given in the question itself. That rate we need to apply. Okay, and you need to write here note. Suppose if the payment is yet to be received, they need to ensure that they are receiving the payment within the time stipulated under FEMA, that is 9 months. So with this, we completed mighty 50 questions revision. Okay, so these 50 questions are covering all the concepts I have given this, and so these 50 questions will give you an idea about how the questions will come in the exam. Beyond this, if you want to practice at this juncture, so please go through the remaining questions. So in the mighty 200, so already 50 questions, so remaining questions you try, so that will give you the confidence. Okay, so thank you all, thank you for supporting. Please share this video to the extent possible to the others so that they can get benefited. And even one day before the exam, as I already told you, you just keep the timelines as to whichever question you feel like you want to revise. So timelines, you comment and click on that comment one day before the exam so that you can go to the respective part of this video and you can complete this. Okay, thank you all, take care, signing off, bye.